All right.
Morning.
Good morning. How are you
Technical
today,
issue
Ashleigh?
done and dusted. Yeah, I'm good. I'm good. How are you?
I am great. So sorry, guys, for being a little bit late today. We're having some technical issues in the back end, and we're also waiting for LJ to come on. He's gonna join on his laptop, and he's setting all of that up. All right, Ashley, have you been taking any
I
trades on your?
have. I'm literally
Oh God.
just in a trade at the moment. I don't like it, but my rules say my rules are my rules, and sometimes the ones that I don't like are the ones that surprise you. So
Yeah.
I have my rules, so I have to stick to them. So I'm currently in a buy on NAS. You might all look at it and think silly, but my rules are my rules. We did take one loss this morning, so my rules dictate that I can jump in another trade, which is what I'm in now. Yesterday was a good day. We did. I can share my chart if you want.
Yeah, sure, definitely.
One
Um,
second. Let me just load it up.
So a buy on NASDAQ. Well, I don't know. I don't think it's too bad. It's definitely got some.
If it would get a little bit of push there, then yeah. But obviously, my trades are normally only in for a few minutes, so I think my average
Okay.
trade is about 7 minutes long. Which I have to
Right.
be careful with because obviously some of my funded accounts have different rules. Um, we'll see what happens on that one. I don't think it's going to do very well. Let me go to yesterday. But my rules are my rules. So we went over last week, and last week doing what we did was a 9 hour week. So it swings and roundabouts, isn't it? So let's go to yesterday. Where are we?
Are you
What day was it?
sharing a screen? I don't think you're sharing a screen.
No, not yet. I'm just loading it up, my dear.
Right. Okay. Yeah. So you're in for a very short period of time. So about 7 minutes. We can definitely see.
Correct.
Like we can probably look at and see if where
Right, I can trade, I can share.
where the market is going to be in the next 7 minutes. So that's kind of a small time frame.
Small time frame,
Yeah.
yeah. Very small. So for those that have not watched me before, I'm just very mechanical. I have a pattern, I have rules, and that's all I do. So this was yesterday. So this was the 2 hour that we got yesterday. So we have loads of rules that dictate when we can that we have to check off. But then when we get the pullback, which we got the pullback here, we can then go for 2 hour because that was the second trade of the morning. So the first trade of the morning was here, which was a buy and it was a loss. So I lost 1 hour there, but obviously I made 2 hour here, so I'm up 1 hour for the day. So no, that was good. If we went back to last week, are you in anything right now, Jonathan?
Yeah, I'm in a few trades. Yeah, I'm looking at I'm in gold, I'm in Euro USD and Euro NCD as well.
As
Okay,
well.
let me well, it's pushing up. It's actually pushing up. So maybe
I try not to look at it once I'm in. I'm in. I try not to look
oh,
at it. My stop
well,
loss
we're gonna look
on.
at this one. We're gonna look at this
Thanks.
one.
Thanks. Thanks.
The next 1 hour, it's all about
I
NAS.
don't. I don't
What
like it. I don't like it. But my rules are my rules, and like we've said
well,
before,
it's not too bad, man. Like it's not too bad. Where did you enter? Where did you enter?
I literally entered just before we came on. So I entered at. So where are we on here? What? Scroll in a bit. Let's have a look. Which candle are you on? The 1 minute.
Yeah,
So at the bottom of the sell candle there.
this one.
Yeah, for a
So
buy.
you went long here.
Yeah.
Yeah, well, so what's not to like about
Oh,
this?
so we're doing all right now. So I just
Yeah,
don't like looking at trades and we're in it. But obviously, because we've
yeah,
had a big push up, I've been watching it since 8:30. We've had quite a big push up this morning. Um, we've not really had that much of a pullback. We've only had a slight pullback. So I'm hoping that slight pullback was just enough. But I'm only going for 20 points. So let's see.
right. Yeah, no, I think this looks good. It definitely looks much better now than it did a couple of minutes ago.
Go on, you can
Um,
go on to gold and go on to something else. I don't have to watch the trade.
Yeah. Okay. So what I got a short on Euro USD. I'm holding this for I can't remember when I entered this one. When did I enter this one? I entered this one on the 10th of November. So that's
That's crazy for me.
really
That's
that
yeah. I think
one.
obviously I'm not a swing trader. I'm obviously a scalper. To be fair, for the way that I trade,
Yeah,
I don't think
definitely.
I've ever held a trade for more than like 4 or 5 hours.
Right, right. No, so I no, I like holding my trades open for I don't know. I feel calm when I'm in a trade. When I'm not in a trade, I feel like there's something missing in my life. I need to
Do
be in a
you?
position. So yeah, definitely. So when I'm not like I need to see that it's like I don't want money on my bank account. I want money in something,
Your
right? Like
account?
invested
Yeah.
in something to have it working. So when I have a trading account it's not making me money when I'm not able to allocate that capital to actually
I get
do
that.
something for me. So I like being in a position. I like seeing something happening. So with this Euro US trade, I've been in this for 3 weeks, which um, the swaps are going to become a problem unless I start doing something about this. But so that's the Euro USD trade, and not much to say about this one. We're either I'm going to get stopped out here or we're going to move down and break that level. I'm just waiting, but I'm probably just going to give it a one more week. But then we have the interest rate decision, I believe, coming up fairly soon. So that might be a catalyst for a direction to move in either direction. And I got a Euro NCD. Entered this one yesterday evening because I had about I think it was maybe 1 hour left until the daily candle was going to close, and then looking at the so I trade mostly daily, and if we look at Euro NCD here from a daily perspective, we are in a fairly clean uptrend right here, and most of the bounces has happened inside this Fibonacci
Yeah.
area. We have price comes down, has a nice gap up, and forms a good bullish candle on the daily. So I decided to go long, and I'm looking for price to come up here and take out the highs
Oh yeah,
and
no,
go
it's a lovely trade.
to
Oh, my
yeah.
trade's
Well,
just smashed through.
yeah. Well, it looks good. I have a phone call. I gotta take this. Give me just a minute, okay?
That's absolutely fine. We can all talk about my trade that's just won. So yeah.
Yeah, just give me a second.
No, that's fine. So yeah, -1 hour this morning. My rules are that I can jump in again. So we jumped in again after we basically there's 4 or 5 rules that I have to check off. I will now lock out my account. So this is linked to my personal, my Fivers funded, a Darwin, and then I have another futures funded account as well. So I'll trade one on my personal that's linked to them all, and then I'm just on the desktop on my phone trading on the other funded account that I've got. So all 4 accounts are up today, which is good. But now I'm done for the day. So 10 o'clock comes and I'm done for the day. I only trade between 7 and 10. I only do NAS. I've done everything and anything, but for the last 6 months, it's basically been NAS, and that's what's been giving me payouts. I think I had a lot of FOMO back in the day, whereas now I stick to my strategy. My strategy does well. It's very mechanical. Nick's on the line. Hi, Nick. It's very mechanical, but it works for me. I don't go into as much detail as these guys because, like we said, then I'm normally in and out of a trade in 7 minutes. You'll see how long I was in that trade for. So I was in it for quite a while. 9:35. No, 9:45 to 9:54. 9 minutes. So that was quite. There we go. So my nice 2 hour trade there. So let's go. I'll do a bit of back testing for the week to show you how it works. Obviously, anybody that did trade Friday was horrendous. So we had a little bit of meltdown in the market. So I just completely stayed away. And I think that's good. A lesson that I've learned is if I see something bad in the market, I will just walk away now. I don't have to jump in. So right now I'm locked out my accounts. I won't trade. I've switched them all off. I don't have alerts on. I'm up for the day. Whereas old me would have jumped back in and tried to get more out of my day. But I'm up 1 hour from yesterday, I'm up 1 hour from today, that's 2 hours for the week. If you think of it this way, on a, say, a 400k funded, there's 8k. You're doing okay. So you don't, it's not the R that you need, it's the capital that you need. So try and find a strategy that gives you 1 to 2 hour a week, will make you a lot more than striving for the 5, 6, 7 hour. That was a great setup. Thank you. Who else has put, what was one problem you found after learning a profitable strategy? I think just sticking to it, and trying to dive back in. So say I came out, so that I got a loss due to just 1 pip, just jumping back into it. Whereas now, if emotions are out of trading, so if I lose by 1 pip, I lose by 1 pip. My rules are my rules. And my rules over the past 2 years, when I've done the back testing, have provided solid setups. So for me, it's just, I wanted to bring to this podcast that you can not know a lot, but just find something simple and still be able to make some money. And as people who know me on this account, I don't trade on my laptop. I don't even have MT5 linked to my laptop. It's all done on my phone, and it's all done primarily when I'm walking the dog. And that's what I needed. My life's busy. My day job's busy. I'm in quite a high intensity sales job. So I needed something that would fit around it. And this works for me. Are you back, John? You back, Jonathan?
Yeah, I'm back. My son came home and he's like, I need food. I'm like, what do you mean you need food? It's like,
Have
and
you
he's
have
like,
you
the
fed
lunch.
him?
Yeah, and it's like the lunch at school is not, it's not great. I'm like, what? It's fish, and I'm like, okay, well, what are you gonna do? It's like, well, I start in 20 minutes, and I need to make food. I'm well, good luck, you know.
Well, like, yeah,
Here's
exactly.
here's
Bless.
the kitchen. Go. Yeah, so that's gonna be fun.
Go
I'm
on.
gonna have to know. I'm gonna have to see if I start smelling anything burnt, or so I need to probably save um, save myself if it comes to that. Uh, okay, yeah, all
Someone
right,
just
back
asked,
to
what are my EMAs? So the 20 and 50. We have loads of other rules that are around it. So it's not just a retest of the EMAs, it's certain ones that we only get in and get out. Who else has put? Can you explain your simple strategy in short? Sounds good model for me too. It's just very simple. I just wait for a pullback. I have directional bias. I look for which direction it is. I have 4 or 5 rules that determine my bias for the day. I'll look at that. I trade from 5 to 7 till 10. Depending on the bias, I then wait for the pullback and get in. Depending on the way the charts look, will determine whether I go for 1.5 hour or 2 hour. So this morning, our first trade, we went for a 2 hour, didn't quite win. But if we have a loss, we can go for 2 hour again. So that's exactly what happened. So very simple. I just have 4 or 5 rules that I hit. Good morning, Mohammed. But that's it. That's all you need
nice.
to do. Find something
Yeah, I like
simple.
that. Simple and easy.
Very
That.
simple. I need simple. Go on, you share
Yeah.
your screen because I'm done trading for the day now.
Oh, really? That's well. I
I'm
like
done.
that. I like the fact that
So that's how
you're
you're
done
completely
trading.
different to me. You have to be in trades all day, whereas I'm like, nope, I don't want to be in anything. I'm done.
Yeah, but I also trade like just maybe.
You'll be in a trade for days and weeks though, won't you? Whereas mine was 9 minutes
Yeah, but
though.
I trade based on a daily candle, so I'm never gonna be able to take a decision based on the current daily candle. I'm always
Yeah.
gonna take a decision based on the close
Yeah.
of the candle. So I wake up in the morning and I just go through my open positions. So the whole process that I do is either on Sunday evening or Monday morning, I do a complete market scan. So I got my list here of, I think it's 89 different markets that I go through,
Hmm.
and it takes me about 30 minutes to an hour. Basically, just go through everything, and I add alerts where areas of interest. So for Euro NCD, for example, I made I think the market was trading somewhere within this area, and I simply just had an alert down here. And then I went on to the next pair and the next pair. And then, of course, Euro NCD came down into that area, and my alert went off. and then I waited for a bullish daily candle close and entered the position. So I spend maybe an hour with market scanning, but if there's no alerts, then I'm not going to be trading. So
Okay.
throughout the week or throughout the day, I'm probably spending a couple of minutes every day on actual trading. So it's a very simple process. I think with the actual planning and the analysis and everything, it probably takes only 1 to 2 hours a week, because I'm entering this trade, and it can take maybe, let's say it's going to take 3 days for price to come up into this level, and then I'm not going to do anything unless we have a lower high. So if price moves like this, I can move my stops below that new higher low. So it might be 3 days, four
Hmm.
days, and then 5 days. So I'm not going to position, probably not this week.
A lot of
So
people couldn't hold that because they'd see a pullback and it'd scare them a little bit. But obviously, you're now used to the emotions that come with watching your trade be up, then pulling back, then pushing up.
yeah, but I'm completely opposite on the 1 minute. Like if I drop down
Mm.
to the 1 minute, but the thing with the 1 minute is you can trade this exact setup. It's just that if it's gonna take, 3 days to come up here, it's gonna take 3 minutes on the 1 minute. So
Yeah, correct.
I'm gonna have to, take many more decisions on the lower time frames. I need to be much more um, focused and calm on the lower time frames.
Mm.
And I feel like I need to think longer and take my decisions slower, So on the lower time frames, I mean the exact same structure is we can drop down to the 1 minute here, and let's remove some indicators here, and you can see that it's pretty much the wow, this chart was very ugly on the 1 minute. I think this
That's
is because it's
horrible.
on. Yeah, that's because this is on. This is the actual real. And this is on Wanda. That's weird. Okay, let's go to IC markets. Yeah, it's a bit better. So the exact same structure applies here. So we could use this. We could just say that this is the 1 minute. So price comes. Let's just say it comes into this area and then it has a rejection. So I'm gonna sell here, and then I'm gonna take profits maybe somewhere in this area. And that move happens within maybe 10 minutes. So I need to enter the trade, and then I need to monitor that trade for, let's say, 10 minutes. And then when it hits the level, I need to make a decision, or I need to manage the trade. And for me, that's when I get stressed, when things move a little bit too quickly and I don't have the time to process the
Yeah, I get that.
information. So on the daily, it's much easier for me to just say, okay, I'm entering this
Mm.
trade based on this candle,
Yeah,
and my next decision is going to be based on the next candle, which is tomorrow
tomorrow.
morning.
Yeah.
Yeah, we
How do you
have
manage
someone
it when
saying,
you're in the trade?
yeah. So I try not to. I try not to manage the trade too much, because I see
Yeah.
that my if it's one thing that I'm good at, it's identifying levels
Where you
where,
think it's going to hit. Yeah.
yeah, I mean, I can identify, like, I'm good at identifying areas where I think price will reverse.
Hmm.
So it's very obvious here on Euro NCD, where these lows, if we connect it like this, like
Oh,
the
yeah.
bounces here
Hips
in this
bounce,
trend is,
hips bounce. Yeah.
yeah, and it's very obvious. And then you have like these tops here. So whenever price forms these structures, I know that that's where I want to enter the trade. But then how do we know where price is going to go? We don't really know that, right? We know that if the behavior of this trend is going to be intact, we might assume that price is going to fluctuate like around this middle line. So we might see something like this, but price can reverse wherever. So what I try to do is I try to enter I try to enter the trade, and then I try to look at what areas do I think has the absolute highest probability of being the end, like the end station of this
Yeah.
trend. And if we go out here on the weekly, I'm looking at Euro NCD here, and what I'm thinking is price should not go uh, above this level without
Mm.
giving us a decent rejection, because
Oh yeah.
Euro NCD has not been above that level since 2009. Chances are that it's gonna trade below this level. So I'm then thinking, okay, so I want to take Euro NCD up into this region, but no higher. And then I'm simply just going to trail my stops up with every new, if price moves like this, I'm going to move my stops here and then here. Um, so the result of that is a lot of trades will be stopped out here, but then eventually I'll have a few trades that turn out to be maybe a 3 or
There.
4
Yeah.
or winner. So I'm taking it very slow with that. We have someone saying gold is on fire.
I've not looked at
I
those. Do
I'm
you want to
not
have a look
sure
at a quick
about
look at those?
fire. Maybe it's on fire as is it's moving down. Like it's not. But yeah, I'm in this gold position right now, and
How long have you been in that for?
this one. Let's see, when did I open this position? This position I opened on the 25th. So that is
Crazy. Crazy to me.
1 week. Yeah.
It's crazy how deep. Whereas I'd get there'd be a lot of emotion to me if I was in a trade that long, whereas I can cut my emotion off and put money in it for 5 or 10 minutes. I'm very. I think somebody asked a question up above. How does time frames affect your trading psychology? It's a lot better for me. I only have 3 or 4 rules. There's no bias at all. It's exactly if it sets up, I'm in, or if it doesn't, I'm out, and that's all that I stick to. So the small time frame for me is very good, because I think with the higher time frame, there's a bit more bias thrown in there, whereas I don't look above the 5 minutes at all. So for me, it helps. And I've gone from trading, looking at the daily, to the 4 hours, whereas now the 1 and 5 completely helps. Who's broken hold his position until unless the next gone the bottom comment? Have you seen it? The new one?
No. Which one?
Trader D official, the latest one.
This
Broken
one?
hold. Yeah, I'm
Yeah.
just trying to read it. Is that about gold? Hold his position until unless the next all time high don't come. That's too crazy, bro. From where do you bought that much holding capacity? Lend me some.
Well, I think also the way I analyze the market, and I think I'm not going to say I have a different understanding, not at all,
You
but
do. No,
I
I'll say that you do. So I don't understand the market. I see a pattern and trade the pattern. So I don't look into how the world affects what's happening on that chart. Whereas I think you have a very good fundamental knowledge. Whereas I don't, but I want people to realize that you don't have to. You can trade like Jonathan and be very, very successful in it and understand on a bigger picture. Whereas I'm very in and out, small pattern. I don't know how long that will last for. I'm trying to build my knowledge up, but I just want to show people that you can start somewhere. You don't have to be at Jonathan's level to start. You can find something and then build your knowledge up like I'm doing. But yeah, Jonathan, you definitely do have a better understanding. So thank you for trying to be nice.
well, I would say, when it comes to technicals, I do have a great understanding
Yeah, you
of the
do.
markets. From fundamental perspective, it's more of a hobby at this point, just trying to understand where the markets move. But I think why I can hold a position for a long time is because I feel like I'm in tune with in tune with um, the actual direction of the market. So I'm
Yeah,
thinking,
you are.
what is the what's the underlying trend in gold right now. So that to me is visible on the daily and the weekly. Some people, they go into the daily charts, I mean they go into the intraday price action, maybe the 1 hour and the 15 minute, and they try to understand where is gold going to move based on what we're seeing on the 15 minute and the 1 hour. But everything that's happening on an intraday basis is always going to be dictated, at least in my opinion, with what's happening on the daily and the weekly. And if you look at gold here on the weekly, I mean, to me, this is a market that I am not ready to short. So any shorts on gold is completely invalidated, because this to me is a bullish market, and then
Oh,
this is a bearish
100%.
market,
Yeah, correct. Yeah.
uh, and I'm also, and so I'm looking at the weekly, and then I'm looking at the daily. So what's the structure of the weekly? What's the structure of the daily? And then I don't really go any lower than that, because I want to see what is the market doing. What did the market do yesterday? So that candle right there. Because what did the market do yesterday? Well, the market yesterday formed an indecision candle, a doji candle at the top. So it's telling me that yes, we have this. Um, So I've removed all the drawings just to make it a little bit simpler
A
to
little bit
see. But this
easier.
is
Yeah.
symmetrical triangle. And you have this symmetrical triangle breakout, price gets above this high, but still hits resistance. There's indecision in the market, just like there was indecision in this market. And this tells us the whole trading day and the whole session of yesterday. I'm not going to be able to get the same information from the 15 minute, because if
No.
you look at the 15 minute and I look at, let's say we can isolate this candle right here, which is, I believe, what is that? Is that a shooting star? I don't care. I don't care. Is it a shooting star? Let me know in the comments. Is that a shooting
There's so
star?
many names. It is, isn't it? I'm sure it is.
I think it's a shooting star, or maybe it's some type of graveyard doji, whatever. Now, this tells us that during this 15-minute candle,
Google says it's a shooting star.
yeah, so at the start of the session, we had buyers stepping in, pushing price higher. And then closer to the end of the session, we had sellers stepping in and
Yeah.
taking it down and closing near the open, which tells us that the psychology of the market was initially bullish, but for some reason turned bearish closer to the end of the session. But this is not a daily candle. This is a 15-minute candle, which tells us that that's the sentiment for the last 15 minutes. In my opinion, that does not mean anything. Like, it doesn't mean anything what the sentiment of the market has been for the last 15 minutes. But when you go to the daily and you
Daily, you can
see,
see the direction. Yeah.
yeah, on the daily you see the true sentiment of the market. It's and if you have a lot of institutions, a lot of traders that are trading on a daily basis, and they're active traders, they're going to be trading maybe at some point during all of these periods in the daily candle. But you don't know when they're going to be trading in a 50-minute candle. Are they on lunch? Are they trading the Asian session, the New York session? Where are the big players that are deciding where the market is going? Well, you don't know in which 15-minute candle they are, but you
No.
know that they're going to be somewhere within this daily candle. So everyone that's important in the market during that day is visible in price action during this daily candle. So I believe for that reason that anything below the daily is just noise. It's intraday noise. It's
Yeah.
price action that does not give you any clue of the overall sentiment. With that said, you can, of course, drop down to the 1 minute and just trade strictly technical and systematic, and say that, okay, you have a bearish engulfing candle on the 1 minute that
Yeah.
persistent fell, and then you see statistically you're profitable doing that. That's great.
Yeah. Well,
Um,
it can happen. Like I go against the daily bias on a daily basis anyway. But obviously, because I'm in a trend, because I'm in the 1 minute trend for a few minutes, it doesn't matter that I'm going against the daily trend. Whereas now I can look at the daily and know that it'll still work for me for the length of time that I'm in a trade. So I know what I'm looking for when I look at the daily or the hourly or the 4 hourly. I just know right now my mechanical setup works on the 1 minute and 5 minutes around my life. It just means that I'm out of trading by this time. I can actually get on with my day job that I should be doing right now. So I hope no one from work sees this.
I love it. Yeah. It's pretty cool that you're coming on here and showing you the process and the fact that you do have a day job, you do work full time in
I just
sales.
want people to realize that you don't have to know everything, and it doesn't have
Yeah,
to be the be all and end all. Like, I'm in a fortunate position that I have a good day job, so I don't have to rely on trading money on a daily. I think I'd trade a lot differently if I was relying on the money. So I've taken a longer time to get my head mentally correct in trading. So now there's no emotions to it. I know what I'm doing. I do it all off my phone. You've probably all seen me walking the dog when I trade and post it on Instagram. Oh, LJ's back
yeah.
on.
Oh yeah, we
Um,
got LJ in the background as well. I have a
he's
quick,
trying to come
we
on.
have a question here from the comments as well. As you hold for a
Oh, here
long
we
period
go.
of time, how much percentage do you risk on a trade, and what's your minimum risk to reward? So I try not to look at trades that are below 2 in risk to reward. Sometimes I can take trades that are 1.5. Very, very rarely do I go into the negative risk to reward ratio, but that's only that's only something I did when I was day trading or trading lower time frames. Something I'm not doing today. Reason for that is because I don't really have the time. I also have, I could say, a day job, but my day job is working in the trading industry. But there's a lot of things that I do as well. Content creation and doing these live streams and managing everything. So there's a lot of time goes into that, which also is one of the reasons why I'm a swing trader, because it fits my
Yeah.
personality and
Yeah,
lifestyle better.
you've just got to make it so it fits your life. I
Yeah,
was obviously I've been trying to trade other strategies, but the alerts go off throughout the day, and I was missing them due to work or due to driving, etc. So I've just had to narrow it down with just sticking to NAS because I know I can hit it every day. Whereas the other trades, I was hitting the losses and missing the wins. So overall, it wasn't great for me. So you just have to find something that fits around your life. It can't dictate your life at this point.
yeah. So I'm looking. So when it comes to the risk per trade, I am currently across different prop firms. I'm currently funded with $200,000, and on a so I can take an example, right? On a 100K on a 100K account, on an evaluation account, I'm risking 1%. On my personal account, I'm risking 1% per trade. On another 50K evaluation account, I'm risking 2% per trade. I have a 100K funded account where I'm risking 0.12% per trade. Between 0.12 and 0.25. What I do is max risk per trade is 0.25, so a quarter of a percent, but I can divide that up into two 0.12 um, uh, positions. And then on my 100K bootcamp valuation account, I'm risking 2% per trade. I have and this is based on the max drawdown and the available drawdown on the system. And then I have a hypergrowth funded account where I'm risking 0.25% per trade, because that
Okay.
is the funded account that I care most about. That's my 80K hypergrowth account with fibers that I've scaled. So I don't want to lose that one. So I'm risking 0.25%. And the max loss on that account, I believe, is 6%. Yes, that's 6%. So I believe that my max drawdown for the current system that I'm trading is 15R. So if I take 0.25 times
You're still
15, it
in it,
means
yeah.
that so it means if I have my max drawdown, I'll lose 3.75% of the account.
Yeah.
Now, if we double that to, let's say, 30, so if I have a 30 a 30 R drawdown, which is a lot, I'm going to lose the accounts. I think it's around 20 or 25 max drawdown where I lose the account, which I'm happy with. That's within my limit. So it all depends on what account I'm trading. So first of
Yeah.
all, you need to know what system you're trading, and then you need to know the max drawdown of that system. I know that my max drawdown of my system is around 15, which means I can have a
Mhm.
drawdown period where I lose 15% if I risk 1% per trade. And then you have to just figure out what's your max risk per trade to be able to survive that max
Correct.
drawdown with the account you have.
Yeah.
Um,
A lot of people don't see it that way though, do they? They'll just carry on risking the 1% or the 0.5% and don't know what
Yeah.
their max loss is. So I know how many are my max is. So I know when I get to a certain percent on my funded, I'll drop my risk. So I currently trade between 0.5% and 1%, depending on what account I'm trading on. So they're on a copy and they all do different things. My personal's obviously a bit more riskier. But I know if I went into drawdown that I would be halving or quartering my risk.
Yeah, I sometimes with my personal account, I can risk quite a lot. I
Yeah, it's a
remember,
bit different on your personal, isn't it?
yeah, I remember a couple of months ago, I risked like 10% on a S&P 500 long, but it's like that trade was like once in a lifetime, you know, that April dump, where it's like, okay, so the market is completely, just completely dumping because of that Trump terrorist and everything. But so I went in with 10% and then quickly closed that one for like a 30% gain on the account. But that's,
Amazing.
you know, trades like that.
Happen once in a lifetime, yeah.
Well, not maybe once a year, you know,
But
maybe
yeah, they
once a
don't
year, something
happen
like that.
often.
And then when that happens, you have to actually, you know, go in with size and actually
But
take that
that's
risk,
that's
which
what
is
your personal is good for. Obviously, your funded's there to capitalise for your well. That's the way I see it, it's capitalised for your personal. Obviously, you're
yeah.
not going to be taking 10-20% out of your funded. You're going to lock in your
Right.
3-4% and try and pull it out and flip it over to your personal.
We get another question here. Do you change your strategy as the market is dynamic and change on daily basis? Do you bring or change your strategy? So I trade, the way I trade on the daily is discretionary. I do have some rules, but it's I do have rules, but it's fairly rule based, but it's discretionary. So I kind of, and I trade mainly trend following, but also reversals or mean reversion. So we can go to, for example, we can go to USD CHF, get a very clear range on USD CHF. So we've been testing this support since this summer with very good wicks here on the daily. So I have alerts, not on this chart, but I think it's on IC markets. I have alerts around this area. So whenever USD CHF comes into this market, I'm going to be a buyer, and I'm simply just going to be buying here with stops below that wick, and then I'm going to be taking my profits around the range EQ for a 2R. Very, very simple. Very, very simple. I know that this range has been in play for quite some time. Maybe it's going to break, but if I do have, you know, a market comes down and then a bullish candle or a wick like we saw right here, I think it's a fairly high possibility of at least hitting the range EQ, because I do think if the market is going to go below this level, it's probably going to put in a lower high somewhere around the range EQ before breaking down. So for me, it's all about understanding. I trade based on the things I learned from the Dow theory, which is basically markets move from accumulation, uptrend, distribution, downtrend, and then back into accumulation. And I try to identify in what stage is the current market. Are we in accumulation? Then I want to be looking for longs. Are we in distribution? I want to be looking at shorts. Are we in a downtrend, shorts? Are we in an uptrend? Obviously longs. Here I can utilize mean reversion trading strategies within the ranges, and here we have trend following strategies. Um, I'm mostly looking for long trades because I find it easier to find long setups. So my best trades are when the market
There.
is in an accumulation phase and then you break above a long-term accumulation. So I want to go long here, and then I want to hold that trade until we enter distribution. And I have a great example of that actually. We can go to Euro USD, and I will show you an example of that. So here we have a accumulation range for Euro USD.
And broke
Euro
out.
USD breaks above this right here. I missed this trade. Unfortunately, it looked to enter this trade for months and months, and it ended up, rallying over 1,400 pips to the upside. But I missed that whole move, unfortunately. But the way I would have traded this is enter on the close of that daily candle, stops here, and then I would simply just trail my stop up with every major swing low in the daily. So we would have first that one, then that one, probably this one, and then this one and that one, and I would be stopped out here. So this could potentially have been for me a like a almost 1,000 pip move, and I missed that one unfortunately. But that would probably have been the trade that made my whole year, because if you're able to get in on a 1,000 pip move and you're seeing that it has the potential of moving 1,000 pip, to be honest, I would probably have closed the trade here.
I was going to say
But
it would have been a bit low, yeah.
yeah, I would probably have closed the trade here at that resistance, and
So
I did not really
what
have.
hour would that have been for you?
Sorry.
What hour would that have been for you? So what's your stop loss there?
So the difficult thing with this trade is the risk to reward is not good enough for a big move like this. It's only 2R for a 5% move on Euro USD.
Yeah, it's
So
crazy.
the reason why I did not take this trade was because I wanted to get in on this
There.
trade.
Yeah.
That would have been a 4.5 or 5R trade. Now that is very much worth it to me. And then you could imagine that if you go in with, if you're able to scale this trade up as price goes on, because what you could do is if you enter here with, let's say 1% risk, and then price moves up, creates that low, what you can do is you can now look for another setup. When you break above that one, you take all the risk that you've removed here, move stop loss up here in the profit, but instead of actually securing the trade, you take all of that risk that you've taken back and you add it to that one. So the risk on this trade will now be much higher, but with more confirmation. And then as price moves up, you'll remove some risk and then you add that back. So you'll always keep the same amount of risk on the trade to the upside, and that way you'll scale the trade so that a 1% trade might become a 5% trade.
Yeah,
It's very
exactly.
risky to do so, but you can get some really, really high big winners. So in a year, in a year, I need two trades like that, and I scale the account.
Yeah, exactly.
And my goal, in a year, on a yearly basis, is to make uh, around 5% a year, somewhere between preferably 10%, but long term, I'd like to stay around 5% on a yearly basis, because I know that when I have enough capital, 5% on a monthly, I mean on a 5% on, not a yearly, what am I talking about? So my goal would be 1 to 5% on a monthly basis, not on a
I was going
yearly
to say,
basis.
not in a yearly.
Yeah, but if
LJ's
I'm
having
able to
technical
make
troubles, whoever's just asked that.
like 10 to 5%
Here he
long term,
is.
yearly. Oh, looking good, LJ.
You
That's a
look
Yeah,
very
I know.
green.
big
Look,
camera
I've
you have.
tried. I don't know why I'm green. I've turned into the Hulk.
You've
It's
had a
so
lot of
dark.
Monster, haven't you?
Like I've
You've drank a
literally
lot
got a
of
light
Monster.
here, and for some reason this camera is so terrible. I don't know if I have to. I tried playing around with settings. It just won't change. I
It
don't
looks
know.
like a
It
very
just
Maybe the
old
stays
school
camera.
dark,
cam.
and I'm green. It
You
was
are
working just.
green.
It was working just fine before when we were up there, right? When we.
You are green.
I don't know what's going on. I'm Bruce Banner today, so.
Right, I'll let LJ jump in and I'm going to jump off and actually do some day job work. So thank you,
All right,
everyone.
Ashley, thank you for joining today.
I will see you next week.
Yep, that's right.
See you
Thank
See you,
later.
you.
Ashleigh. See you.
Take care.
Bye.
Thank you.
Bye.
Cheers. All right.
All right, let's see. We're gonna have Pedro coming on here soon, I think, as well.
So
So
scuffed.
how's
Yeah, I'm here, Akram. I'm
everything's
here.
everything's working?
I think so. You can hear me fine, right?
Yeah, I can
Yeah.
hear. Yeah, all good.
Yeah. Okay. Cool.
All good.
Yeah, it's sort of working. It's going to be scuffed, but we'll go with it. I disabled like pretty much everything. I don't know. It's kind of functioning.
All right. We have a question here. Do you use same basic strategy for trading any market, or do your strategies vary based on trade the market? So this is my this is my main trading approach for all markets, but I think it's important to note that whenever I scan a market, I look at the behavior of the market. So the way I scan the markets, it's very visual for me. So EUR/USD, I know this market because I've been looking at it, every day for many years. I know that EUR/USD was an accumulation here, or potential accumulation, and then it was confirmed. We have potential accumulation distribution here. We have the uptrend here. So I know what market we have, like what market structure we have been in and what structure we are in right now. But then I can go to a market that I usually don't look at too much. We can look at GBP CHF, for example. And when I'm going to be analyzing this market, let's say this is the first time I'm looking at GBP CHF for maybe 2-3 weeks or something like that. I go out to the weekly and I just look at it and I try to get a feeling for what's the behavior of this market, what's the overall trend on this market, and you can very quickly see that the Swiss franc is strong. The pound versus Swiss franc is incredibly weak, and it seems like it's just an ever-ending story of weakness here. It just keeps going down. Okay, so I know that. Okay, so what's the behavior of this market? Well, it has a lot of down force, although the down force is somewhat weakening. It's kind of like calming down a little bit. It's actually not creating new lows to new lows to new lows. It's actually kind of like hovering around the same low. So we go into the daily. We see on the daily same thing here, very bearish, but and then I look at this on the daily and I see have had a trading range for GBP CHF from September 2022 till around October this year. We've had a very clearly defined trading range. So if I was looking at this market here, I would be thinking, okay, sell the highs, long the lows, perhaps trade around the range EQ, a break and retest type of strategy around the range EQ. But now we're seeing something different, right? We're seeing GBP CHF breaking below what I think is a fairly important support area here. And now I can zoom in and we can look at the behavior of the current move, if you will, or I'm looking at this right here. So and it's kind of broken this trend. I like to connect the highs, and I don't use it to get a visual confirmation of the move. I'm just going to be connecting the lows and the highs with this drawing tool right here, just to get a sense of almost like a Bollinger Bands. It's like you're creating a channel, and then you're just printing a middle line right here. It's creating a dynamic channel around price. And then you can easily see that, yeah, something is changing. There's something different about this move. I believe that there's a change in the characteristics of this move. So the question is, are we hitting resistance or are we reclaiming a level? Now, if we break above that high right here, I would view this as we're actually reclaiming past range lows. So again, we can go out to the weekly, and we are then going to look at this and say, well, if we're reclaiming this low, we could perhaps expect GBP CHF to push a little bit higher, maybe at least up to that level. And then we go back into the daily, and we have a beautiful invalidation level right here because that's a higher low. So if price breaks out like this, say we enter on the breakout, stop below that one, and then, maybe see a move up here. So it's not about it's not about having a specific system. It's more about, okay, I need to adjust to whatever market I'm looking at, because GBP CHF is completely different beast than compared to your USD. It's two completely different markets, and they do not move in the same way. Liquidity is very, very different as well. So, and it's the different players. You have different traders trading these markets as well. So it's I think it's not about, I'm adjusting to the market. So with that said, we can go and look at uh, what is this? Dow is this what is it? US 30.
Yeah, the
Dow Dow. Thank you.
Dow Jones.
Dow Jones. That's the one.
Your
So
DJ over here.
yeah.
DJ.
So we look at the behavior of this market. This is kind of like looking at GBP CHF, but it's a bull trend, And we'll look at the behavior of this market, and I'm like, okay, so how do we trade this market? Well, obviously, I'm not going to short this market. So I look at the weekly. I'm like, okay, I'm not going to short this market. I look at the daily. Do we have any local trends here? Yeah, we do. So I kind of like try to visually connect. This is not something I do, but I do this visually, right? So without adding the actual drawings, this is what I do in my mind. I look at these lows and I think, okay, so what's the overall trajectory of this market? Do we have a change? Yeah, we do have a change. We have, just like we had a change here with that one, we do have a change here. We have a change here and we have one here, because we're now hitting resistance here. We're not creating a higher high. We created a higher high here, all the way up here is higher highs. Every swing point is either a local high or a higher high. This is the first swing point that is a lower high ever since the April dump, which tells us that Dow Jones is now giving us potential signs that the secondary trend, we're looking at this as the primary trend. Maybe we'll get a secondary downtrend before continuation to the upside. So even though I'm looking for longs, I am not going to long at resistance and a print of a lower high. But I might go long here, right? Because that's support. Will I go long below support? Probably not. Not likely. So it's all about when you're trading discretionary, you have to understand the market. If you don't understand the market, you can't trade that market. Pedro.
Yeah, or market structure.
Pedro. Welcome. Hello.
Good morning.
Pedro.
I was listening to your explanation on the behind the scenes. Good morning, everyone. How is everyone doing? Happy December already.
Yeah, happy December, yeah.
Yeah, dude, that's crazy. Honestly, this year, I swear Trump got into office yesterday. Honestly. What is it?
I feel like I've known Trump forever. I feel like he's my dad, I feel like I know him so well.
Yeah, it's either he got into office yesterday or he's been there for the past decade. It's kind of what it feels like.
Exactly.
Right?
Yeah.
Yeah. We had
God, crazy.
Before Trump, we had that old dude. Can't remember his name. That's
Sleeping Jeff.
News. Yeah, Sleeping Jeff. That's
from the Wiggles.
Yeah. Guys, this is not a political live stream. We do have some people who hate Trump and some who like Trump. We try to stay balanced. Actually, no, Mike is not here, so we usually.
God.
We love everyone, and we are very politically maybe unstable as persons, but as a group, I think we're better stable.
Look, we trade markets. We're agnostic. We trade markets.
Yeah.
We trade what we
Well,
see, you know.
yeah. Well, I just want price to go up. I don't care who's running the show.
Yeah.
All I care about is is Bitcoin going up or is Bitcoin going down? Let's look at Bitcoin on the daily. Yeah. Okay.
Down.
Yeah, better do something about this, Trump. I like this. Maybe talk to your son. Let's launch another bullshit project. That'll help the crypto market. I
Oh,
read a Bloomberg article like looking at the wealth of the Trump family, and a substantial part of his net worth is now beginning to show up in crypto, which is like, and then you look at, well, where is that money? Like, in what project is the value from? Then it's like these altcoins that has like they're down 97% or something. It's like, ah, good. That's a
yeah.
great investment. Wow.
Oh, damn.
Wow. I would argue that while Trump says that they should stop insider trading within the Congress, basically Congress members should not be able to trade on companies that they issue certain contracts on, or create new laws around and regulations around different industries like
Mhm.
that. That's a given, right? That's, of course, you should not be doing that. But then maybe if you're a president and you're talking about adding Bitcoin and crypto to a natural reserve, maybe you should not be launching altcoins. I'm just going to put that out there. Maybe that's a bad idea. You know,
Yeah, maybe.
you don't want Pelosi, trading with her husband and having an ETF tracking her trades. Sure, that's sure, but also do not launch a shitty altcoin product. This world, man, it's weird.
Yeah, dude.
Everything's
Yeah, it's nuts. They've made ridiculous money on the crypto stuff. Um,
yep.
I don't know. And we're meant to have the Bitcoin treasury actually coming through. So I don't know if that's the only thing that's going to save Bitcoin right now for the time being.
But is that happening though? Like, is that happening?
Well, there's like echoes of it happening because on all the betting markets like Kalshi and what's the other one I forget? Like the
Polymarket.
probability is Polymarket sort of jumped up above 60%, kind of out of nowhere, right?
Oh, okay.
And it was down at like 14. So to swing the market that way, this is not like a fringe product. There's enough people betting on that someone's put size on this to just instantly shift those odds. So I know some kind of insider thing, something like that. Bitcoin's very out of favor, and particularly with MicroStrategy right now, with
Yeah.
them potentially having to liquidate stuff, because their obligations are more than book value now. So I don't know. MicroStrategy seems like a terrible idea. Don't I don't know. I wouldn't touch that thing, to be honest.
No, I mean, I think Michael Saylor is. I mean, it's kind of like he's a bit fanatic with the whole
Yeah.
Bitcoin thing. Like, I like what he's doing. I like the things that he's saying in the interviews. I like the memes. There's no second best. All of that. I like that. From a philosophical, political point of view, I can definitely relate to the idea of just going all in on Bitcoin and looking at Bitcoin as being this beautiful, sound money based on energy and mathematicals, instead of just having a central bank printing unlimited amount of money and creating inflation as a hidden tax. Like, it's a beautiful idea, right? But then I feel like when you're listening to Michael Saylor, it's like, either he is just extremely smart and really knows what it's doing, but nobody knows what they're doing. That's the thing.
Yeah.
Nobody knows, and nobody knows where the market is going to go, or what's going to happen to Bitcoin. So I feel like he's putting all his eggs in one basket in a way where it's almost,
Yeah.
it's a bit too much.
Yeah, that's the thing. He is very smart. He's a very bright individual. Like, he's former aerospace engineer, all that kind of stuff, whatnot. The thing, though, is I think the thesis is correct. I think he's a terrible trader, right? So the thing is that whenever they've bought up all the BTC, it's always been at the wrong time, every single time. You know, he's like the last one to the party and basically holds the bag and buys the top, right? You know, so if he was a better trader, I think as well in terms of raising the money, issuing the bonds, that kind of stuff, to get the capital to buy the Bitcoin, he'd actually be doing better, raising more money, knowing that, you know, this guy is, you know, pumping it on the absolute bottoms or near the bottoms on the dips, and then we're seeing massive gains. Instead, he's buying it sort of 10 to 15% from all-time highs constantly, which in Bitcoin, that's basically equivalent of the top, right? Because, you know, the vol is so high, right? Yeah.
But why don't like what I find weird then is how does this guy not have financial advisors like proper, because I would be absolutely certain that people like maybe Darius Dale from 42 Macro would probably love to partner up with him and say like, yeah, you know what, like you should probably buy a shit ton of Bitcoin at the bottom and not the top. Buy on maybe this moving average and not in all-time high. You know, simple
I
things like, have you
Yeah.
heard about the idea of trading with the trend? You know, it's like, and I don't know the mechanicals behind this. Maybe it's a very long process. You have to raise the money, and then because you're raising that money, people think you're going to be buying, so the price of Bitcoin goes up before you get the chance to buy. So there's a lot of mechanics behind this because we're talking about hundreds of millions of dollars. It's not like you can just go onto a broker and like, oh, I'm going to buy one Bitcoin. No, it's like we're talking about hundreds of Bitcoins, right?
Yeah.
Um,
But
it's
he
market.
also could raise the money and then sit on the money and say, we're going to raise the money now, hold the money, and then deploy it at the appropriate time at the relevant, you know, what would be a sensible price. So he doesn't have to buy right away. I mean, you can put that in a thing right away. I think the big part is just like how he's so vocal, so open with everything. Yeah, you would think he'd have people around like that. And he obviously talks to these people all the time. I don't know, is it arrogance, ego, that kind of thing? Especially how he's so all in. I don't know. I don't know the guy personally, obviously, but he's the longest holding CEO, longest standing CEO of any of the like early tech companies in Silicon Valley with MicroStrategy back in the day. And so hence
Yeah.
they have a bunch of government contracts going around, you know, just churning it. It's basically, you know, blue chip, just old. It just exists, you know. So they're looking to deploy the treasury in a better way, and then he has full control over it pretty much. And yeah, I don't know if it's arrogance or something like that, but it somewhat worked. But yeah, there's a big thesis that has to play out for it to actually crystallize. Otherwise, you know, cooked in between.
But I mean, now, so MicroStrategy has not changed its name to Strategy, and it seems like it also the logo changed from being like a traditional software company to now being a Bitcoin company. Like the actual logo of the company is now Strategy and then a Bitcoin logo. So now I'm
Yeah,
thinking like, okay, so what happened there? What is the so now it's all about Bitcoin. It's all about Bitcoin. Like so, they had major uh, major deals with companies like IBM, etc. Right? But what happens now? Now it's just a Bitcoin company. So now it's just okay. So everyone that's investing in MicroStrategy is investing in Bitcoin. It's a proxy for Bitcoin. So it's like, have he created a proxy for Bitcoin and just giving up the whole company to the movement of Bitcoin, which I
yeah.
find just absurd.
Yeah, it dwarfs their whole business. The rest of the business is just a side thing that allows them to issue bonds to do the Bitcoin thing these days. Now, the interesting things for this for the market is because recently, like the whole Bitcoin track has become, it's coming back into, I guess, the general narrative sphere as far as the risk on, risk off type sentiment and positivity. Even if people are not directly trading it, people are seeing it as a positioning type thing for risk on, risk off, liquidity, and also part of this potential unwind of the carry trade with the JGBs. Now, that carry trade has been in portfolios for like 30 years now, since the 90s. So this eventually will tip. Fortunately, over the past year, a lot of the leverage funds have sort of stepped aside after we had the Bank of Japan kind of intervening once we were getting up to that 160, etc., a number of times, and then they sort of got burnt a little bit. They haven't been in it so much. That's part of why we haven't seen it unravel so quick, but it still will come apart. It's just natural forces. There's a good 1.2 trillion odd worth of carry trade in there to unwind. So if you take that plus the leverage plus all the markets it's in, this affects currencies, stock markets, crypto, literally everything. Bonds, US bonds, all the Japanese insurers rotate from US bonds or other foreign bonds back into Japanese bonds once they become more attractive. That has massive implications for currencies as well. So right now, part of that bellwether has become crypto with that, as far as it being a very leveraged, highly speculative asset.
I'm looking at, sorry, I'm just changing subject here, but I'm looking at AUD NCD here, and we've had a break above a range here. So AUD NCD has been trading within this range since 2013, and we have established price action above. So last breakout was in 2022 when we basically had a weekly fake at one candle closing above, the other one closing below. If we look at current price action right now, we actually do have a sustained price action on the weekly above. We have one, two, almost three weekly open and close above and around the retest. So there's space and time between the break and the retest, which tells us that the market kind of has accepted AD density above this level. So I'm not going to enter this one because I'm already in Euro entity, but this looks like it's gaining some momentum here intraday as well. On the 4 hour, we're kind of breaking that local structure here, and I think we, from a purely technical perspective, we might be looking at a rather big move here if something changes here. We've had a lot of moves in connection to the New Zealand dollar here, so this is definitely interesting development.
I quite like that.
Okay, I actually gotta go. I gotta jump off because I have a meeting, and I will be back. I will be back later today in the live stream, but I will be monitoring this one because
it's scuffed.
It's just interesting. All right, I'll see you guys later. Okay.
See you, Jonatan.
Thank you, Jonatan.
See you, mate. Hello, Pedro. How you doing?
All right, man. All good. That's just to finalize this thread on that Jonatan just shared. There's potential to move. Things that can be a good idea.
Yeah,
can be a good idea to the upside.
I quite like it. I reckon it's a beautiful swing trade for sure.
Yeah,
very nice.
I think it could feel all this within this place. So if it comes kind of back into something somewhere in here, I think it could go eventually there.
Indeed,
that could be interesting.
Yeah, I think it's been long overdue as well. Aussie New Zealand dollar to actually pick up. I was surprised how long we were kind of in that lower range with comparative macro picture, that kind of thing, rates, everything else going on. So, a lot of that's down to the risk on, risk off, stuff for commodity currencies or anything linked to China since Trump. So, but yeah, I think this is a great trade over here. So,
yeah.
But Pedro, how you doing though?
I'm good, man. I'm good. I've been a bit busy, kind of a bit distracted from the market, to be honest, with a few things going on. I'm trying to come back, trying to see what the market is doing, where the opportunities are. Yeah, what is your take? Like, what is your bias overall? We're 1 week away, basically, from the Fed. What are you expecting? What are you
So I
expecting?
do expect the Fed to cut. I think that's the most sensible thing. The market is also pushing them there. We'll get some of this data starting to come out over the next days and weeks, or what? It's basically 1 week pretty much now to the actual Fed meeting. So there's a couple more pieces to come through. We've seen the JGBs go higher, so Japanese bonds, both on the short end of the yield curve as well as the longer end, continues to run higher. That has definitely quelled now the dollar yen rally, right? And it's been coming off, especially after Bank of Japan echoed more sentiment around a potential December rate hike, and they're trying to stick firm on that. So seems as though they're using that as their mechanism to knock the currency back as well, rather than trying to directly intervene. And, because currency intervention is very hard. Like we've talked about this a number of times in the past. Varying effectiveness, you have to time it properly, all these other kind of variables going on between. So right now, it seems they're getting exactly what they want from it. So I'd say dollar yen continues to come down, unravel. It will be interesting to see when it starts to fully unravel next year, because I suspect we'll get a bit of acceleration, but it won't quite be done as quick as people think. There'll be a lot of narrative headlines, media headlines, that kind of stuff. Like, the carry trade's done, it's going to unwind, blah blah blah. We start accelerating, then it pauses, and we actually come back a bit. And then possibly later on after that into the latter end of next year, we possibly unwind. That's kind of what I'm seeing. Similar to how no one, if you told anyone at the start of the year, we'd have JGBs where they are and the dollar yen where it is now, and had that distinct divergence, right, like between the two, anyone would have called you nuts. Like, no chance, especially in amongst what Trump has been doing. But that's what we've seen. So that will have to come back. But I think there might be some bumps in between getting there. So yeah, definitely going to be leaning on those that are basically the yen buys going into next year on the whole. And I think we can see some pretty big moves there. The other thing we do have is potentially the next Fed chair getting announced before Christmas from Trump. So we'll see how market ends up reacting with that. It seems as though we got Hassan. So if that ends up being the call, I think the market will be pretty chill with that, all things considered. But yeah, general US dollar downside going to the end of the year, I would say.
The US dollar to go higher?
Downside.
Downside. Okay.
Yeah, I think we're getting the last sort of bump after the downdraft that we had earlier in the week, and then I think we'll get some more sustained selling pressure, assuming the data points that we get coming out keep in line with the general weakness coming through. So yeah, and I also wouldn't be surprised if I'm very dubious on like a Santa rally for stocks right now. I think again that is going to be very data dependent, where we could get if the data doesn't come through significantly weak, that we get full confirmation of a rate cut. I think we could potentially see a dip. And then with that, then it's going to depend if the Fed does cut. I think they still will cut, even if the data is moderate, just because the market is also pushing there. But yeah, I think there's a lot to play for in this coming 7 days. Even though things seem pretty chill right now, I think we could get some some volatility coming in.
Yeah, it's going to be an interesting one. I think the US indices, they may be positioning themselves in a way that I'm just curious to see if they're going to actually try to challenge the all-time highs or somehow find some level of resistance at the tops again and start looking for bearish price action. That's mostly what I'm going to try to see. When I look at the NASDAQ, for example, I think there's a little bit more room to the upside, while S&P is maybe a little bit closer already here at the tops. So I'm going to be just trying to see if there's any signs of reversal from around this level that we can maybe lead to another leg down, and maybe even just retest these lows in here, and a bit similar also on the Nasdaq. Nasdaq could even go. I could even maybe see it going a little bit higher, maybe almost retouch this 2590, 25900s. Even though this is not about level, but if you do go there, then S&P is going to be challenging a little bit higher as well. So it's going to be an interesting one. Dow actually kind of reacting from this level as well. So we'll see. Dow also could go a little bit higher. Even kind of what I want to say is, like, even if you do have intermediate high in here, it can still mean price eventually could drop.
That's why I don't like the indices. They're kind of conflicting a little bit, the indices, as far as the structure. Like, you can see NASDAQ looks like it's sort of broken that, but S&P is not out the woods at all. So, NASDAQ has that extra distortion because we've had a bunch of volatility around the AI stocks, where we get these massive sell-offs, recoveries. So just because NASDAQ has broken out above that kind of structure, I wouldn't be calling for longs just yet. Like, I wouldn't be hard set on it, put it that way, because just like you're saying, we could easily just collapse right back through, and it's a bit of a fake out type thing. That's why I'm very mixed, like I was saying, going into the Santa rally type thing.
Yeah, it's going to be an interesting one. I'm going to be looking, but if price goes higher a little bit more, I'm going to try to look for shorts. That's kind of what I'm going to be trying to do. If there is any kind of price action that I see as relevant to do so. So that's what I'm going to try to look for. So yeah, let it maybe go higher a little bit more before aiming for a short. But I think there could be a little bit more volatility. Even if by any chance we do create the new all-time high on the S&P, I think there's still the risk that price could eventually just bounce back. I don't know if it's ready to just start rallying and creating all-time highs and sustain the highs and keep on moving to the upside. So that's. Go ahead.
I was just going to say, we got a number of calls for gold. So if we want to jump over to that,
we can look at gold.
Yeah, we're getting slammed. Everyone, it's everyone.
Before that, I think just to give a congratulations here to Santosh. Just trying to see his comment. I think yesterday he got a TP on GU and he passed the 10K funded account. So
nice.
Congratulations.
Nice.
Yeah, that's perfect. Good luck now with the funded account. Hopefully you're going to manage to get some payouts out of it. And they also have Bob Fisher, that's really close to pass phase one on the 60K. So Bobby as well. Good luck with your account, of course, and that's good to know, to listen to your stories as well, and to see your progress and you guys achieving your milestones and achieving passing challenges, getting payouts, and so on. So keep on sharing on the chat as well, because we like to listen from that. Gold. What can we look at gold?
Give me 1/2 second. I'm gonna make one final attempt to try and fix my camera.
Yeah, go ahead.
Because I'm the Hulk.
I like your style. I think that was kind of on purpose that you kind of.
No, dude. I've even got like a light right here, but for some reason the camera, I'm in the darkness, right. And I'm green apparently. So.
No, it's perfect. Okay, give it a try.
Give me 1/2 second.
Yeah, so where were we? Gold. Everyone is asking for gold. So guys, first of all, if you're asking for gold, just let us know what is your bias. Are you looking for a long, for a short? Do you think gold's going to eventually go to retest these 4,000, basically the all-time highs? Let us know, okay? So we can actually have a little bit of an idea of what you guys are looking at, while we also share our own analysis. And all of a sudden it became quite silent in here. So yes, what do we have on gold? The way I'm looking at this is that, as you can see, basically price end up breaking again this high. This trade in here could have been quite interesting if anyone by any chance managed to catch this move on Friday, even though it was in the moment that there was that issue with the provider. So I don't know if anyone actually managed to catch anything whatsoever around here. But this could have been an interesting trade when price finally broke above this structure and also this trend line, basically retested it almost as a trade book kind of a setup. So if anyone got that long opportunity, that's great. Then we did manage to break these highs, which could still open the space for price to go a little bit higher. Now I do have this level kind of marked at around here, which is basically in a little bit in alignment to this last demand zone that pushed price higher. So usually price tends to react from these levels, and it reacted, right? It reacted already at this level, but if you do actually consider out of the zone, we are still reacting within the same level itself. So I haven't really managed to break above this level, which then would, in my view, would open a little bit of space for price to go into the next a little bit higher. So if by any chance, if I was looking for any longs on gold, and if I was still bullish and expecting price to go a little bit more to the upside, most likely I'll be looking for price to maybe to trade from around somewhere around here. So depending on how price may react from around this level, maybe could find some longs and go with it. One level that still matters at this point, it will be maybe the structure at around this level. So for example, if price by any chance already retraces from here, and if anyone is bearish, maybe this can still be a level where price could still find some resistance and continue to push down. And so at least one touch from this I would like to see it, just to literally remove any kind of sell orders that may still be within the supply. And then next time that price comes here, then it's ready to break and go higher. So one touch, maybe go a little bit deeper, and then on the reversal, that could make sense to me. If price starts breaking below these levels, then I think I'll be looking more for closest to 4,100 to potentially start looking for long. So I don't know if I'll be interested whatsoever in looking for any longs within this. So as soon as price breaks kind of this structure from around here, I wouldn't be looking. I'll be just waiting for price to maybe fill this space and then maybe get into this level somewhere around here, which is actually a level that I've been waiting, but this was never touch it, and then maybe try to attempt for a new long position at around this level. So that's a little bit of how I'll be trying to trade gold in today's trading session. It will be maybe somewhere from here to go higher, or just from here to here. Maybe have a trade, or if one is looking for short, maybe from here to there could also be another idea. And then if price, after creating this structure, if it starts breaking it, and it starts, then maybe can aim to go back into this highs again. And the price starts breaking below this level, then I'll be looking maybe for price to just fill this level, and then potentially to look for longs after that. So that's a little bit on the my take in here, a little bit on gold. Are we still expecting to continue to go higher? Maybe actually we are. I don't even know where this stuff comes from. Yeah, I think someone. Yeah, are you better? Yeah,
I'm human again. Yeah.
It looks good. It looks good. So someone compared. I don't know. I saw an article. Someone comparing. Maybe I can ask you about it. Comparing gold back in 2011's basically this move that we're having here and this top, comparing it with where we are right now. Basically, just to have just to show the dating here, basically to the end of 2008 all the way to 2011. That's basically 2 years, like 2009, 2011, 2 years and a half, which is basically the same thing that we had in year all the way from 2022, 2023 to 2025. Basically, again, 2 years and a half of a big rally, literally a big rally that we had. And then all of a sudden we kind of topped, and we topped for a while. Okay, so basically
I
from
remember it
2011 all
well.
the way to
That was where I took
it
my
was,
first ever trades.
yeah.
Between that and Aussie dollar back then. So
Yeah, so but in terms of the structure, like is there any chance that, because if someone is comparing this type of a move where we are right now, basically it would be somewhere around either here or here. Okay.
yeah.
If that would be the case, and then if by any chance we would be having any kind of move to the downside, which is basically this could potentially be the top, maybe a little bit of a double top now, and eventually go down. I think there's still a little bit of a confirmation that this needs to be a double top in this higher time frame, basically weekly or monthly. On the daily, even on the daily time frame, we kind of need to actually see if price actually finds resistance around this level and starts moving to the downside, then ranges a little bit, and then eventually would move. Do you see any similarities? Is there any reason why you could kind of anticipate similar behavior from these last basically 2011s to now?
Okay, so what I would say is different is the drive up there kind of came after the GFC, and as we're running through the plumbing of figuring out the GFC, the bailouts, how everything would actually land. And we
Exactly.
went right up to the point of just after the ECB with Mario Draghi pulled the we'll do whatever it takes to bail out all the banks and everyone in Europe when we had the European debt crisis with all the pigs was the reference
Yeah,
if you
Greece and
remember.
everyone else.
Yeah, so I think very slightly different there that we had an actual crisis that was in response to that running up, and then we kind of got to the end of it, right? US had kind of sold their stuff. It was just Europe being the lingering laggard. They at least quelled the bleeding, right? So they still obviously struggled for a long time after that, but they stopped the hemorrhage. So right now we're kind of running up in anticipation, slightly different effects. There's a lot of this concern over where to put your money. So both from a monetary debasement standpoint that came into vogue in the recent times. There's a bunch of people that have been talking about it for a while, but now it's hit sort of mainstream headlines, that kind of thing. Once we went through 4K pretty healthily. The other portions of that are if you're looking at asset allocation across the board, and you're in stocks, right? And you're in, so if you take your typical 60-40 portfolio, which has changed a little bit recently, but you got 60% stocks, 40% bonds. Bonds are slightly out of favor. Stocks also are scary, right? They're not completely out of favor, but as far as diversifying for one of those portfolios that would do a 60-40 split, they don't look very healthy, right? Because you're just in the top names. So if you go, okay, the top names are a little bit risky. Bonds, I'm not too sure about because the US credit situation, global credit situation, we could see rates go way higher purely outside of inflation effects just because of monetary, sort of trading effects type thing. Rates go high. So what else do you invest in? It's really hard to see because if you invest in blue chip typical stocks, yeah, you can do that, but there's no growth. So what's the point? The only other things are basically gold and stuff like Bitcoin, or going to like commodities or something, which you're not going to place heavy weighting on commodities, like broad industrial commodities, put it that way. Bitcoin's got way too high vol to risk. So the only asset left is gold. Yeah, like that's kind of it. And I think that's been basically the summary when you put it all together, and we've seen these drives higher. So this comes down to the question of people seeing, gold is a massive asset as a whole. And if you take into account the amount of appreciation that we've had this past year and past 2 years, it is huge as far as a global asset in terms of global dollars out there, right? But I got to say, I think it can go higher. Because the only secondary asset that I would look at is literally just tech stocks as far as protection to the future. And then you go, okay, tech stocks are risky because if the future doesn't play out, it will be the tech stocks that burn. So it's just gold that's left. So I think I don't think we'll get the same play out through here. I think we've got a significantly higher leg. I think it's more like the 2000 type area where we went from like 150 or whatever it was up to over 1,000 or around 1,000, whatever it was. So it's kind of more of a 10x. So I think we could do somewhat similar, not quite 10x because of the size of the market now. But I think we're, I wouldn't be calling tops until 5.5 to 6K, to be honest.
Okay.
I think it's way too premature.
Okay. That's interesting. On the other hand, we have also silver, which can be also an alternative. And silver
has gone
to break.
Bonkers, dude. This past,
Yeah, silver is catching up with gold, basically. It even already broke the most recent structure, while gold is still trading within it. And who knows where silver is going to end up going to as well.
It's up like 10% from last Friday, even.
Yeah, it was a massive move up. And it's just a continuation all the way. We have basically since the beginning of the year, especially since April, it's been like a massive rally on silver, which is interesting to see. Okay, yeah, we'll see. We'll see if actually gold is going to keep on going and sustain. I would like to see. Yeah, maybe we could have new highs and then kind of a little bit more of a same move.
Yeah, I would preferably like to see. I think it's very similar to the 3,500 range, right? When we were stuck between there and 3,100. So see how we kind of got like a second attempt at running to highs and then failed, trailed sideways, and then consolidated and then eventually broke up. I think this time, though, we'll trail sideways like that. Another attempt, trail sideways. I would like to see us come back down, right, to about that 4K 3,900, and then run up from there. So after that, it's up. Now, that's probably going to depend on whether there's a couple of things, trajectory of rates, and then also markets. So if we get this picture going into next year with markets with a liquidity picture expanding, that being positive for US stocks, risk on profile across the board, dollar coming down, that kind of thing. Depending on the rate trajectory specifically, we could come up, right? And we'll just charge on. But if stocks end up hitting a wobble, something happens, somehow China goes back on trade talks and tariffs or implements something else, or they make some breakthrough in AI that's going to dwarf all the US companies somehow or something like that, stock market comes off. In that event, I actually see gold coming off as well. Reason being, stocks are at ridiculous highs right now. Gold has made an absolute ripper. Gold will actually have to come off, even though you typically see it as a defensive asset, because people will be selling quality assets to drum up the capital. And I think it'll actually be in kind of a stagnation type zone for a while. So it's not necessarily going to crash down, but we'll just come down to those 3,800, 3,900s, while stock market also comes down before that rebuilds.
Yeah. All right. So we'll see. It could then do something like you mentioned at around these 3,400s, and then maybe stabilize a little bit more in here and go. As I mentioned, kind of intraday. I don't know if you have any idea intraday, LJ. I think I would look for, as I mentioned, maybe potential longs from here, or then longs from a little bit underneath. I would kind of skip all the way this area. And if anyone is still looking for shorts, then maybe wait for price to go a little bit higher again. Maybe try to continue, or at least go closer again to these tops and go. So on some kind of entry.
I agree. So I think either the low is in right now, or the next interim point is like 41.75. So either this is a low right now, or it's 41.75. So I'm on the weekly chart here. Let me go over. Got him back in another era. Yeah, so as you can see, like if we're on the 1 hour right now, this is the 2 standard div channels. So this is the midpoint, 1 standard div, 2 standard divs, same this way. So we've definitely gone outside of that. We do have this general trend line sort of coming through here. You can see now you could come back to this area that we sort of formed the base and the close of the candles and then drove up from. But I think that's going to be a tall order. And then you've got these highs from these candles just here. So that would be the extreme, right? I would say basket between 75 and pretty much 65 down here if you want an absolute bottom for longs. But as it stands right now, I think this is actually going to be where we build up from, and then we take, your next interim point is going to be back up towards 42.15, basically where we opened today, and then another push towards the highs. We'll have to get above 42.60, and then I've got about 42.90, then 43.30 as the levels beyond that. So that's sort of, if I put all this stuff on, I'll go a bit chaotic. All right, it was there for a second. Now it's deleted itself. But I do think this is the relative bottom. So I think in this past hour, we would have had to take this next leg once we did have this slight downdraft in literally the past hour for this to push on. Now we're seeing buying pressure coming in. So I would say this is most probably your buying point from here. So got to get back up above the 10 moving averages and then up towards some of the highs, like where we opened for the day, and then beyond that to yesterday's highs up to about 42.60. Yeah, so I think longs are now. I'm long currently, so put it that way.
Yeah.
Sorry for the botched stream as well, guys. Like I'm on my laptop out in the living room. It's not ideal. I've tried to make shift right now, so it's a bit it's a bit difficult. Not used
it
to
looks good, man. It looks good. There's no problem whatsoever. Do you have do you have any Discord channel? Yes, we do have a Discord channel. I think you can find it on your dashboard within the community. I think now it's changed a little bit the layout since we did the update. But I think when you are in your dashboard, now on top you have community menu. And I think in there you'll be able to find the Discord link. I think at least you should find it. I think the requirement is that at least you have you purchase one account with the Fivers to be able to join, if I'm not mistaken. But feel free to join because we do have sessions also every day after the live stream. So basically 1 hour after we finish with the live stream, we have 1 hour sessions, the coffee break, something like that you have on Discord. So definitely join, aside from many other things that we do there as well. A few people mentioned again, some of the yen pairs. So Santosh is saying that he's looking at CAD yen, focusing to short, looking for the Asian lows, and some other people also mentioned dollar yen, Aussie yen, basically our yen pairs to go short. So if I look at the CAD yen is an interesting one. What is CAD yen? What is Asia lows?
Yeah, I was just going to say before we jump over there, similar deal with silver.
Okay, good. Yeah.
So I'm also in a long on silver on a more of a swing account through here for right up to 59.10 or so from here. So again, I think we're roughly at the bottoms for both gold and silver. So we got this structure through here that has held up nicely. We had the downdraft, obviously massive moves in silver coming right up. We've had a bit of a downtick. Gold has had similar moves. We found relative support through here. It's by these prior highs paying up. So over to you, Pedro.
Yeah, no, that gold. I agree with you. I think gold could find some buying pressure where it is right now. Silver at this point, I would just prefer to wait for price to basically come back into just the previous level support resistance that we just broke. But that's me.
Yes.
I'm a terrible trend continuation trader. So if I was in the trade, I for sure price would go down. Since I'm not in the trade, but basically price could go higher. It's kind of always doing the opposite when I'm trying to trade continuation setups. So that's why I just stick with my
So
reverse.
silver, I was definitely very hesitant on, right? Because like it
Uh-huh.
has run so far. I was very hesitant. But just given the momentum, yeah, we do seem to still have it, and especially with gold, I don't quite see gold like tanking through to 4,100, right? So as far as that picture, um, I think it's all right
Yeah,
for now.
yeah, I
But
think we'll go.
I'm definitely quicker to jump out of that than gold. Put it that way. Yeah.
Yeah, I like still the structure where price is respecting at this point. And if you do manage, for example, to properly break this trend line, which looks like maybe price is about to do with this candle, then maybe we can try to rally again back into these tops. So that I could see that happening. The supply in here has been already touched as well, so it's a bit weaker, and the other one is weaker as well. So yeah, I'm just curious to see how eventual price may react around here. If this kind of breaks, then price could go higher. I don't know if it's going to break new highs, but maybe can, or at least maybe retest these 58s. I think it could.
Yeah.
It could go. And actually, I would like to see that. I would actually, because if I was looking for any shorts at this point, what I would like to see actually, it will be for price to again just go higher from where it is, kind of make it look like this is double bottom, a double top being created, and then just drive it one more time before downward break, and then potentially catch the move, and then finally have a bigger retracement all the way back to the previous level of support resistance, and then from here it could go higher again. And personally, I'll try maybe to catch this move down, and then price from here it could again go all the way to the upside. At this point, you would fake out whatever structure is being created right now. So people may start thinking this is actually just going to start moving way lower, but now maybe just retesting this next level and go higher, these 54s. So if by any chance I wanted to trade anything, I'll be waiting for trade this short and then potentially go long around here. So hopefully our trade actually plays out to give me potentially into a short opportunity. But looking at the yen pairs, because you mentioned CAD yen. I think many of the yen pairs are in a similar structure, except dollar yen. Dollar yen is actually the one that is way lower, mostly because of the dollar move. But when you are looking at the remaining yen pairs, for example, CAD yen, Aus yen, Euro yen, still kind of close to the top, or even pound yen, they are way closer to kind of structure at the highs, opposite to dollar yen, which is way lower. And again, one of the situations is just analyzing yen index. It's one of my favorite actually assets to analyze, because it gives a clear idea of then what I can expect from the yen pairs. Basically, I've been waiting to see actually how price is going to be reacting from around this level, and I would definitely like to see this one being broken to give me even more confidence that the yen pairs are, or the yen index about to go higher, and eventually the individual yen pairs would go to the downside. We had already an attempt, so this initial move perfectly okay. There's a clear supply level. There were some orders in there, price respected it, and now it becomes a battle. Okay, now it becomes a battle to see if these tops are going to hold price or if these bottoms are going to hold price. So price came all the way down, kind of retested this level. Actually, was looking a little bit deeper, but reacted, went higher, and now it basically tried to break again with this top to the upside, and we didn't manage to. We did manage to break above this top in here, but not exactly the structure that I'm looking for. So I wouldn't still consider a proper break to the upside to give me 100% confidence that price is ready to just move to the upside. Now I'm expecting price to react from here. So one of the good things with this asset is that they tend to respect quite nicely the clear structures like supplies, demands. So I'm expecting indeed to see some reaction from around this level. Let's see if this is actually going to be a good zone to push price out of the way, or just a small reaction, then eventually price will challenge and move a little bit worse. We had also, aside from this structure, we also have basically this big trend line that price is still not being able to break to the upside. So there you go. You may continue to range a little bit. So how does this information then translate into the individual yen pairs? Again, the dollar yen has been the one making bigger or constantly new lows. Why? Because of the dollar, right? Because we had a big move to downside. On the dollar, so that helped. Now, if there was one of the assets to short, it was actually more dollar yen. All the remaining price does try to go lower, but it comes back straight away. And as you can see, it's already retested this top that was created back in the 20th of November. Personally, if I look quickly at the dollar yen, I'm expecting price to go higher. Again, just a little bit on the analysis that we did, or the analysis, or the way I explained my strategy on Thursday. Basically, this is one of those rectangles that I like to mark, and price didn't really manage to break below it to open me the door to go further down. It did manage to slightly break this low below that level, but not exactly the full structure. So, and if you actually look a little bit more to the left side, price actually managed to take this top. So I'm still a bit more bullish at around this level, and I think price can go a little bit higher before finding more selling pressure. Doesn't mean that intraday we are not going to find the selling pressure. We are finding selling pressure. For example, price respected those tops, but it just went all the way to respect the next structure that we had in here. So even though some of you may look at this low as a good break of structure, maybe price is ready to go down, for me, it doesn't really match that way, because price just feel the next level. If price had broken maybe below this level, then maybe could start going there. But personally, I think we can still go a little bit more to the upside on this dollar yen, which can maybe be depending on what Aussie dollar is doing as well. Maybe the Aussie, if it wants to go a little bit higher, then can help also the Aussie yen to go and to make pressure a bit more to the upside. So
yeah, I agree.
Yeah, so and if I'm looking for any shorts, maybe I'll be looking for a target within this level, and then potentially can continue to go lower. Looking at the pound yen, we talked kind of about that as well. I think eventually we are going to take this top. Okay, and I think price eventually is going to go a little bit more to the upside. So at this point, we are managing to continue to break new highs, kind of respecting the next structure. So I think eventually we're going to end up taking that top, and that's going to be my bias overall. So even if I'm looking for any intraday short, I'm not going to be looking for big swings. Even though this target looks kind of attractive, if price kind of starts breaking, I think eventually price can go close to 200, 201, and then maybe go higher again. So that would be kind of an attractive target for a short, but price may cap. Sometimes price just keeps respecting same structure until eventually breaks the level that it wants, and only after it's going to make the move. And this may be the situation here. Euro yen also, it kind of tried to attempt a few times to properly break, not really managing to do so, but still within a little bit of the structure. I could still see yen or euro yen going a little bit higher. It hasn't really touched the level that I was looking for, so it could go even a little bit higher to then find more selling pressure if it wants to do that. So I'm totally okay if the euro yen ends up taking a new high. I'm still going to continue to look for shorts after that. And then you get into the CAD yen, which was kind of the setup that kind of our viewer mentioned. And I think you can continue to go a little bit more. Similar to Aussie yen, we just broke an important high in here, and we may continue. This looks like more of a continuation setup. Actually, it's similar to what Jonatan mentioned on Aussie New Zealand. If we're just checking here, Aussie New Zealand quite quickly. On the higher time frame, that big break that we just had, and potentially a continuation to the upside around this level. So price just broke this structure, maybe potentially continue to go higher. It may be quite similar to what we have in here on the CAD yen, where price just broke away from all this range to the upside, and may continue to go eventually a little bit higher. So I'm expecting a little bit more of that until maybe price gets closer to maybe somewhere around here, and then maybe we can start finding a little bit more of a selling pressure. So in here, I'm expecting maybe price eventually to continue. If you start breaking below the structure, then maybe go into a different situation in here. But those are a little bit of the yen pairs I'm looking at. and I'm literally monitoring. I'm monitoring a lot the ZN index to see what kind of opportunities are going to have around here.
Yeah, I was just going to answer that or respond to that since Dirk is watching. Yeah, I was talking about this just before, Dirk. I think my expectation with the dollar yen trade, I think it's going to take a lot longer to unwind than sort of expected. Even though I think we'll get a slight acceleration, then kind of pull back, and then it'll be like a delayed fuse that into sort of mid next year or after or something that we actually get, dollar yen fully unwinding. I think we're going to have to see the full liquidity that is waiting to be sort of deployed coming through. Once that's gone, then we get peak rates, then we get some kind of market top out or something. Then potentially we're asking questions about QE or something like that into, or at least they start cropping up into the back half of next year, like Q3, Q4. Then it sort of unwinds. That's kind of what I'm seeing. I think it's going to be a lot longer to unwind, because the other thing I was looking at is leveraged players in dollar yen. That leveraged side of the market has significantly reduced their participation over the past year after we had the sort of small currency interventions last year in dollar yen. Once we were approaching 160, and we had a number of those bats down for a couple hundred points every other day, that kind of thing. A number of them got burnt, and they haven't really rejoined over this past year. For obvious reasons, with the Trump thing going on, it'd be pretty risky to do so. So I think it's going to be a bit slower to unwind overall. I think also right now, as far as yesterday's price action, we've still got a few questions out as far as the December rate cut, like with the data coming up. So I think that's sort of, we're moving in that direction, but there's a number of unanswered pieces, kind of like we've had this whole year. So yeah, I think it's gonna be a slow grind, a slow burn. So, yeah. Hello,
What's up? Welcome, guys. William, I like your background, man. I love it. I saw the effort you put in on Sunday, so we were actually setting up everything. I think it was Sunday, right? Or it was Saturday. I don't remember, but it looks really nice. I like it.
I think you're
muted. No one tells him that he's muted. No, don't tell him, LJ.
Yeah, I'm muted. Fair. What's good, guys? It was Sunday. Yeah, Sunday evening.
Dude,
1-0 Pedro, by the way.
It's better than my background now. Like I'm in the dark, bro.
What's going on?
My PC's been wigging out, so I had to set up my laptop in the living room
laptop in it, yeah.
Yeah, but for some reason as well, like the camera went, like I've literally got a lamp, like literally right here, and then it's not picking up the light, like properly. So I'm in the dark, even though I've got the full, like living room lights on, everything. It's bright as hell in here, but I don't know. Anyway,
it's really weird.
So all I've got is a Guggenheim painting.
It's a painting on the wall, right?
Yeah. Awesome. But I don't have any LEDs like you. So
why didn't you just stay in your office and just kind of like move your keyboard out of the way and then?
Because my screens are way too big, right? So the depth of the desk isn't enough. I'd be like this, like a little,
Yeah.
I don't know, yeah. And we tried to scrap together like last minute, so I was like, I'll just move it out here and we'll see. I'll try and fix it for tomorrow, but
yeah, nice. Hello,
got too many terminals, mate.
What's that? Too many screens?
Yeah, you've got too many terminals.
Too many terminals, yeah.
Yeah. Eating up all of your RAM.
No, it's from the it's part of EVMux. It's like a glitch thing, whatever. So anyway,
what's good, Dirk? Hey, Rich. Should we try and do it like Dirk? Should we try and go German mode?
Richard and Wilhelm.
Hi, Richard and Wilhelm. Wilhelm.
Wilhelm.
Wilhelm.
Yes, a Wilhelm scream.
I did just want to highlight this question just before we lose it. for later as well, because I thought this was actually a good question from earlier. Just don't have to go on about it just yet, if you guys.
I'm really
But keep it there for a minute.
Some of the markets bet. Some suggest raw price action. Some S&T, ICT. Some suggest demand and supply. Please provide your insights.
Because it's basically where to start in the markets type question, right?
Yeah.
Which, especially these days, part of I must admit, like part of the difficulty these days is that you are overwhelmed with so much from social media, YouTube. There's a bajillion strategies. People talk about ICT, S&T, orb thing, this, that, New York.
The orb strategy seems to be a really popular one at the moment. Like you know, like
and
the past
they're all
3
like
years has been like SMT or ICT. You know, that's like the sort of that's been really trending. But at the moment, like, it seems to be like that orb breakout strategy.
And that's the thing where they're all like fads. But if you're new to it, you don't know if it's a fad or if this is a thing. Especially when they say like orb, it sounds like a sort of technical type term, or ICT or SMT. It sounds very like technical. But a lot of these, I will say, a lot of it is rehashed marketing.
Yeah.
Sometimes it's repackaged marketing of old strategies. You know, they've been here for the past like 40 years and they've just slapped a new name on it, calling it, you know, you got your fair value gaps, your this, your inverse thing, your whatever. Like, you know, it's just new naming on like old stuff. Now, some of that old stuff
this weekend, just coming up with some like really sexy names for my strategy and just like rebrand everything, because at the moment I just call my strategy just standard breakout retest. But that doesn't sound sexy. That sounds boring. That sounds like anyone could trade that strategy. I'm gonna name
that's the thing I want to highlight. That's the marketing piece, right? Where 100%. They make it sound technical and fancy and special or something, when it's just some bread and butter type thing. But often as well, with the bread and butter thing, because they don't, there's certain people who know what's going on, add this, and all these other pieces were actually are nonsense and potentially actually detract from your performance, etc. And so, I think it's a good question in terms of not getting confused with all that, because there is a lot of slop. I'll put it that way.
Yeah, I think we can get
like Jonatan, do you have opinions on this? Is that what you jumped in?
Into a nice conversation.
Listen. This is important. I heard. I was having lunch, and I heard ICT. And I'm like, well, ta-da!
And he appears, dude. It's like calling a genie, but you just say ICT, and Jonatan appears.
LJ, you had a very good point. I just want to go in and I think we can kind of like summarize this question with saying, like, where do you start? Well, first you have to decide, do you want to study technicals or do sorry, I got the live stream running on my phone. Wait, I have to, so I hear myself, it's weird. Do you want to study fundamentals or do you want to study technicals? Like, that's the first question you want to ask yourself. Then if the answer is I want to study technicals, then it's very simple. Learn technical analysis. That's it. Just learn technical analysis. Don't go learn this name or that name. Like, what is the trend line? What's the horizontal level? How does the RSI work? What's the ATR? What are all these indicators? What's the Bollinger Bands? What's momentum? What is the indicators based on? What's the calculations for those indicators? And why do the numbers appear on your screen? Learn that, and then you know everything about the orb, the open range breakout. The orb, the open range breakout, that's just a breakout. That's just a break above
breakout.
range.
Yes,
It's a breakout above a range.
This is a regular breakout, dude.
Yeah. A fair value gap is just a retest of a price level. It's just a retest of a price level. It's a break and a retest.
Yeah.
It's
opening and the opening range thing is like just a you got an open of a new market session, right? All the orders go into the market. Wow, there's more liquidity. It was New York Open. You know, that's it.
Break
all
was
it is.
better.
Like it's just a traditional, obviously, right?
Yeah,
That's where the
it's
bulk
o-
of
it's
all
open
stock
market momentum.
Opening
Yeah, that's
range, breakout. That's it. It says
The
everything in
first-
that one little sentence.
Yeah, the first
Do you
2
know- you know,
hours
I'm
of like
stuck-
New York is where the bulk of stock market trading is done for US
Ooh,
indices.
what a pretty
You know, like
kitty.
no
Oh,
surprise.
there's a little cat out there, Pedro. There's a little cat. You know, there's like a candlestick pattern based on a cat. Do you know the name of that?
The candlestick
I don't.
pattern based on the cat.
I know what mine is called. It's called margin call.
No, but guys, I think
Double.
it's very important that we understand we understand what we're doing when we're trading. We're using technical analysis to predict with certain probabilities the future move of price. Just like a weather forecaster is trying to predict what the weather is going to be next week based on the patterns we see in the wind structure and the clouds formation and all of that, right? You can look at what is happening right now in the weather, what happened last week, where is the wind blowing? You know, if it looks like the clouds are coming in to a certain area, well, there's going to be clouds in that area, most certain, right? And then things can change. So it's like you don't go up to weather forecaster and be like, hey, what type of knowledge, what type of university do you go to, SMC or ICT? Like, what's the best one? No, you learn the knowledge you need to be a weather forecaster, whatever that is. Same thing as a trader. So, okay, you want to learn technical analysis? You study technical analysis, okay? And there's only really one type of technical analysis, and that is the whole foundation for everything else. So ICT is technical analysis, orb is technical analysis. There's a lot of different names for technical analysis, but what it all comes down to is you need to understand the underlying foundations of technical analysis. And I could say just go buy the CMT curriculum, but that's insanely expensive. It's like $200 for a book, which is stupid, right? But what you can do is you can go and you can search for a book called Technical Analysis of the Financial Markets by John Murphy. That's everything you need. Read that book. That's all you need. You're not going to be presented on a silver platter a specific awesome 90% win rate system. Guess what? You have to build that yourself based on the knowledge that you get from books like the one I just mentioned. There's no shortcuts to this, right? There's no manual that you're going to do this, and this. No, you have to learn everything from the ground up and then build something on your own. It saddens me when people say, "Where do I start? Should I start with ICT?" It's like,
I would say as far as particularly for FX commodities, like active trading, like day trading, is definitely technical analysis, number one. I would say your number two is learning some kind of statistics and just, basic economics 101, supply and demand type thing combined with statistics. Then the third one, which is a bit more in depth, is starting to go into macro and fundamental. Now, macro and fundamental, you're going to need to at least be conscious of that because there's news releases, that kind of stuff, whilst you're doing the other portions. But going in depth, that's sort of a more advanced portion in terms of application in particular. Because often you can understand it, but the application is very hard. So I would say technical analysis, learning statistics in general, just basic generalities about statistics overall. How to measure things, how to calculate things, how to project things, all that kind of stuff, and then go into macro.
Yeah, and I think there's actually courses online. I think Harvard. How do you pronounce that? I always said Harvard. Whatever. Go to Hogwarts.
Hogwarts?
Harry Potter.
They have courses on. They have free courses on like the introduction to economics, where the beginning, the first part of that is just describing the forces of supply and demand, and that's super important to understand what supply and demand is, and then understand the technical analysis. Like in CMT, we do read up on statistics, just very basic statistics you need for technical analysis, and I don't think that's available in like a book that I So I guess that's a little bit more advanced, but that's the stuff you need. I mean, you need to understand. When Mark Douglas says, you got to think in terms of probabilities. What does that mean? What is probabilities? What is he talking about? What, like, if I flip a coin 5 times and I get head 5 times, what's the probability of getting heads the second time? Well, you're probably going to say it's a bigger chance of getting like not getting heads on the 6th time, but it's still 50-50.
It stays the
It's still
same.
50-50,
Yeah.
and people have
Doesn't change.
a different time understanding that. So when you're in a drawdown period, you're in a 10-hour drawdown period, you're going to say, well, I've been in the drawdown period for so long now, it needs to move, or it needs to change. No, it doesn't. It doesn't need to change. Like, it absolutely does not need to change, especially not if you don't know the statistics of your trading system.
And that's the thing. It's a way of thinking with statistics rather than doing raw math. It's the how you think type aspect, and understanding that yes, it is 50-50, but at the same time, if you want to flip a coin 40 times and get the same result, it's going to take you the same equivalent of the entire lifetime of the universe to get that result. Right. So that's where you start to understand the curvature of the math. That kind of stuff.
So we can kind of like summarize this. Is go back to this question. So most of the things that you need is available for free. I would say everything that you will ever need to become a profitable trader is free out there, and it's all on YouTube. The issue with social media is it's so saturated with bullshit, if I'm going to be honest, especially in the trading space, that it's insane. The more subscribers the influencer has on YouTube, the more insane technical analysis they're going to give you. Just like, no wick strategy. So if a candle has no wick, it has to create a wick. It's like, no, it doesn't. Anyway, so what I do,
I would say, YouTube, just like you're saying, more followers take a lot more. What's the word? Where you got to qualify them more.
The more followers you have, the more money you make from your
like
followers.
A grain of salt. Yeah, you got to be more hardcore in assessing them. Right, more dubious, more skeptical. Right?
Fair.
Lower followers.
I have 2,000 followers. That's very low. I'm just saying, very low. I have a very low number of followers on my YouTube channel, which means I have a lot of knowledge.
And there's also places
I got a few followers on Instagram, so careful with that one.
So don't listen to Will, because
don't listen to me.
I have like 10 times less followers than Will.
I was going to say, if that's the case, don't listen to me. I don't know a thing.
For sure, I got 50 times less followers than all you guys.
I've got 20.
I think what I would recommend to this person with the in the comment section right here, social media is very saturated with a lot of trading knowledge that is very questionable, and I can definitely understand that coming into this industry as someone new in the field, it's very difficult to understand where you should start. So I would not recommend going to YouTube first. I would recommend going to the books that was written before social media on trading. So the trading knowledge that was creating before social media. And honestly, I think one of the best books on technical analysis, this was written in 1999, is Technical Analysis of the Financial Markets, a comprehensive guide to trading methods and applications by John J. Murphy. It's going to be around $30 or so on Amazon. That is probably the best technical analysis education you can get anywhere in terms of being a beginner. You take the concepts in that book, try it out in the markets, and then go to a prestigious university or college or whatever on their website and see if you can find free courses, which they a lot of times do. Yeah, edX as well has a lot of good stuff. And try to see if you can find an introductory course to statistics. And then also, if you want to look at an introductory course to economics, just to understand the dynamics between supply and demand, that will give you everything you need. You don't need anything more than that. And then when we talk about fundamental analysis, honestly, 42 macro is super good if you want to learn fundamental analysis. Super good. I'm a subscriber. I'm not affiliated with them. I have to be, I think, because they're very good.
I agree. I from all my stuff of what I've seen, yeah, I very often agree with them, and not in a, like a, yeah, I just agree. Like, you've qualified, you've tested it, that kind of stuff. I very much they do some very good work.
But what's
Definitely.
interesting
Jonatan,
with yeah,
sorry, if you have like let's not just say links, but like somewhere for people to go and click on like 42 macro if they didn't write it down now, can we maybe just post it in chat for people to just kind of like have an idea of where
to
to
be
go?
fair, I've not even heard of 42 macro.
nah, I don't think. I think we're
Well,
gonna do that. I think we're gonna
I mean, you need a sponsorship.
yeah,
Johnson.
exactly. I need to get
Yeah,
affiliated.
yeah.
Okay, then at
I feel
least
you.
the book that you suggested, and then some of those things, not necessarily the website to say, hey, go and buy it from Amazon, but kind of like just the name of the book and stuff like that. Maybe if somebody is just tuning in now and they don't want to go back and listen to everything that you've already said.
Yeah, I'm gonna link the name of the book in the comment section right now. So there you have the technical analysis of the financial markets, and then of course, this guy, like, why are they doing this with a nickname? I'm sorry, he had like a planned whatever. Market Wizards by Jack Swagger. That's also very good, but it doesn't. It's not going to give you any. It's not going to give you any strategies. It's not going to give you any technical knowledge that you need, but it
Yeah,
will give a lot of stories on trading, which is interesting to read as a trader. But it's not going to make you a better trader. So these books, amazing when you're a trader, but it's not the
yeah,
books that will make you a trader. However, one book that will make you a trader is Trading in the Zone. Right, that book. When you understand the technicals and you get into trading, when it's time to focus on the psychology part and the mental part and actually sticking to your system, Trading in the Zone. There's nothing else like it. A lot of people say, Best Losers Wins by Tom Hogarth. It's basically Trading in the Zone written in different words. Okay, I'm not saying like Tom
yeah,
Hogarth is amazing, but all trading psychology you will ever read about derives from trading in the zone. So it's almost like when we talk about all these self-help gurus and motivations and everything like that. Uh, most of the things that they talk about is from the old Stoics, right? The Stoic philosophy. So I'm a true believer of going back to the source of all the information, and in this case, it's that technical analysis book, and with trading psychology, it's Trading in the Zone. Again, these are books that is written well before social media started saturating the whole industry.
yeah.
Yeah.
I agree, and I think as well reading tangential books about some biographies, that kind of thing, about certain entrepreneurs or whatever. A good one is Titan, about Rockefeller, right? And there's an example from then when he got given a whole bunch of money to go and deploy in the oil fields when oil was going hot back in the day, back in the early 1900s, right? And he came back and didn't spend a single a single dollar of the money. Gave the money back to investors, which was like 500K or something off memory back then, which is huge money now. This is back in whatever it was, 1920 something. And he said, no, it's not the right time. And then he waited. Then everything crashed. Then he bought it up for pennies on the dollar and made all his money, right? And that's an example of market timing and discipline, to not like jump on the hot thing when everyone was trying to buy out oil fields, all that kind of stuff. He went back to the investors, said, no, not right now. And, so there's other tangential books with stuff like that as well that you can read as far as that psychology mindset type thing. And I do agree with you. Market Wizards is really good for all of that, especially as a trader. It's often very lonely. So I think those books are very good as far as like you're hearing other people's stories, other traders that have done it, that have succeeded, and they're from all walks of life, different strategies, different approaches. Some work for actual funds. He's done other books on like sort of retail traders per se that have made it really big, that kind of stuff. But yeah, like Jonatan said as well, it won't exactly give you a strategy or approach or direct technical understanding of the market per se, but it will give you the sentiment motivation type aspect, to get geared up and do your thing. So
Yeah, and then if you want some motivation, you should watch Wolf of Wall Street and The Big Short. Those two movies, perfect type of movies on a weekend to prepare for the upcoming trading week. Get in the right mode.
that's fair.
Yeah.
And billions. The TV.
I actually haven't seen Billions. I know I should.
Oh,
I'd like to-
Jonatan,
really
you
good.
gotta watch it. You gotta watch
It's
it.
really
Yeah,
good.
dude.
Yeah, I need to.
The Big Short is actually really good. Wolf of Wall Street. Come on, that's
Yeah,
obviously
but
good.
first,
good
the scene with
Maybe.
with the dancer when she's like, what about my other houses? So you have more houses? It's like, yeah,
I got five
five.
condos or whatever.
All
Yeah.
finance? Yeah. What happens if the you have to pay more?
Housing
what?
market
What?
crash.
I can't afford that. Dude, Johnson can't afford it, dude. He blacked out.
This was his accountant just
went
telling
dark.
me, don't share too much.
Stop sharing.
share-
Stop
share-
sharing.
Johnson, yeah. Pedro said your
Someone
accountant.
watching over Jonatan being like, no, don't say
Your
this.
accountant says you can't afford it. Yeah.
Stop.
Amazing.
He's
amazing.
saying
No, okay,
too
so,
much. Cut him off.
all right,
Brilliant
good
timing.
conversation, guys. I felt like I wanted to jump in and have this conversation. I feel like so. Oh, Griff, hello.
Hello,
Griff.
can we
Hello,
fit?
Griff.
Can I fit on this screen?
Talking about dancers. Welcome to the show,
Streaming
Griff.
right
So
now.
squeeze in.
I think we should all six of us just be on the main screen. Get rid of the charts, and we just have a discussion today.
Wait,
I don't know,
whose screen do we have on here?
Me, I'm long gold,
LJ.
and
Oh,
I'm winning.
God,
I'm winning.
God, that's good.
That is great. That is good
Man,
to see.
I found a button yesterday
I'm
which
winning,
I
bro.
accidentally clicked. That brings us all up. I'm gonna click it again. Ready? Look at this.
Pedro!
wait.
Come on, guys.
Here's on main screen.
That was a lot of
Pedro.
Pedro.
Come inside.
Oh.
Come on, Cookie, join the party.
All right, Pedro, tell us all about how's your weekend been?
We're like
How
your
do you think
minions.
The Japanese stock market.
The Japanese stock market is perfect. No, but I have to go, guys. I have to go feed this tiger that's around here.
Wait, you gotta answer this first, Pedro.
Who's cat?
I'm just gonna throw out the
Pedro's
LJ, do you have a cat?
Mine,
100%.
Yeah.
mine is an issue as well. Mine is quite a problem. Because he likes to sit on top of the keyboard and stare at me, and I think this is my reaction if I'm winning or
Well,
losing. But he's
Mine
kinda
is starting
dangerous.
at minus $180,000. So
Okay.
your cat could
think
basically
by
just
default.
stay flat and win the competition. So
Yeah, by
Yeah, okay.
default.
Yeah, that's a bit doable.
Wait, hang
And he's
on a
quite
minute.
patient as well.
Hang on a minute. Griff, do you have a cat?
My parents do. I don't.
Okay.
I
fair.
like how you had to think like, do I have a cat?
Yeah,
Wait,
it's like,
do you want-
why is it my parents?
you forgot about it. It's like
Did I leave
neglected.
the stove on?
Yeah.
Jonatan, do you have a cat?
No, I do not have a
You
cat.
also had to think about it.
I thought about my kids, and my
Did
son
my fiance
likes
buy a
to-
cat and I
to-
haven't realized?
My son thought he was a cat when he was like 2, so I had to like think about that.
I had to sort that right out.
When he was 4, he started making cat noises. But I'm like, dude, you're not a cat.
Where
right?
did you learn
know
this?
you're not a cat.
We don't have pets. Where did you learn this?
If you're gonna be a cat, at least be a tiger or like a lion.
Exactly.
So
Like
kid,
you gotta
if
be
you're
an
gonna
animal.
a
Is be a lion. Can you be a lion? Well, you want to be a cat?
Be a better cat. Come on, man. Score yourself. Okay, that's good. I just thought I thought I was gonna have to get myself a cat or something. I thought I was gonna have to steal Cece's cat.
I've got 4,
honestly,
mate.
I don't
So
understand
there's enough for
people-
You have
everybody.
4.
Yeah, I've got 4
Who has
cats.
4? You
I
got
do.
4
Rich.
cats?
It's a lot of
4.
cats.
Hell?
My God, why?
Everyone's got a good cat.
What do you
with
find? First of all, they're cheaper than kids. That I can tell you.
Yeah, fair.
Well, I mean,
Well-
yeah, fair.
Cheaper than kids, yeah.
Are you even a trader if you don't have a cat? Well, okay. Well, my
Yeah,
partner's got 2,
yeah,
so
yeah.
my partner's got 2. So does that count? Like, do I count as a cat owner if she's got 2?
Not really. No.
then
Unless you
No,
guys
no,
live together.
unity
If you
of
guys live
property.
together,
You
then it would
cannot-
count, but you don't.
Okay,
So,
fair.
You
So
know what?
when
Like,
she moves in, then I'm a cat owner.
yeah, then it counts.
I know we're, you know, I know we're all supposed to be like, oh, we love animals and everything, and I do love animals, but I don't like cats.
I was
Can
about to say, there's a
someone in the
big but
comments-
coming.
Yeah, I know. Like,
I like cats,
I'm sorry,
but-
but I don't like cats. I don't like cats.
Dude,
I
you
like
realize you
humans.
got a lot of cats here that are gonna. We've
I
got
know,
like
man,
an
but
army, right?
Can someone
You
contact me?
literally
Like
got
Rich
an
has got
army.
4.
No, we're
I got
sending them
1.
to Sweden.
Pedro's
to
got
come
2.
Back
2.
up your curtains, mate.
He's
Am I a
outnumbered.
terrible person, or can someone relate in the comment? Do
I mean,
do
to be fair,
everyone
I was
love
never a
cats?
cat person initially, but I don't
Mate,
know. They sort
I
of
don't know.
grew
We're
on me.
putting all these cats on a boat, and they're going to Sweden, and they're going to trek the way through, and they're going to find Jonathan's place, and they'll be knocking
Like
on the
care
door.
package, drop them.
Telling you,
I think
whip up your
I
carpet,
don't
whip
like
up your
cats because
curtains.
I think I had up to 10 cats as a kid, and they were just not nice to me. I don't like cats, man. I think I have traumatic experiences with
Oh my
cats.
God.
I think that's
Cat
why.
trauma.
Yeah,
Jonathan
I think,
and
Well-
cat just don't get along.
I think
Hey,
it's
Well,
a
the
that's-
thing
childhood.
is,
fair enough.
dogs you can treat horribly, and they will still come to you as the most loyal thing on earth because they love you unconditionally. You have to work for a cat's affection.
Yeah.
So if a cat
Yeah,
is
no, I would
affectionate
have-
to you, it means that you've earned that affection. It's not just received for
That's
no
why
reason.
I like them. Yeah.
That's
Yeah,
why
I
I
would
like
get a
cats.
dog if it didn't mean that I couldn't really travel, you know. Because when you get a dog, it's like you have a child, and if you rent an Airbnb, you can't bring the kid. It's like, oh, sorry, my son, you have to stay at home while everyone else goes on vacation. You know,
Jonathan, don't you literally have kids?
Kids stay.
I have kids, yeah.
Yeah,
But
leave
we're
them at
talking
home.
about
The logic.
Leave them at home. Take your dog to the Airbnb.
I was gonna say,
Yeah.
can you just leave your dog with the kids and the parents or something? I don't know. Maybe leave them with the in-laws or something. I don't know.
But you know, when you have kids, you want to spend time with them, right? You want to bring them on
Oh yeah.
vacation.
I don't know. Maybe like probably.
I think
but
that's a matter of
not
perspective.
everywhere, surely.
That's a matter of preference.
No, like to be fair, like when I have kids, like yeah, of course I'll want them to come everywhere with me, but not everywhere.
Yeah.
Like sometimes I'll be like, okay, you know, like me and your mother, we're gonna go have like time away from you crotch goblins. You know, we'll see you later.
Forest
Like,
goblins.
yeah, like
God damn.
see you in a week or so. You know, we're off.
Week, yeah.
I
good
love
luck
my
with that.
kids.
Good luck with
Crotch
that.
goblins.
Staying away from your kids for a week. How you? Yeah, good luck with that.
Yeah, it's shook them with the in-laws, isn't it? But like,
Just
mum,
give them
I
a
don't
couple
know.
cans of tuna and they can like fend for themselves, you know.
Yeah,
See ya.
chuck 'em in a litter. Get a
Oh,
litter
we're
box.
talking about
Eat
taking
that.
the cats
Bye.
back.
Some water, you be
And you know,
sorted.
if you have dogs and cats as well, you know, they can definitely.
No,
yourself
dogs will die if you leave them alone. Cats
Yeah,
will
you can't leave a dog on
fend
the
for
Cats
street.
are
themselves.
self-sufficient, mate.
Yeah, dogs will be like, I'm confused. And
What
yeah,
I don't like
just
about
die.
cats is they eat birds. Anything that eats birds.
No,
like,
they don't eat them.
No, hold on a
They-
second, Jonatan.
they-
Just
they
think very
capture them.
clearly about what you're about to say. Don't you eat birds like chicken?
Yeah, but it's not like I go out
Yeah,
in
but
my
he's
garden.
just
and it's like,
he's
"Oh,
worried that he's
kill
gonna
the
start
birds."
competing
Mate,
with
Jonathan,
the cat.
you eat ox
Yeah.
tongue. You eat the tongues of animals.
Oh yeah, have you tried ox tongue? I did.
Yeah.
I did this year. Really? Have you tried
Bro,
it?
that's messed up.
Okay, not just ox tongue. I think that was ox shin. This good though. Very
Yeah, ox
very
tongue
good
is
stuff.
good. I have.
Ox tongue is
tried
good,
ox
mate.
Absolutely.
It is nice.
Nah, you
Sheep
weird, dude.
Sheephead is a nice delicacy in South Africa as well.
Yeah, and it tastes really good. But it's
Eye,
it's,
brain,
it's a
cheek,
bit of
tongue, whatever.
a bit of a weird consistency. But if you do it right, it's actually pretty good. Very fatty. There's a lot of fat.
Jonatan, Constantina says, if you don't like cats,
No.
it's because you're lacking patience, and you should look. And he says you should look into it.
Agreed.
Yeah, I don't have to look into it. I know exactly what I like cats. I don't have no patience. I don't like cats. I'm not going to look into anything.
That's
But thank you.
Jonathan's troubles every day. That's what he struggles with. You know, he's a swing trader, but he has no patience. Yeah,
Damn.
so every
Yeah,
time
it's
he's
weird
like,
though, but I think
I'm
I
sitting
think
there, I'm
like a
waiting,
curse.
but I gotta
think
get
my
out.
lack of patience is as soon as I exit a trade, I want to get into a new one. So it's just better for me to always be in a trade. I enter a trade and I stay in it for a couple of days, maybe a couple of weeks, and I feel calm. When I open MetaTrader, I open MetaTrader and I need to see something. You know, if I don't see any open positions, that is extremely stressful for me. I need to be in a position, which is why I'm a terrible scalper and a day trader. You know, because I always need to be in a position.
So Jonatan, you're like a
Yeah.
dog chasing a ball.
Or a
No,
dog chasing a squirrel or a postman or
no,
something.
not at all. Not even
The
close.
thing is, the moment you get the ball, you bring it back, and the ball gets thrown, you chase it again, and you will carry
No, I
on
think that's
doing that
very
over and
bad
over and over.
representation of me. I think I'm a human that runs with the ball.
Okay, so
No, but
I'm a human, actually. I'm a human man called
character.
Jonathan.
Jonathan would more like chase a ball like twice and then forget about the ball and then go be chasing
Not
like a
changing.
stick or something, and then he'd get interested in like a shiny like glint off a window and go over there, and then come back to the ball randomly, but then drop the ball
Yeah.
and then go somewhere else.
Yes. Thank you.
Thank you for that odd representation.
Yeah, that's we're getting personal here, but yeah, that's pretty much
There's nothing wrong with that.
Ooh, tiny
pretty,
thing.
pretty clear.
That's good. That's why we love you, Johnson.
Yeah, thank you.
Of course.
That,
I will say this.
Maya has a point here. I do not like animals that is eating flying small beautiful birds that has not done nothing wrong.
They don't eat them.
Chickens has also
Right.
not done anything wrong, but
Look, they catch
Chickens,
them.
however, they've done wrong.
Yeah, I was thinking those evil chickens.
Those bloody chickens, man. Don't get me started.
Jonathan's got something against them.
It's like saying the most evil corporation on earth is KFC because they're getting rid of all of these evil chickens.
Thank God.
Oh, dude, yeah, they're a blessing. Like, you know, that
Man vs chicken
that's
in
doing
the
God's
world.
work right there. You know,
It's not dog eat dog. It's man eat
beautiful.
chicken.
all right, guys. I actually have stuff I need to do, so I'm gonna have to jump off and leave it to you guys. Griff,
Sounds
I'm gonna
good.
watch
I'm
you
doing-
back
I'm doing the same. Thank
Ciao,
you,
brother.
everyone.
See you, Pedro.
Bye, Pedro. Have a good one.
See you,
Yeah,
bro.
right,
Take care.
Bye,
See you guys. Yo. All right, I will probably hang out with you guys, seeing as I've set up
Yeah.
here
Sweet.
awkwardly.
The more the
I will-
merrier, my friend.
Yeah, I'll pop back in a second. First because I need to go to the bathroom.
Alright, sweet.
But yeah, so if you guys got one of your screens you want to take over,
I have.
dude. Also, my screen right now is a screen for ants, so
What size is
it's
your laptop?
unidea.
It reminds me of that scene in
It's a good
Zoolander.
size, but it's like, yeah. Is this a
Is this a
thing for
museum
ants?
for small people?
Yeah.
What are we
So-
teaching ants?
So it's actually like a good screen, but the trouble is like the resolution is actually technically like too high, that when you put EV Mux on here, it compresses the screen for everyone else to way too
Okay.
small. And like I can't even read your. What is the bottom one? Bottom loss.
Highlight it in blue for you.
I was going to try
Is
and
that
help you out,
50?
LJ, by giving you my glasses, but
50.4.
Go on, as you got 50. Yeah, it was 50.4. My minus $50
Okay.
loss. It was. It was, but now it's like plus $200 up. I'm joking. Hopefully.
Nice.
Yeah, hopefully if all goes well.
But yeah, so that's the only trouble. Like it's typically good, but just how the stream thing does something. Yeah. Anyway, all right, I'll be back, guys. And
Alright,
cool.
sweet. Nice.
have you guys
Well,
noticed?
your setup's looking good.
Cheers, man. Dude, I'm getting compliments by everyone on my setup. I'm loving
The
it.
backlight looks very nice.
It took so long to try and. In fact, I'll click this. I'll click this button again. There we go. It took so long to do. I know.
Very nice. Looks great.
We have a
we
Muppet
go.
sitting in front of it. That's better.
Hang on.
Much better. I'm back.
Nice
Hello.
job.
Thank you. Yeah, I'm super proud of it. It took way too long to do, but I mean, it's done, so I don't have to do it now. And plus, when I come back from Asia now, at least it'll be ready for me to just fall straight back into instead of, because I was going to do it when I get back, but again, it was just going to be, an absolute ball ache. So at least it's done now, and I just get to come back to it and pick up where I left off. So I'm happy. Also, Griff, you'd like to know, mate, I'm swing trading at the moment.
Beautiful. Love to see it.
Yeah, these trades that I'm currently in right now are swing trades.
Beautiful.
Yeah.
They're looking good.
They're looking okay. They're taking too long.
They're looking agreeable at the moment.
They are, yeah. They're looking like they're doing all right. So we were looking at US 30. Now US 30 was doing well until it wasn't, and so I've scaled in here. Now it is looking okay. We were up about $100. Now we're only up about $60. My TP for my higher up order is $36. It's just to cover the commissions. So I'm $15 in swaps. So that's why my TP is at that. Otherwise, I would have closed it. And then my second order is about $61 in profit. But again, it was $100 up. So that's my US 30s. Now, this one I've been in since...
Yesterday.
No, yesterday? No, it wasn't. Was it yesterday? No, I've been in this since the 27th, I'm pretty sure.
No, did you hold it over the weekend?
Yeah. Hence
then it was
$15 commission. Swaps. And then, again, NASDAQ, I've been in that since, I think it was Thursday or Friday. Again, $305 up. So that's really nice. Like, the NASDAQ has been moving really nicely at the moment. I'm just waiting for everything else to follow. And I put it in the Discord. I put it everywhere. And I was like, guys, it's starting to do well. Just waiting for it to catch up. Just want it to move. Now, let me have a look at NASDAQ. There we go. We were up here. So, which was about $360 up on the NAS, which was really nice. So that's all looking good. I want to see a break and close above this, preferably within the next couple of hours. If not, I'm not going to be overly blessed with it. We were about $450 up before I came on stream, but we've dropped down to $310. So what can you do? We can only hope. Hopes and dreams keep us going. Yeah, and technical analysis, I suppose, but none of that going on at the moment. Gold is just, I don't know, it melted earlier. I wanted to be buying, but I've not found too much of a valid entry. I would have bought up here, but this candle was just too big, and I didn't think we were going to get the retest back into this zone just here. So we didn't get that, so no entry on gold. My intraday, I probably won't place an intraday trade today. GU chopped me up yesterday. EU's, again, not looking that nice at all. So I'm just in swing positions right now. I did add in a swing position on the S&P, by the way, today. I realized that I was like $100 for TP. That was miles away, and I thought, well, I'm only risking probably close to $100 on this anyway. So I wanted to see if I could increase my potential earnings by risking a little bit more, and that's what I did. In fact, almost bang on the identical. So I'm 2 lots deep on the S&P. I'm 1 lot deep on the NASDAQ, and I am 2 lots deep on USD. Oh no, sorry, no, I'm 1.5 lots deep in USD. Apologies.
I was about to say, Will, you can always just have a look at your terminal and you can see when you got into which trade. So
yeah,
I
literally did that. I looked and I was like, oh wait, no, I'm 1.5. Yeah, but That's me. That's me in my trades. Let me know if you guys are in any trades as well, chat. Let me know if you're looking at anything. Seen a couple of you saying hi. CC said hi. She's changed her name to CC the cat lady. Interesting. I like your background, William Davis. Thank you,
Is this for
CC.
the
She hasn't,
cats?
she hasn't seen my background yet. She hasn't actually seen it in person.
Have you guys seen
Is your girlfriend
the...
real? She hasn't seen in person.
No, she hasn't seen my new background. Yeah, I haven't. We've never met. She's AI.
Yes, yes. Just speak over the phone. It's like you're waiting to hook up. Yeah.
Did you guys see the reverse phase 1, phase 2 100K account with the fivers?
What do you mean?
What do I mean?
What
So
was that? Sorry.
there's a new 100K account with the fivers. So now there's two versions, 100K account version 1 and 100K account version 2. The first one is the good old faithful phase 1, phase 2. You need to make 8% and then 5% in phase 1 and phase 2. But now they've swapped that around. For December, you can have the alternative one, the reversed version, where in the first phase, you make 5%, and then in the second phase, you make 8%.
Interesting.
Oh yeah.
I wonder how that changes the challenge, like pass rate.
Well, surely not.
I think in theory, it should make the first phase pass rate higher because it's a lower
Of course.
amount that you need to hit. But I think it makes the second phase slightly more difficult. But maybe, hopefully, after passing the first phase, you gain a little bit of confidence, and then you try and trade the second phase with a bit more consistent action.
Hopefully overconfidence, right?
What'd you say?
And
Rich?
then you fail it.
Say again, LJ?
What did you say before? Because I caught half of it. Like I had my thing muted for a sec. I couldn't hear you. And I caught the back end. What was that?
So there's 200K accounts now on the Fivers hub.
Yeah.
You can have, for December, you can have the normal run-of-the-mill first phase 8%, second phase 2%, that not 2%, 5% that you need to make.
Yeah.
But now you have a reverse order version of it as well, where on the first phase you need to make 5%, and then on the second phase you need to make 8%. So they've swapped the percentage requirement. So we're wondering what kind of impact that will have on the success rate between phase 1, phase 2, and from phase 2 to being funded.
That's actually really interesting.
That's interesting. I think I honestly think that for traders will actually be helpful. That'll actually work better.
And the thing is, you can still only have one 100K account. So you get to choose which one of the two versions, but you can only have the one, obviously.
Yeah.
So when you go and buy your account, you have the option to have the standard 5%, 8% first and then 5% second phase. Or you can have the 5% first phase, 8% second phase one.
Well, in theory, you should pass both at the exact same time.
Look, your overall requirement stays the same.
Yeah.
It's 13%. You need to make 13% across phase 1 and phase 2 to get funded. That doesn't change. But the psychology going into phase 2, it might seem like it's less of a hill to climb.
Yeah, that's
if you've already made the 5% and you're like, wow, I've already made 5%.
Huh. I've never.
And now I need to make 8%, that kind of like thing. So I don't know, maybe on a psychological level, it might seem like it looks like less of a hill to climb.
I wonder why all prop firms have followed this format of having the first phase being harder and the second phase being easier. I wonder why nobody's done it the other way around before. It must be.
I think it was just monkey see, monkey do.
I literally about to say.
I think it's literally just like a standard.
This is the standard. Everybody's following the standard.
I think that was true. Yeah.
Or when you just have it as one phase, 13%.
Yeah.
Because it takes away the idea of achievement. If you've passed phase 1, you feel like you've achieved something. So it's the goalpost idea. There's a goalpost. I've reached it. Now it's the next goalpost. Where if it's 13%, it might seem like, I'm running a marathon when I'm only supposed to be sprinting, as an example. So it gives you
Yeah,
that sense
I suppose.
of
But then, if
something,
on the
reached
contrary, if
something.
you think about the trading industry, like once you do get funded, once you pass phase 1 and phase 2, then in theory that you should be able to keep that account for longevity. You could argue that potentially 13%, one single profit target, phase 1, 13%, allows you to trade it for longevity and not get bored and not chase hurdles. And I don't know, I suppose there's loads of different types of psychological ways that you can look at passing accounts and having account sort of targets.
I think the reason they have two phases is so that you don't pass it all at once. But then but a lot of prop firms have kind of introduced minimum profitable trading days now, so that you can't pass it all in one trade. So perhaps
fair.
the minimum profitable trading days kind of replaces the need
saves
to have
the
a phase 1 and phase 2.
Possibly, yeah, I suppose. I mean, it gets rid of the whole gambling. It gets rid of the I'm going to put 100 on black and then just hit for the hills. Save that full margin in NFP.
I
Because
would rather say that a
interestingly,
percentage risk rule is going to help against the gambling. Like saying you're not allowed to trade more than 2% risk, as an example.
yeah, I think unfortunately there's with prop firms, the people that make the most money are the ones that kind of abuse it and game the system a little bit, because you know we traders are using proper risk management. We're risking a fixed amount per trade, and we're trying to trade the account in a way that we never lose it. But somebody with 10 grand to spend can just buy a bunch of prop firm challenges, fail a bunch, win a bunch, and then they just have a big, they just open a trade on a news event, and then they can just make 10k, and then they just repeat the process. And quite often they can get lucky in a way that they make 50k off of a 10k prop firm challenge spend, and they're just taking random trades on news events on all the accounts. And that hurts us, because it means that they have to implement more rules to kind of block out these people that are gambling on the accounts.
Yeah. No, that's true. It's the idea that you're min-maxing your time versus what you're going to get back from the time that you've put in. So I'm minimizing the amount of time that I put in, but I'm maximizing the results. That is very much gaming / gambling in essence. You don't want to spend a lot of time doing this thing. I want to get the maximum amount of feedback that I can, and the feedback in this case is the financial reward. So
yeah, I know somebody who he's traded the same way as me for years, but recently he's kind of gone off and he's started his own trading strategy and whatever. And he was telling me about his new approach to prop firm challenges, where rather than trading it very cautiously, trying not to fail, he's just going in with 2% trade, 2% risk, and then ideally he just has like a 4% winning trade, which would be passing the first phase just in one trade, and then he'll do the same again for the second phase, 2% risk again, and basically as long as he has 3 consecutive winning trades, then he gets a payout, and he'll just keep repeating that process, failing challenges, just trying to get those 3 consecutive winning trades with really high risk percentage per trade. And that way he just gets payout, but at the cost of failing challenges, but overall he makes profit. But yeah, I'm not a fan of that approach. I'd rather have a that I can keep forever.
I agree. I'm not a fan. I can
Not a
also
fan.
understand where some
We
people
want
come
multiple
to that
payouts,
conclusion. Yeah, or even that there's been, like, say you've signed up with a certain firm and they've been less than legitimate. I'm just saying, they're a bit, bit sketchy, right? And so I think there's a lot of people that also have been burnt, right? And so they view then the sphere very differently, right? And naturally, what are you going to do? So I would say if you found an actual legitimate firm that's been here for a long time, has the credentials, has the background, has everything else, trade it properly, do it properly, all that kind of stuff, right? Don't put the same blanket assumption on everyone, because people are operating very differently. Because I can very much see where a lot of people come to that conclusion, especially if you've been burnt like that, like I have from other firms,
Yeah,
as an
100%.
example. And you start to then go, well, why did I do all this, right? What? All right, this
What's
is
the point?
that kind of. So I can understand it, but I would say yes, if you found the top tier firms, so I would say there's probably 3 or 4 total, like top tier that you can really be qualified. I would firmly say yes, 100%, and no question, right? So 5 is definitely one of them, and the rest, it's all up for grabs, up for question.
Yeah,
So
literally.
if you're in one of them, though, treat it properly, treat it firmly, treat it like a career, treat it like a business, all that kind of thing, and you'll do very well, and you will, in reciprocal, be treated with the same respect, the same regard, the same care, all that kind of thing. And I think that's the piece where people go to that measure, being that I'm trying to take care, and then I've been clapped, right? And understandably, people get mad. So I think,
But at least the fault is not on your side. Like if you get clapped, then you know, okay, it wasn't due to something that I've been doing. It's this place or this person that has gone and screwed me. Where if you've maintained innocence, you've traded within a plan, you've not over risked, you're not over leveraged, you've stuck to your guns, and you then get rewarded for it, then you feel great. But if you've done the gambling side of things, at some point, even that great company is going to turn around and say, hey, listen, we don't want to deal with you anymore because you're too much of a risk for us.
Yeah, that's exactly.
You can burn bridges by keeping your approach exactly the same, just because in the past you were burned. Because now your assumption is that every other company is the same as the one that burnt you.
Yeah, and so that's what I was saying. Like, treat it like a business, right?
Yeah. It's like that logical approach is outside of the door.
Yeah.
Yeah.
So the same way, if you're working with a firm, like you wouldn't full port something, just go ham on. Like, no one's gonna invest in you, give you money. Like, if you try to go outside, aggregate money, or even if you're buying a property or a business or something, you paid over sticker well beyond what the business is worth, and you took on excess risk and did all this, like, of course you'd be out the door.
Yeah, 100%.
Right?
I like the way you emphasize it and relate it to business, because it is, at the end of the day, trading is a business, and no different to how,
100%.
like, in my opinion, like treating my funded accounts, even treating my phase 1, phase 2 accounts, I will have the tendency to maybe risk a little bit more phase 1, phase 2. However, when it comes to risking on my any trading account, I'll actually put phase 1s, phase 2s, live funded accounts all on trade copiers on a master account, and sometimes I'll, like, this is my master account at the moment. However, sometimes, like, I'll actually trade a master account as the demo account, just because I don't care what is hooked up to the back, because what I'm trying to achieve is consistency. And this is why, like, I don't like the way your friend trades, Griff. And the reason for that, I can see, I know boys, fantastic traders who trade the exact same way. They call it like prop farming, where they'll just rinse and repeat. They'll blow 5-10 accounts, but they'll pass like 3 or 4 accounts, get huge payouts, and then move on to the next one and keep going and rinse and repeat. You can't do that if you're trying to develop a relationship.
Exactly.
If you called, let's say with a partner, for example, if you called a girl up and you wanted a long, sustainable relationship with that girl, but you never took her on dates, you never bought her flowers, you never did anything nice with her, but instead you booty called her at midnight.
And you're still talking to other girls at the same time.
Talking to other women, exactly.
Yeah.
You're only calling her to booty call her, and then it's toxic. It's bad. Like you
like,
can't.
I love hanging out with you the most, and majority of my time I spend with you is right. Like, come on, like, that's ridiculous.
You can't expect to keep that as a healthy, consistent, sustainable relationship, and it goes the same with props, in my opinion. I'll look at it as a business deal. I'll look at it as in a business relationship, and I'd be like, right, okay, I need to stay as sustainable as possible, because even if I blow the account, that tells me more information about my trading and about my equity curve and about all the data that I'm collecting. That tells me more than if I was to just think, yeah, screw it, I'm going to see, like, I'm just going to pass and go. I'm going to fail and
Max this.
go again.
Sustainable is the word. I can see in chat a couple of people are saying, you know, the objective is to get a payout, even if it's ugly, whatever gets you paid. And I do agree with that to some extent, but I think the point that I was making when I mentioned this is that you don't want to be trading prop firms with a short-term mentality, because you might get one payout. And sure, it might be one big payout, but there's only so many times you can do this process before prop firms maybe restrict that kind of trading activity.
They just ban you.
And the reason it's bad is because a long term is the mindset you want to be having when you're trading prop firms. You want to be getting multiple payouts. You want to be trading prop firms in 30 years. You want to be trading a prop firm account like you're trading your personal account. So that's the first reason, having a long-term mentality instead of a short-term mentality. And the second reason is because people that trade this way on prop firm accounts make it harder for everybody else, because prop firms have no choice but to make it a little bit hard, that make challenges harder, introduce more rules to try and block these people out that are gaming the system. And then that makes trading harder for the people like us that are trying to genuinely have a sustainable long-term relationship and, you know, regular, consistent payouts. So that's the main issue.
Breaking our women that we want relationships with.
Yeah. So exactly that. Like you were saying, Griff, with like trading, like if you're doing that, is it a hobby or is it like a career? Like you trying to do this properly, or are you just kind of messing around? So, and even if we use Will's example, are you trying to mess around, or you got an actual relationship, right?
Yeah. Are you trying to get married, or are you just flinging about?
Yeah. So if you're just going to be, you know, cooking around with accounts and that kind of thing, then it's only going to go so far, and then it fizzles out, right? You're better off building that long-term stable thing that you've actually got a craft that you can go on and do this for however many years. Free markets, trading still exists until AI deletes us all, I guess. But you know, hopefully it'll keep going on, right? But you know, you got enough time between now and then.
Like I was thinking about jobs that are potentially replaceable, replaceable and irreplaceable for certain people. And I thought, what jobs would be replaceable? Like what jobs do you know that you're guaranteed a job, even if AI gets so advanced? And I thought,
plumber.
Yeah, I thought like
straight up plumber, mate.
Yeah, you know, plumbing, gas engineers,
plumber, roofing, that kind of stuff.
Roofing. There's so many jobs out there that would probably actually cost more to have AI run it than it would to actually employ staff to do it. And then I thought, I wonder if my job's secure. I thought, not a chance. I thought, not a hope in hell is my job secured as a trader when AI fully develops. Like my only chance to stay successful,
I think not day trading. I think the only thing that will exist is like investing and like macro stuff.
Yeah.
Because then you have the human element, sentiment, government, that kind of stuff, which AI is really.
Even then, though, even that could be taken by AI. All they have to do is understand fundamental moves and fundamental data analysis.
Look like.
Yeah, but that. The thing with that is it's never clear, even when you calculate everything.
Yeah, fair, true. Yeah.
Like that's the whole point of macro. You've basically just got a higher than not probability.
It's all speculative
chance of flipping a coin. So yeah. So it's just you're trying to get greater than 50-50, and if you're one of the best macro players in the world, you still got like a 70-30. Like it's not that big, because the thing is the timeline is too far, that there's too many variables between now and the exit point that can change, right? So hence the same thing with AI or whatever. Like it depends what kind of rights they get. That, you know, are they going to predict Trump and what Trump does? How he talks, right? You know, and then that's where they mess it up. And his decision.
But how quick would they be to react if they don't sleep?
So his ridiculous decision making.
Yeah,
they couldn't, you know, properly extrapolate those positions. Even if you had them now and say they were fully capable, they would see pretty much equal 50-50. They could be rational or irrational. And then so in terms of placing a trade or making executions, they'd be stuck, right? Because it depends what side of the bed he wakes up on this day or the next day, that he'll choose violence or choose calm and friendship. Like that's it. Like it's literally, it's human, stuff. So I think we're quite away from AI recognizing
100%,
to
yeah,
that
100%.
depth. Like there's
We're an
levels
easy
of
100
depth,
years away from that,
like
if not longer.
derivatives. So,
But it is interesting. It's. I was there thinking, I was like, I think our only way as day traders to be able to guarantee a place in the markets, if that happens, would be to either own or program or develop an AI that would be able to take your job, and like you own that.
yeah.
It's all open source at this point in time.
But the trouble then is like data, right? It all becomes data.
Yeah. Well, yeah, exactly that.
Yeah.
But the thing is,
like,
it's like
rabbit hole,
did you
mate,
guys
rabbit
see
hole.
where they took two AI. It's all over the internet. Like they take two AI. I don't know if it was ChatGPT or if it was Gronk or whatever, but like they had them kind of like have a discussion with each other, and the discussion leads nowhere. It's just cyclical. They just talk around the same. It's just continuously around the same thing. And the thing is, it's the idea that it needs prompts. It needs input.
Yeah. I was going to say, don't forget, AI isn't human.
If you just think about that, it's not AI. It is just I'm giving you a prompt and you're giving me a response. I'm giving you a prompt and you're giving me a response. It's prompt related. It's not thinking for itself. It is drawing all of its information from sites where the information is already known.
Yeah.
So it's not artificial intelligence, it's just artificial. Because
exactly that. It's not intelligent. It
doesn't
not
understand nuance when you're talking to someone and you're raising your voice a little bit to convey something. That can be, I'm trying to gain your attention, I'm trying to talk over you, or something like that. AI doesn't know how to like put this together and say, oh, this is what's going on.
Yeah.
Because it's monotonous. It's one tone constantly, and it's via prompts.
I was going to say you hit the nail on the head there. It's prompt. It's if statements. It's if I say that, you do this. It's basic programming from which we've had for decades. Well, maybe not quite decades. Maybe decades. It's basic programming. We're just putting it in new form. That's all it is. Because like you said, Rich, you hit the nail on the head. It is prompts. Hello, Griff. Is your Wi-Fi back?
Sorry, connection died.
I noticed you drop off, and
Damn,
there's Wi-Fi issues
AI
all over the
bots
place, mate.
destroying your.
It's AI,
internet.
mate. Blame AI. But I think that's the thing. Like people blame AI for stuff. It's like, oh, AI is going to take our job. Well, if AI was going to take our job, it probably could have already. We're not, and that's based on the fact that at the moment we're programming AI to give response to prompts, a bit like what Rich said. We haven't got the intelligence there yet. We're not at a stage in AI where it's free thinking. It is literally just gathering data and knowledge and understanding codes that it currently exist.
Okay, but consider this. You're working at a place and there's an HR group, and the HR group's responsibility is to hire and fire people, just like simply hire or fire. And you give them prompts and say, if this, fire. If this, hire. And the thing is, you're already taking the human component out of the HR process, and you're allowing it to go over to AI to hire and fire people. Now, if you have one mistake and you fall within the fire category, congratulations, you're fired. Or if you've found a way to, I don't know, disingenuously change information about yourself that would make you fall within the higher category, congratulations, hired. And that is already happening, where HR industries are already saying, you know what, a bot can do this. And they've done that. And they've had
that is doable.
massive errors. So it's already at the point where some people are losing their jobs because of AI. However, AI is nowhere near where it could be in order for it to be able to take everybody's jobs.
Yeah, but
It's still just a prompt system.
like you just mentioned in there, though, you know, there's still grey areas, you know, where some may consider and be like, okay, actually, this wasn't your fault. Like, this could have been avoided if the company did something different, or if the staff around you did something different. But you, unfortunately, were taken down with this one. Don't worry. Let's move around this. Let's see what we can do better as a company. If it was AI, like you said, because there's prompts. And it doesn't take into consideration grey areas. It doesn't take into consideration other aspects. It is just an if statement. If staff does this, fire. Okay, boom, staff done that. Tick the box. You're fired. You know, it's like, oh, I'll actually hang on a minute. I couldn't come into work because servers went down, or I couldn't do this because server went down. They may not take into consideration server errors, which would then take a manual override from a human. So therefore, like, again, you've just hit the nail on the head, how we're not quite ready for AI to potentially take the jobs that it is taking, because we still need potentially humans there to override certain aspects of that job.
Yeah, it's far from perfect, and it makes mistakes quite often. It often has misunderstandings, you know what I mean? Which would not be ideal in the workplace. It's also very agreeable. It's like, you shouldn't fire me. And it's like, oh, yeah, you're right. We shouldn't fire you. Here are all the reasons we shouldn't fire you.
I think that's the reason why I'm not ready to automate my trading yet. I'd love to, but I'd still be a little bit worried. Like, the only time I could automate my trading was if I could maybe use it in a way that I'd... Like, for example, now, let's take my my US 30 trade in. You know, so my US 30 trade, really nice. No, this is NASDAQ. US 30 trade, really nice trade. And, well, truth be told, actually, if I automated this strategy, I'd be in a lot more profit right now. Thinking about it, I've actually made the mistake more than the AI would have. But nonetheless, let's say the AI took me into a trade here, and it was waiting, and boom, I was in a little bit of drawdown. I'd be looking at this thinking, okay, you know, I'm actually going to enter in here because I got a manual human confluence here that wouldn't be programmed into the AI. However, let's take into consideration NASDAQ. You know, NASDAQ, probably I would have been closed out in this for just over break even. You know, however, now I'm in $300 profit. But if we zoom in really close here, technically there is a break and close under the moving average, which is an invalidation for me. I don't want to see a break and close below the moving average. Otherwise, I'll close out. Now, however, it didn't really break and close under for me. It came back into this area here. Wick, 4-wick rejection, even though technically there's two breaks and closes, well, technically one break and close under, and then the other one was just an open. So one break and close under the moving average, but it was still a wick into my zone. So the AI would have closed that and made a mistake, whereas me, I would have held this open knowing that, okay, this is actually a longer plan. Like I can see the overall picture.
But the thing is, it would have been a mistake because you would have programmed it to do exactly that, close when invalidated. Your description, the invalidation was price closed below 200 EMA. It's not a mistake. It's the thing is, there's no intuition. There's no the human factor.
Thank you. That's the word I was looking for earlier. Intuition.
I'm going to follow said rule. That's it. That's all it is, and it needs to be programmed in specifically. There's no discretion at all.
No, exactly that. Like you said, it has no intuition. It has no free thought.
That makes sense. Yeah. So exactly that. Like, I think like we've already got that. Like you look at like Jim Simmons with Medallion Fund, which is basically algos, prior to current AI, you know, with like prompts and all that kind of stuff. But basically the same thing. So I think now it's just more accessible. I think there will be a bit of a gold rush between now and whenever it sort of peaks and takes over, that people can utilize that kind of thing and not abuse it, but abuse it is kind of the word. Like they utilize in an abuse way, right? Where you can automate your strategies, that kind of stuff, have it hyper fixated just on the raw data, that kind of stuff, remove the personal thing. Now, the other portion is that sometimes the personal thing is better. And I think even after they sort of start to take over, there will be an element for that personal application. But
yeah, it'll be the tinfoil hat.
I think we'll see how long that takes to take over, because typically finance is actually one of the places that a lot of this develops first in terms of
true that.
all these technological applications. Same with algorithms in general. Like we've now got social media, all this kind of stuff. A lot of those are derivatives of the finance applications, where because obviously finance, trading, stock market, that kind of stuff, it's money. Stuff follows the money first and then goes elsewhere after. But it's going to be interesting to see how much we can get AIs to actually glue on to human elements, which are kind of all over the place, kind of spastic.
I don't think they'll
right?
ever
Like
happen.
I think that's the trouble. I think they'll have a very good time. They'll be very profitable, but I think there will be some element. I think it will just like every other industry, it will cut out. It will just be the top tier, and all the rest is just deleted. If you're either the top of top or you're gone.
You're either Bitcoin
It's
or
hard.
you're a meme coin.
Yeah, yeah.
Yeah. And that at that point, everyone just invests, because you invest with that stuff and everything goes up, and that's probably the way you go to do it. So
Yeah,
it's weird.
fair. Yeah.
I think
Also,
for now we've got a time and period in between where you can take advantage before that. And it's very
I
important.
like this comment here saying there is a reason it is called artificial. Artificial intelligence is just basically translates to fake intelligence. It's not real intelligence. It's programmed to look intelligent. It's not actually. I think the minute we have intuition come in, and again,
Yeah.
I don't think it can. It won't be artificial intelligence anymore. It'll be robotic intelligence. It'll be genuine intelligence, and I can't see that remotely happening.
Yeah, look, okay, so the other portion is you have to be very naive to think that whatever is released is the maximal of what they're holding on to.
Yeah.
Yeah,
Right?
yeah,
You'd have to be
exactly,
extremely naive. So
yeah.
same with the world of biologics, right? We're going into chemistry, biology, that kind of stuff, with drug type animations, that kind of stuff. Obviously, they're going to be massively ahead. And if they've developed a model where all of a sudden they're printing all sorts of developmental drugs or this kind of stuff, you think they're just going to be like, yeah, here you guys go, right? No, this stuff probably already exists. And so this is the thing with the AI thing, that there is someone that is going to come to the cusp of where they've been backing up so much backlog of this, where they're so ahead, and now they're confident enough. They believe that they can now, deliver to the market and say, we think we've backlogged enough to be the top dog and take over. And it'll be overnight where all of a sudden everything is just washed out, because it will just be full deployment, done, that's it. And that's my main concern, is that there won't be a warning. Yeah, it will literally be that. It's just bang, you just got nuked instantly. Like there's no right.
Yeah, you just get absolutely flooded full of the new age, should we call it?
Yeah, and you can already look at the Ford models that recently, in the past couple of months, have been they've tested them from zero to like recreate our entire understanding of physics, and they've done it, and then gone beyond, and they're starting to find new stuff. But they were trained from zero. They didn't train them on prior, scripts of what we and. Yeah, that's a scary part, I think. I'm very sure a bunch of people are hiding this stuff. So
another scary part of AI is I don't have an old phone on me, but let's say, for example, let's pretend that this is like the Nokia brick. So this is the Nokia. This is the old phone. This is the prehistoric phone. Prior to BlackBerry. Prior to all that, which was again only. Probably
5110s, mate. 5110s.
Again.
Yeah.
Nokia 5110s.
Yeah, like prior to the BlackBerry, which at the time BlackBerry was like, oh my god, you are living in a space age if you had a BlackBerry. Like, yeah, I remember like my dad having a BlackBerry and like playing games on that, and I was like, oh my god, this phone is incredible. But like you imagine this is just standard crappy little Nokia, and then now this is modern day phone. This is where we are with AI right now. What's worrying is when we get to here. And like, look at the time scale we got
And
to
it came
there.
out of nowhere. Even with the iPhone,
yeah,
it was all of a
that's what,
sudden like,
I
that's
mean.
it. Like, there's nothing else.
When did we have
Right?
BlackBerry? 15 years ago?
And just got deleted. Yeah.
And then
The same thing.
boom,
Like, I've
next
got
minute iPhone comes out, like, surprise. We're just
Sony Ericsson, right?
yeah,
With the
yeah,
MP3 player on the back. I've got
Yeah.
one of the old Nokias back in the day. These were one of the really expensive ones that like flicks up, flicks down. I don't know. The lighting's terrible, but
That's awesome.
these guys were like a big boy. Yeah, so I know
Yeah,
exactly
exactly
what
that,
you mean.
man.
Yeah, fuck.
I remember having a BlackBerry. I think it was in 2001 or 2004. I can't remember. It was way, way, way long ago, 20 years already. And then by that point, BlackBerry was already at its peak. Because you used to have BlackBerries, I think, like 1998,
Yeah.
somewhere around there.
Yeah.
Not
From
entirely sure.
earliest, yeah. From earliest, yeah.
Yeah, it's been a minute, mate. It's been a minute. There's somebody that's been asking some questions in chat. I think we've been neglecting chat for the last hour or so.
Yeah, I think we got a bit carried
wanting to
away.
ask about analysis on gold.
Yeah, no. So I was keeping an eye on. So, quite frankly, so gold. We were talking earlier with when Pedro was on. So either this. So you basically had 4192, and then 4185, 82, and then there's another level at about 75, right? So we were talking before, roughly in this zone, this kind of pocket right here. How do I do a square? I'm going to use a brush. I'm on the wrong computer. So this square was basically either we take another slight dip down to the zone, or this is the exact pickup. So I've gone long from here, as you guys can see, still sat in this. This is basically my TP1, TP2, TP3, and then see if we go beyond that from here. So these lines I have on here are basically a standard deviation channel. So this middle point, this is the middle, basically average price, one standard deviation above, two standard divs above. So right now we're reaching the one standard div price. Two standard div price comes right up to the TP1. Now, if we're able to break that, we go to the next level of resistance up by this trading cluster up here, nearby the highs, and then up towards the top. Now, I've got these set a little bit below the actual tops for the sake of like TP, so make sure you get hit, that kind of thing. But potentially after that, we could break and go up towards 4290, and then I've got 4330 a bit beyond that, which is up near the all-time highs. But yeah, right now, that dump with gold early in Asia was very good. We also saw that on silver. So this is on a different account that I have, another silver trade as well from here. So
Very nice.
there you go.
Sorry, guys, I've just seen one of the comments. Oh man, that's just
Very lovely
Also,
comment.
Palkan, I'm not gonna bring that comment up, but what a lovely human being.
Pooley to the defense.
Truly, you legend. Look at you go. Sorry, man. I was just scrolling through chat.
I just saw this now.
Just having that chat, and I saw that. I was like, oh my god, dude, what a.
Don't worry, I agree. Parker. This guy, like, you know.
This
You
guy.
should hear him on a Friday night, mate. Woo!
Yeah, goddamn.
Wow.
So as far as the charts, I was going to say, Griff, since we got you here, right?
Yeah.
Ord NZD on like a swing trade.
Are we looking at cells?
Hang on. So we go to the weekly here. All right, so this is a weekly. So this has been a long time coming. This is like since 2014, 2015 type situation. Right, but we've broken out above this kind of range. And now we're looking potentially up towards 1.25 from here. Right? Interim standpoint about 121. So I was curious on what you think about this. So this is obviously a weekly. Like we've come up, we've punched through it, we've come back. We're basically testing these prior weekly closes in particular. Like you can see the close of the bar. So, but I mean, this is looking pretty healthy.
Yeah, I mean, on the daily, I can see it's been in a big uptrend, but it looks like we've seen a little bit of weakness. I mean, there's a huge. Maybe I can bring my charts up,
Yeah.
and then I've got to shoot off. So obviously, I'm barely a swing trader, LJ. I trade the 1 hour, so like I wouldn't go this high of a time frame normally. But yeah, I mean, I can see what you're looking at. I would say a bit of weakness here with this wick and this shift down, and actually on the weekly, another perspective that you could have is that we've just broken above kind of this whole area. We've got this downtrend in prior price action, so it could be this kind of move, and then further to that on the 1 hour, you've kind of got it again. Where you've got this. So I would say it looks likely to move down. But fundamentally, I've got a friend who trades fundamentals. Wait, what was he saying? I think he's got a bias for... God, I don't know. Is it strengthening Aussie or weakening Aussie? I don't remember. But he's got this really strong idea with AUD NZD right now. He feels like, I think he was saying that he thinks AUD is going to get weaker and NZD is going to get stronger, which would suggest price going down as well, I believe. So yeah, I would say that I think price is going to go down, but you think it's going to go up?
Yeah, so I'm thinking so I'm going to pull back towards like 130 or so, right? And then you take a extended long beyond that.
I could see something like that.
Yeah, so just as far as the as far as the macro side, like obviously Australia has everything going for it now with the whole rare earth mineral type situation with the US, China, both of them wanting our stuff. Interest rates going high. New Zealand's had problems for a long time. It's actually surprised me quite a bit that we stuck in that sort of channel for some time against the New Zealand dollar. I would have said we should have been probably significantly higher than where we are. So I think now we're starting to see that. Now, part of that has been between the risk on, risk off stuff over the past while, including COVID. And prior to that, New Zealand was actually doing pretty well. But it's basically this year that I would have expected we accelerated a bit faster through that break, which we have in the past number of weeks, months, right, since May. But even then, I would have expected it to be a bit quicker. So we're now finally breaking beyond that. We're coming back to test some of the prior tops. I think if we get another downtick to about 113 to 112, anywhere in that range, long-term swings, right up to it's pretty much at least 122.
22.
And then towards 126 potentially.
Interesting.
Something like that, roughly.
I can't quite remember what my friend was saying, but I think it was something in relation to Australia's economy being dependent on mining, and I think he showed me a mining index which was going down, and I think I'm talking out my ass here. I think then he was showing me how the New Zealand economy is based less on mining, and I think based on this whole idea, he was thinking that AUD is going to go down, NZD is going to go up, so selling AUD NZD. But
Fair. I would say mining has been in a slight downdraft because of the Trump/tariff turmoil of people wanting to, how they're going to position and forward forecasting, because all of those projects are like not like the next month, 2 months, whatever. They're ongoing projects for next years. The other thing I would say though, that New Zealand's entire economy is less than our mining economy.
yeah,
For Australia. and the mining economy for Australia is like,
I was going to say Australia's huge
11%.
on its mining anyway, isn't it?
so and even then the mining for Australia is like 11% of the economy, and the entire GDP of New Zealand is less than our mining portion.
this is why I don't trade fundamentals.
Yeah. So
Yeah, this
No,
is why
thank you. I'll
that
keep an eye on
one.
it, on this symbol.
yeah, I just thought it might be something interesting, like especially on a pullback, for something to continue. As far as interest rates, that kind of thing, I think the main point to look at is like interest rates in regards to homes, like lending, real estate, that kind of stuff as well, because that's a big portion for New Zealand and Australia, for sure.
I've got to go. Sorry to cut in. Good talking to you guys, and I'll see you next week.
See you later, Griff.
Lovely to see you,
Thanks,
Griff.
boys. Have
See
a
you
good
next
one.
week.
Bye.
Can we all get a thumbs up in the video as well for Griff? So guys, if you haven't already, smash that
Same
like
here.
button, hit the subscribe button if you are new here, and thank you very much to Griff.
Yeah, dude, that's a very interesting discussion that you and Griff just had now. And his friend, which is like he said, a fundamental trader, has a completely different viewpoint to yourself, LJ. And you're also very much a very clued up person when it comes to the fundamentals. And it's the exact same concept within regular technical trading as well. You're seeing the same thing, but your analysis or what you take out of that analysis is completely different. It's so fascinating.
Yeah, definitely.
Yeah,
So a lot of it comes down to interest rates as far as Aussie, New Zealand. And if you take, like New Zealand is almost like the higher beta version of the Aussie dollar. So almost the same thing, but New Zealand dollar high beta, like even more risk. So at the same time,
kind of a thing.
yeah, so at the same time, when there is positive sentiment around New Zealand dollar, you can actually move a lot more aggressively than the Aussie, and therefore technically sort of outperform and push the Aussie around just because of that lower liquidity, high beta type action, even though necessarily it's probably worth a bit less, but that always corrects over time. But hence, when you get those kind of systematic breakouts over like long term periods, they tend to continue to run, right? So, yeah,
Interesting.
something to look at.
Mr. OGG once said NZD are finishing their easing cycle, which is bullish for NZD. Is that what you've come to realize with them as well? Like whenever they're completing their easing, or when they're easing, it's actually more bullish for the NZD, and once they've come to the end of their easing cycle, that it will become bearish again.
Yeah, definitely. So that is definitely part of it. Like they did start earlier. A big portion of that was the housing sector, where they were getting absolutely crushed. They also accelerated. They're one of the first sort of developed nation central banks to actually lift rates ahead of the whole inflation saga back sort of 2022 type situation, right? So arguably they were, they raised rates well above what they should have, and they also started cutting sooner because they saw major pressure. We've seen a major exodus from New Zealand, like in terms of people living there, like the population coming over to Australia. We've always had that, like
Declining.
in general, right? In general, people come over here, but there was a massive exodus of the populace from there over to Australia. So, yeah, I agree. They are probably slightly closer than Australia for their rates. That said, the rates in Australia, as far as the inflation and how the central banks, I don't necessarily agree with how the RBA operates. I think they've been very wrong on a number of calls. And this also comes back to the distortion with, it's not just economic principles, like they have to concern about the housing portion and how that runs. Because of the amount of indebtedness that people have just from mortgages and housing, and we have variable mortgages, so as soon as they go up or go down, it affects the entire country. This is a massive lever, very different to the US or other countries. So that's where you get the distortions. I think, though, the economic factors outside of rates itself, New Zealand will slightly lag versus Australia, and we'll get a pickup in Australia, as well as the further capex expansion in Australia, etc. So I think that will still dwarf overall, like FDI, so foreign direct investment into Australia, which will thus, even though Australia probably has more room to reduce rates, New Zealand is roughly at the bottom, maybe one or two more, that will still outpace that as far as New Zealand. So we'll get more growth overall.
Awesome. Love that.
And it's also the direct window to China, assuming the trade thing settles. Everyone finally comes to an agreement that, like, okay, we're chilling out now. Australia, more than New Zealand will benefit as well, but Australia will be the main benefactor. And then you'll see the currency just pop as well.
Supply and demand.
Yes.
Awesome. Right, no trades for me on the intraday point of view. However, I have still got these open. They're looking okay. They're sort of consolidating a little bit. So just going to wait and see what happens. Hopefully we can take the highs. NASDAQ is looking... The S&P is looking okay, but I'm not too fussed on the S&P at the moment. NASDAQ's looking good. I'm just waiting for it to break and close above this high zone here. If we can do that, I'll sort of see where we are as in according to the P&L, see where we are according to what's going on, and maybe on the lower time frame and on the higher time frame, just so I can get an idea on whether I should close or hold them open. We have got a lot of news out tomorrow. Same goes with US 30. So US 30, if we can take these highs, if not, I want to see what happens once I've hit the TP up here, which would take me out of my break-even trade on this losing trade and about $200 on my current nicer trade. So we'll see how that goes. But for me, that's me done for the trades for the rest of the day. Now I'm just gonna enjoy the rest of the day, go have some lunch, and then go chill.
Fair. Are those your swing trades from the other day?
Yeah. So the top. Yeah. So these three here. So these two here, I've been in since last week. So last Friday, I believe. This one here, I've been in since yesterday, and then these two I opened up today.
Fair.
Yeah. So I'll probably hold those. Usually, I'd be holding them for probably around about a month. But with the fundamentals that we got coming out at the moment, I'm not risking it, especially with NFP tomorrow.
Yeah. There's a lot of variables coming out over the next 7 days before the Fed, and then we've still got the later payroll after the Fed as well. So
I'm probably just gonna close. Yeah. I'll probably end up closing these pretty close to tomorrow. Hopefully, if I can, tomorrow London session. If I can, I'll close them later on this evening, but I can't see that happening. It'll probably be tomorrow London session now.
Yeah, fair.
Awesome stuff. Right, guys, I'm
Right, man.
going to skedaddle. I'm going to shoot off now and go have some lunch. I know that I can't even remember his name. Palkin. I know that M Palkin's going to be a very happy guy now. I'm off. So thank you very much for joining, everybody. Thank you very much for listening to me, even if you do want to gouge your eyeballs out and stuff them in your ears. I shall see you. I shall see you all tomorrow. I'm going to love you and leave you. Massive thumbs up to the video, guys, if you haven't already. And if you are new here, make sure that you subscribe to the channel. And we shall see you all el mañana. Thank you very much, guys. Take care. And a big warm welcome to the new two fantastic hosts, Amir and Victor. See you later, guys.
Take care, Will.
Peace.
Thank
Bye,
you.
Hey guys, how are you?
Hello.
Hello.
How are you? Hello, Victor.
How are you doing,
How are
Samir?
you?
How are you doing, Victor?
I'm good. I'm
Hi.
good. How are you?
How is everyone?
Going well. Going strong.
I wasn't asking you, LJ. I mean those watching us here right now, the audience. How is everyone? No, I'm just kidding, LJ. I'm just kidding.
I'm good, Victor. I'm good.
I'm happy to hear that you're good. How was your day yesterday and so far today?
Not too bad. Difficult as far as the stream, trying to get the stuff set up. That's why I'm in a different location and everything. But I think I've got it sort of functioning now. So, we're dealing with it. Put it that way.
We're surviving it.
We're
I
surviving.
know. Typically our health is a private topic. But how is your health going, LJ? Just between the two of us, right? And anyone else is not hearing or
Yeah.
listening in. How are you doing on the health side of things?
It's better. It's definitely better. I'm more chill, more relaxed. I will say I definitely need a pause period over Christmas. Yeah, definitely. I need just a nothing break, that kind of thing. So
A reset.
yeah, doing better. Yeah, reset, that kind of thing. Yeah, and like a bit of time to get stuff in line, that kind of thing. But yeah, doing better than I was. Put it that way. Yeah.
Great. I'm glad to hear that, and I'm sure
progress to go, but yeah, doing better.
Yeah, I'm glad to hear that. I'm sure everyone listening in as well, because you mentioned it. I make a joke about it that it's private, but I mean you mentioned it not too long ago that you had you were a little bit under the weather, so to speak.
Yeah, that's fine. I'll talk about it in general decree, I guess. Right?
He was in prison, guys. He was in prison.
Health is the cold war for the prison situation. Health, yes, health.
That's it. But yeah, no. So yeah, I mean, look. To be honest, looking forward towards the end of the year, Christmas, that kind of stuff. A little bit of a break, a bit of a gap, some time off. Come back into the new year, refreshed, reset, all that kind of stuff, and definitely smash out some stuff for you guys as well.
It's been a long year.
Yeah, and also going to the new year, possibly open up an account to run the whole year for you guys. Let's see where we get
nice.
to. Which
nice.
will be fun. So, yeah.
Might just join you on that one.
Do it, Rich.
I like the background lighting, by the way, LJ. It's kind of cozy. It makes me want to take a glass of wine, sit next to you, have a deep conversation. Low lighting. I like that.
Funnily enough, like I've got all the lights on, but for some reason it's my camera. Like I even have a light right next to me here, but it's just not picking up on the camera at all. So it looks really dark.
I like it.
Even though for me it's really
nice and moody.
Yeah.
Feels
like
you're Batman. I am Batman.
You're it kind of is, the lightning effect restaurants do. They focus on the table. They focus on the person sitting ahead of in front of you, but everything else seems a little bit like not so well lit. But that's the intention, so you can focus on the important thing. So I feel like that with your lighting. Like you are the center. The centerpiece. So good. I like it.
Yeah.
It feels like Victor is saying that LJ, he would love one day to have an opportunity to have a candlelit dinner with you in a nice, like,
You want to go on a date, Victor?
where the
Awesome.
lighting is fully
Yeah.
focused on the two of you.
Well,
That's right. Well, I'll come over
that's
your
not
way.
exactly what I meant, Richard. But thank you for your vivid imagination and your creativity and your, you have a thing for that. I give it to you, and that's great. That's great. I think it's good. You should definitely make use of it. But I wouldn't mind. No, I mean the creativity. I like that because I'm like that myself. I can think out a whole, scenario that is not happening just with a little. I think it's good. It's something you need. You need that with if you want to be a writer, right? You want to have just give the person just a couple of things, and they will write a whole story with ups and downs, make it dramatic. Well, really, there isn't a lot happening, but that's great. It makes life colorful and
Did I
thoughtful.
just get palmed off with that? Was that I just got palmed off? Like this is a story that's not happening. Like, oh damn! That was
LJ is
brutal.
like genuinely distraught by this. He's like,
Come on, what do you mean?
No, I mean
Go on a date.
I mean I mean. That was the first part, LJ. The second part I was gonna say, after giving compliments to the creativity of the writer's mind that Richard has, I was gonna say I wouldn't mind. I would love to have a dinner with you, LJ. I'll no
That'd be
no.
beautiful.
I'm not kidding. I'm not kidding here. I would actually go to Australia just to meet you.
Can we hold hands? Come on, Victor.
That would be a little bit uncomfortable. I was reference to a good conversation between two guys, two manly mans who will have a good conversation. Not about holding hands. That's not my picture of a manly conversation.
LJ, I'll come to
Beautiful.
Australia to hold your hand, mate.
Dude, yeah. Oh, beautiful, amazing. We can do a triplet and skip down the promenade together or something. There you go. But yeah, dude, if you guys actually do come to Australia, mate, beautiful. We got so many. I know exactly the places to take you in Brisbane. So if you do, perfect. We'll do it.
I'm not kidding here. I love traveling. I need to say that. I mean, who doesn't? Right? Most people do. I would go great lengths to, just do a little thing. If I want to, not that meeting you is a little thing, LJ, but I mean,
Yeah, 'cause it's a long way away.
exactly. But I mean, I would definitely make the trip, just to that you'd be a good excuse for me to land foot on that continent that I haven't done yet.
For sure. Maybe we can do a bigger trip with some of the rest of Australia or something. Yeah, do like a crew type thing. Right? Yeah, that'd be good. Perfect.
No, but I'm confidently in my sexuality. I have no issues at all doing these jokes, and actually, it's not a joke, right? What I said about having a nice dinner or a little drink or a drink is true. But I mean, I have no issues at all. I like a little bit of a play right there. I see Richard smiling.
So you're saying we can hold hands? You got no problem, right?
That goes beyond a certain line for me. I mean, if you're sick on a dying bat, I would definitely hold your hands.
Victor,
If
Professional love.
But as in the setting of a candlelit dinner, no, hand taking hands is not going to be part of that.
across the table, we're just.
I feel like we've hit an impasse here where Victor's like, okay, this joke is going a little too far now.
Yeah.
Not really. I can have I can have a lot. No problems.
What
But
have you guys been up to? Marcus
LJ, do you like skinny dipping?
Sure. Yeah. Of course.
Not that I'm gonna invite you to skinny dipping. There was a
Okay.
comment.
I feel
There was a
Richie, I'm
comment
just
here.
like Victor was like uncomfortable, and he's just raised the bar to like.
Yeah.
All right, now
Like, this is the new level.
where are we going?
It's just a comment here from Pule. Let me see. Something happened here in the background with EVMAX. Okay, all right. So he's got a rooftop pool with for skinny dipping. I know about the
Oh, that's
rooftop pool that LJ has. Didn't know about the skinny dipping though. How do you know that, Pule, by the way?
We are going to plead the fifth for that one.
So long as you're comfortable being on camera, because there are cameras up there. So
yeah,
as long as
out of
you're-
fear of
you're happy with
incriminating
that,
ourselves.
that's fine.
Am I digging myself deeper into a hole? Someone is asking themselves. Victor is just trying to justify, so he's making it worse. Am I? Maybe I am. I don't know. You be the judge.
No, I think Victor has just the right amount of dark humor, just the right amount.
No, it's good. It's good. It's definitely good.
Life is serious. Life has its things, issues, problems, difficulties enough. So I think a little bit, sprinkle a little bit of humor, whether it's dark or light. It's all welcome to me. As long as it's done in among friends. There's
faith. Yeah.
good faith, indeed, with good intention, just to have a laugh. I think it's like a seasoning of life, right? A little humor here and there makes it, makes life without humor is bland. That's
Yeah,
exactly.
right.
Adding a
Exactly.
little bit of MSG to your, I don't know, your ramen to just bring the
Oh,
umami.
exactly, dude. What would ramen be without that? Right? It just
Yeah.
MSG.
Yes, monosodium glutamate. It just brings.
Yeah, I know what MSG is. I'm not too fond of MSG, but I do enjoy it. I have to admit.
but I do enjoy it.
I'm not too fond of it, but I'm fond of it.
I mean, I physically enjoy it, but the MSG in general, I'm not too keen on it. The thought of it, and
Look, it's great.
the philosophical side of MSG is not exactly what I was hoping for. You get the point?
Yeah, MSG is not too stoic for you. It stands
Exactly.
out too much. For reasons. Yes.
Exactly. It's a little bit too outrageous for me. It's an outlier. I want to be mean reversion.
Yes, I do like my bell peppers, but the moment someone brings out a habanero, I'm upset.
Exactly.
Personally, I love the hot chilies that you can bring. I'll eat all of them. All of them. Anyway, on that bombshell, guys, I am going to have to love platonically and leave you guys.
You didn't have to mention that, Richard. We all know how your feelings are.
Brothers.
The fact that you had to explain that and say it explicitly, that tells something about you, about your intention, about the possibility that maybe it's not platonic. You had to emphasize that it was platonic, maybe because it isn't. Richard.
All right. So, Victor, you've caught me. My hands are in the cookie jar. I love you guys. Point. And I'll see you guys tomorrow. Have a great one. Everybody in chat, if you haven't already, drop us a like, drop us a subscribe, and then we'll see you all tomorrow. Cheers, everybody.
Thank you. Thank you, Richard. And we all love you back. Don't worry.
See you, man.
Bye-bye. So, Samir, you've been enjoying in the background, smiling.
These gentlemen.
Smiling.
Yeah.
Yes. How are you, Samir?
I'm good. What about you?
I'm great. I'm happy.
Amazing.
Yes, I'm
That's-
happy
that's
about
what matters, yeah.
about life. I'm happy
Exactly.
about my life, and I'm happy about you guys, this stream. So I'm happy all around.
That's amazing.
I will have
All
to
right.
say I'm gonna have to dip out as well. Hopefully tomorrow I will have my regular setup back to normal. We'll see how it goes. But I will leave you guys with this. As far as the Dixie, right now kind of 50-50, very midpoint. So I don't know, maybe you guys can talk about it after, but I'll see you guys tomorrow. Ciao for now.
All right,
Catch up
LJ. It
then.
was very lovely conversation. I got
Yeah, for like 2 minutes. See you, Samir. See you, Samir, man.
Yeah.
See
Take
you
care,
tomorrow.
LJ. See you.
Victor. Ciao,
Take care.
guys. See you later.
All right. And
care.
so Samir, and then it was the two of us. Let me check here. Just all right. That's great. Perfect. So yeah, let me put mine. Okay, so this is Samir's fine. Whichever is fine is perfect.
Okay.
That's actually
Yeah.
is fine.
Some
Yeah, the Dixie. Shall we take a look at the Dixie on LJ's invitation or suggestion? Because why?
DXY
For those,
from a very long time.
yeah, I normally sometimes I consult the Dixie if you will for my EU or GU position because I want to see the strength of the dollar or
Yeah,
what
yeah.
is likely to happen to the dollar, but it's not part of the trade plan. So for those who are wondering what is the Dixie, if you're new to trading, you can see it on the on my watch list. Is the first one. It is a dollar strength indicator or index. I should say not indicator, but you can use it as an indicator because it indicates something, right? It indicates where the dollar is likely to go if you can read price action or do technical analysis on that on Dixie. And I don't use it on a regular basis, as I said, but it is very, very informative. It can be very informative. If you're trading one of the majors, right, a pair that has a dollar in it, then the Dixie could give you the probabilities. Is the dollar likely to be stronger or weaker in the next couple of bars, or depending on your time frame, a bit more than that. So let's take a look at it. Would you like to? Even the Dixie sounds weird now. I don't know what you guys are talking about. I'm innocent. I have no idea what you guys are talking about. But the the so the would you like to take a look at it, or shall I? Maybe I should start off with it. Let's take
Yeah,
a
yeah,
look
definitely.
on
You
the
can give
higher
your
time
views on
frames.
it.
We can give my ideas going through the order blocks and quasis. And quasi does not have a second meaning. It's just quasi. Nothing else. Order blocks does not have a second meaning.
Quasi.
Okay, so we are currently, or we were, there is, it's kind of mixed, I would say, and the dollar is in a specific place. If you look on the monthly time frame, we have a clear area where we are on both sides. We played with it's not exactly a range, I must say, because you only have one touch, but you can say perhaps the range isn't there. The range is actually here, right? Because there you have multiple touches to make it a valid range, and it's not a very specific because you don't have a lot of bars, but this is the area, the extremes we have seen in the last couple of years on the dollar index, and very interestingly, it has been trying to break on both sides, and the first one failed, was a fake breakout or a fake out, and it is now doing the same thing. At least we don't know that for sure, but it's seemingly doing the same thing on the bottom side, right? Meaning it looks like it's going to break down. But as soon as it breaks down, what does it break? What does it create here? What does price action tell us? It's a bearish engulfing, right? After the breakout, that's exactly what you do not want to be seeing if you're expecting a breakout, because a bearish engulfing means that the sellers, even though the buyers broke out to the top side, the sellers actually took control afterwards, and they have, all the reason to pushing price back into the range. And that is exactly what is happening again here. Right, you see that? There's another price breaks it and creates an outside bar, which is actually even stronger signal that buyers came into the market and are likely to have sort of a reaction to the upside. How much of that reaction is, and if it is going to have a follow-up reaction of a continuation or even going higher, that's not clear at this point yet. However, the indications are still. Let's take a look. This is just simple candlesticks, reading just candlesticks, price action through these candlesticks. What we have here is we have a bullish order block that has been readily right away being retested. So you could be looking on the lower time frame for that long, the Dixie, meaning expecting dollars to go higher, be stronger. That means you'd be going short EU, short all the other pairs that have the dollars at the back of the pair. And what does price do? It retests, and you can see that the buyers came in confirming the initial or initial appetite, so to speak, for price to go higher. So we had that. It means that on the higher time frames, at least, as long as we move away and keep away from these structures, that the market has told us that the price wants to go long term. This is monthly, so long term, a little bit to higher places, meaning that's going to be short for EU, etc. So how does this help us in our analysis or in our trading? So we do have a quasi right here. Here you go. That's the quasi, right? It makes a lower low. So it's going to be, and this is the structural point that needed to be taken for us to understand the price wants to go higher eventually. Maybe not right away. It can go right away, but perhaps it's going to have some kind of a retracement before it continues higher. But it did already what it was supposed to do, which is take out that previous swing high, which it did on multiple candles or multiple occasions. Doing that, to me, activates the quasi. Activates the quasi, meaning that, to me, that the interpretation of that is that the market is attempting to go higher. Not necessarily right away, right? So once you have that, and if the market is going to have a retrace before having that push up, my question is, or the question that I then ask myself is, what area here can we identify as between the highest point it has reached already and the head of the reversal pattern, which is that lowest point? What area in this time frame would make sense for price to bounce off or use as a trampoline to change direction for that continuation? And you can clearly see that we have a weekly entry order block on that quasi. Will the market use that to make the reversal? I don't know. All of this is just a scenario. It may just continue lower, for all I know. But if the market is giving us these patterns, these patterns they indicate something. They indicate that the back and forth, that tug of war, and what is one side is basically telling us, in this case, the buyers, by breaking, and even if it's only with wicks, being able to print higher prices than that swing low indicates that price are trying to go higher and they're likely to succeed. And if that is going to happen, they're going to be using, likely, we don't know, but use some kind of a structure. And we only have one structure there, which is the one that I indicated. So let's take off this. Let's see if the order block is below or beyond the 50% retracement, and it is. As you can see, that's the line. It is below. So this is the area that I would be looking on for the weekly structure to be taking a long from, putting stop below it. And actually, I don't put my stops using the weekly, but you could. And targeting whatever highest level has been before, and perhaps even because we have plenty of room to go higher, leave some for a continuation. So that's in the weekly. That's the macro view on Dixie. But let's take a look on the daily to see if we can spot a similar. We already had a quasi that didn't actually, it didn't respect it, although it did reverse, right? So we can put them a little bit to the side. Actually, you can take them away because they're no longer valid. So they're only going to be obstructing our views. Let's take a look at below the 50% retracement. There is a entry order block which is inside of that weekly, and that's where you want to be looking for a possible long on the daily time frame. And there's a little tiny structure here as well that I would be wanting to trade on. And there are only two, so it's a valid, these two are valid areas where we could be looking for a possible reversal. Only if it comes back. That one I wouldn't be interested in because of the retracement. So, but we're not there. So I would say on the higher time frame as a swing trader, I would wait for price to come into this area and then watch for those reversals, pattern, divergence, double bottom, whatever it is that you use, and then try to catch the move as it moves away from it. And maybe it will come into one of these areas and you can catch on the lower time frame a quasi. But how is this? Because most people don't actually trade the Dixie, you can use this as an indicator, right? That's why I said the Dixie is a dollar index indicator, because that's how I use it, as an indicator. You can go back and see, okay, so what is the price in your specific pair that you use, the specific major pair that you use? What was the price on the 3rd of October? Okay, it's not gonna be precise, but that gives you a great idea, right? So that's without incorporating the strength or the movement of the other pair, right? So maybe in the euro in this case, or the pound. But if you assume that the euro and the pound are not the biggest mover in compared to the dollar, then you can try to look at what is the pair, what is the area that will correspond on your pair. And this, in the case of EU, that's going to see where from the range from the October 1st all the way, including all the bodies of October the 3rd. Okay, so let's do that. Let's switch. So that's how you, one of the ways you can use that. October 1st, that's right here. So actually on EU, which is not a surprise because, the biggest composition of the Dixie is the euro, one of the biggest pairs, not one of the biggest. So and also on the EU, we have the same quasi, maybe not exactly the same, but there is a quasi, and it also has, right, two, in this case it has two order blocks which they correspond exactly, well, not exactly, but a high degree of similarity with these two areas. So it's visible on the Dixie, it's visible on EU. That's not always the case, but whenever it is, that's a slight extra confluence. But you can use this on EU, since EU and the Dixie, you will have very a lot of the times will have the same patterns or very similar. That may not be as useful because it will not show you something that the EU is not already showing you. But if you're using it on other pairs, you will see that if you can look at EU, let's say Kiwi dollar or Aussie dollar, US dollar, and look for the 1st of October until the 3rd, that would be maybe able to give you an area that is not visible on the other pair. Maybe we should take a look at it. Let's take a look. All right, so let's take a look at it. Maybe the Kiwi, or maybe not the Kiwi, because there was Kiwi news recently that may change the situation a little bit. In the case of the Kiwi, there is also a quasi there. Actually, there isn't, which is this area. Let's take another look. Maybe dollar yen. That's not a good example either, because the dollar yen is moving a lot, and that's going to be much, the movement in the yen is much more pronounced than in dollar. So in the dollar yen, the currency that most affects this pair would be the yen, and not the dollar as much in comparison. But maybe let's take a look at some others. Maybe let's take a look at NZD in anyways. All right, so the 1st of October, it gives off the same area. Well, in this case, that would still be a possible area. Let me see, this is the 6th. All right, so in the case of, it's the same area, so it does not really matter. Point is, using the Dixie does help you indicate in all the occasions that I just try to find, they all, you will see in the Dixie as well on the pairs, but that's not always the case. So whenever that is not the case, then the Dixie is giving you information that you otherwise wouldn't have in the actual chart on the pair. So that's why it's helpful, because in a lot of times, not now with the dollar yen, but a lot of times it is the dollar that's the one that's moving. The dollar is the most influential currency, so that's the one that is moving the market more often than not. In this few occasions or examples that I just took, that wasn't the case, or other than it didn't give us a different chart than compared to the euro. So basically that's it on the DXY. I would expect on the lower time frame for price to come to this area, then to go long. And if we zoom deeper for the intraday areas, and that's actually what LJ was talking about, that we are now at a intersection or crossroad where price could go, is on both sides have a compelling reason to push price in their own direction. And what I see is we are getting into the upper border of that monthly structure, which is a good area for price to have some kind of a reaction. We also have a bullish weekly here. Okay, so that makes it quite interesting, because you'll have alignment. Let's go to the daily. Do we have a quasi? We don't have a quasi, but maybe on the H4, we can spot something that could be interesting. Let's see. We do have a entry order block here. That is this one. And let's take a look. Which one is it? It is this one. All right. So that leaves us with a couple of areas. Let's see if we can spot them all. That's one. It's actually quite big. It's huge, actually. Okay, so this is one big area where I'm interested in a possible. That one has already been taken out. Okay, so that means that basically we don't have anything in this daily quasi. That tells me that the probabilities of price going lower has increased a little bit, because we did have a reversal pattern to the left, which is this quasi. And the only entry order block we had, which is this order block, has been invalidated already, meaning the reversal pattern didn't, that was one of the better places for the reversal to happen, and it didn't use that opportunity. It can still go higher, but now if I see this, I would understand that the market is trying to actually go deeper and go lower, meaning the dollar being weaker for the next couple of, perhaps the rest of the month, or maybe a week or two. In any case, let me take a look at, perhaps, do we have something on the daily? No, we don't have anything. Maybe we create something here. Nope, nothing. There is a little entry here, though. You guys see that outside bar? Look at that. That's an outside bar. And if we go to 1 minute, you can understand why the market is making this reaction because of what we had to the left. So that's interesting. But there's no quasi here. So this looks quite nicely, and I would have been able to trade that in this area, because here you have the overlap between the 1 and the 4, and the exact area would be this between these two. There, that's the overlap area, and I would be looking for price to come back. Once it goes away, comes back, touching that area. Let me leave it in blue so you can see it. And let's see if there was a 5-minute entry here. This looks like market is going to have, at least for the next couple of hours, price going much higher, because we have a beautiful H4 H1 alignment with 5-minute. Let's take a look at. Right, that's the area to be reacting from, and we have one here, one right there, and we have another one here. There. All right, those are the two entry order blocks. And the market react to them? First one, it came, didn't really do much, went through it, didn't trigger us. And the second one, which is this bigger area, and remember, this is the whole area, but this is the line is right there. So basically, you're only interested is price if price holds this. That's exactly what price did. Come all the way here and pushes back. That's a beautiful reaction right there, aligning the 5-minute with the H4 and H1, which is sitting on the upper border of that monthly, also within a bullish weekly. So there's a lot of it going. Doesn't have the daily though, so I wouldn't be able to take it as a swing trade. But I would definitely be able to take a trade from this chart if I were to trade it. But that also means that I would be able to look for a short on EU from about an hour ago. Let's see if I can see the same thing on the Dixie. All right, let's see what we have here. We are in a bearish weekly. On the daily is still bullish, playing between these two order blocks. The H4, on EU, I'm waiting actually for this retest of the fresh order block on the H4 time frame. Hasn't happened yet. This is the area I want to be shorting from if I'm going to be shorting anything. I would be looking for a long from this area, but that's against or in the other direction with the Dixie, right? The Dixie is inverse to the euro dollar. There. All right, so you had one here, and actually you had a beautiful there. Didn't actually catch it. Didn't catch that either. No. Okay, so that's on the 1 hour. Let's take a look a bit more here on the 1 hour. So that's a bit conflicting, right? Because the Dixie tells us there is a reversal happening, meaning dollar is gonna get stronger, and if that's going to be the case, then the euro we should be looking for seeing patterns of price going much lower. But if you look this is quite bullish still. Price is reacting quite nicely to these bullish structures that it created yesterday. And if you look at this, technically, the area to be going to be looking for the trade here is to the upside, and more specifically, this area would be the area that I would look to trade from. Right between that and this one, right? That's the overlap. I would like to see price come back in here, and we can go to the 5 minutes and try to see if we can find a reason to get a long there. Maybe even take a trade with you guys here. So you can see the quasi right there. Who of you can see the quasi? Right, the reversal pattern there. That's the quasi established downtrend, left shoulder, head, neckline. And let's try to see the area on the 5 minute. We have it here, and that's 1, 2. We may have too many. If it has too many, then it invalidates the setup automatically, but it does not invalidate. Okay, so we do, that's it. We don't have anything. So these are the two areas. And because this one is outside of the overlap, that's the one that I do not want to be trading. I want to be trading after the market reacts to this one, which is inside of the overlap, has the quasi on multiple time frame telling me that that's where, has a better probability of being used successfully for the market to continue higher. It is in the direction, right? The technical analysis or the breakdown of EU tells me I want to be going long. The Dixie was telling me that also long for the Dixie, but that would mean short for EU. That's contradictory. And in cases like that, you have to consult your data if it makes sense to in this. I have tested the times that the Dixie tells me not to trade it or in the opposite direction is not enough for me not to trade EU or GU, right? And that's why I don't use it as in my trade plan. But it can be helpful on other occasions. Just happened to be the case that in my data, in my strategy, and the way that I enter, and the way that I have tight stops and all of that, that the Dixie doesn't help me as an indicator, but on the higher time frames, I think it could definitely help you a lot, especially if you can't see the same pattern on your chart. So Samir, have a
Hey, Victor.
I maybe you can take a look at Dixie from your perspective and see if is there
Let's see.
anything you are seeing. I'm gonna switch to yours. Is that okay?
Yeah, that's fine. Okay, let's see what DXY is, what kind of patterns it is printing, and how I am seeing it, or how we can view the market in upcoming days. I'm just going to give you my views. So if you see DXY right now, we are having this kind of lower high, lower low, lower, kind of a low, kind of a liquidation of this move. This was kind of a problematic move. If it has to continue to the downside, it should have closed below. So now it becomes a liquidity move to me. So you can also say a double bottom, if you don't want to, complicate these things. Price just made a double bottom and now it is trying to go up. So this is a kind of a neckline that we can see on the daily, or you can mark it as a supply, which I think, yeah, we closed above this. Yeah, we closed above this. If that was me earlier, I would have shot it based on this trend line break, but I do see DXY might can, take these highs, or you can, this candle is not even having a wick, I believe. Yeah, very small wick. So these kind of candles do get filled in future. So this is a target for DXY. The it means the other pairs like euro dollar, GBP USD, AUD USD, these pairs might can go to the downside. So if it goes to the upside, so it might can go to the downside, the other pairs. So keeping that thing in mind, okay, this is a support area. Now let's just go to the 4 hour. Let's see what price is doing. And this is again a double top, double. Now price is just ranging. We don't know which side is powerful yet. I would like to, DXY to break above and give us a retest, then we can confirm the move. And if we break below, still kind of, retest of this kind of move, I am looking for buys on this one. It means your other pairs, like euro dollar, let's do the analysis on that. You can plan for shorts on this one. Same, something like this, just on the opposite side, similar thing. So keeping that thing in mind, DXY, I do see some bullish moves coming in future. Let me go there again. As you can see here, okay, this trend line can be a liquidity move, which we already took here. So we have two scenarios. If price just shot up from here and give you a retest, you can plan for longs here. Or if it just liquidated this and again came back in the zone, that is also the another opportunity that you have. And let's take a look at gold. Actually, I know many people trade gold. You might be interested in gold as well. I think we was here where I was planning for longs on this one. Yeah. Okay, this is a fair value gap. Price still hasn't touched the fair value gap. Price just gave you a retest of this area, which is demand in my opinion, or you can also say support and resistance, whatever you want to call it. But I just want you to see the market structure right now, which is bullish. Okay, no matter what terminologies I'm using, support, resistance, liquidity, just see the market how it is behaving. Okay, in the recent strategy video also that we did for you guys, I have explained once it comes to your area, you just wait for 1 or 2 hours. Let's see how the price is behaving in that area. Now it is in a resistance or a supply demand area, or you can also classify this as Fibonacci area. I have mentioned in that strategy video, we have couple of many strategies. Okay, you can use any strategy, but market structure is important, of course. And once it comes to your area, now we are seeing how it is behaving. Yes, we are picking up the momentum. As you can see here, we are holding this area. So now we potentially can look for buys. And where we can buy, I think if price closed above this area, you can get a good session buys. you know this NYSE is also about to open, so you might can see the volume. So this can be your trade. Yeah, there is also a fair value gap here on the, I think, yeah, it was already tabbed, so you cannot look it here, but you can classify this supply which never got tabbed. So looking good for buys based on Fibonacci and based on order block or based on EMA. Everything looks bullish. Market structure is bullish, and support resistance. Whatever you want to call it. I just want you to see how market is behaving in that area and how it is behaving. We are seeing some bullish momentum, and we are seeing some new structures, which is giving us a potentially move to the upside. Try to read the market. If it has to go to the downside, it made a resistance, it should have continued like this, all right? But it is showing you signs that it is getting strong here. So take the sign from the market and use your brain and just align couple of technicals, and that is your strategy. Very simple. Okay, I just mark my areas, and I just see how market is behaving in my area. Some buyers are stepping, some sellers are stepping. I have to see which side is strong, what kind of patterns market is printing. So right now, buying side is strong, impulse, correction, another impulse you can expect. So very simple market structure, and just waiting for market to give me signs. Right now it is giving me signs to go long, and even if you want to draw this trend line type of thing, yeah, it is also breaking that. And yeah, that is my analysis for gold at the moment. And if indices, guys, so this is a very good high in my opinion. Let's start with the 4 hour. I don't even want to go to the daily, to be honest. Okay, this is a resistance area, and this is, to mark this resistance, I will go to the smaller time frame. Why? Because I have to see what kind of areas are untested, or what kind of fair value gaps or kind of supply demand we have. Okay, this is a small fair value gap we have. So we have to keep that in mind. If you have to take longs from here, this can be a potential target. And how to take longs now? You have to read the signs. You have to take signs from the market. How you can take longs? If you decided to take a breakout trade, it will not be good. Why? Because session is not there yet. You have to wait for that NYSE time frame if you want to trade these pairs, because then the candles are gonna be very volatile. You might can get stopped out. Keeping that thing in mind, I do have a couple of scenarios. Let's just give it to you guys. I do want to take buys on this one. How will I take buys? Let's go to the 15 minutes, straight up 15 minute. So if market opens, give us a small move to the downside, I will just look for some kind of correction. Then I will look for buys. Where will I place my stop loss? let's go to the 15. Yeah, I'll place my stop loss somewhere around here. This is my first scenario. And second scenario, if market just short to the upside, then it just dumped to the downside, then I will look for something like this. This is my second scenario. And my third scenario, if just market give us a pause somewhere around here, then also I can take a buy here. There are a couple of scenarios. You just have to read the market. You just have to take the signs from market, where what kind of patterns market is printing. Okay, what side is more favorable, or what confluences you are getting, like in your buys. For example, I have a couple of scenarios. Let's see how it is printing, in that particular time window. But gold, for now, we do have setup for gold. Let me just straight up go to the gold. Okay, yeah, I gave you a trade when market closed like this. Yeah, so this was a good trade. So that is it, man. If you want me to break down any other pair, definitely I would love to. But my point of this particular small clip, or small things that I was saying to you guys, is once price comes to your area, wait for 30 minutes, 1 hour, 2 hour. It's okay. If price gave you a little bit above or below your anticipated entry, it is okay. No matter where it gives you entry, at least you will have some confidence. At least you will have some confluences that it is showing some signs that it wants to continue in your direction. So that is my point. No matter what strategies you have, you just implement this one thing. Just wait for 1 or 2 hours when it comes to your area. It will give you some signs. Just act upon it. Yeah, I am. By the way, I'm not going to be trading, guys, because I already have secured some percentage on my account. So I just want to withdraw it. I don't want to be greedy or anything like that. I know I'm confident about my setups, but at the same time, I'm trading funded accounts, and I don't want to lose the money that I made on that account. Keeping that thing in mind, I want to secure my withdrawal. I'll not be trading now, at least till what is this today, Tuesday. At least till this week, I'm not going to be trading. I have a couple of withdrawals from my account, so I'm not going to be trading now. Next week, I will be actively trading.
Great. Good stuff. And some people might ask themselves, if you are a trader. I'm trying here to be a little bit of a devil's advocate, but I think it's important you explain why you do what you do.
Yep.
If you have an edge in the market, and by employing that edge, the odds are in your favor, because that's what the edge means. And the market presents the opportunity to employ your edge, and you already have your target, or an amount that you have agreed with yourself, that this amount I'm going to withdraw it. Tell us, or tell the audience, why do you think it is better to not trade, instead of using an edge that with time gives you a good probability of having more profit? Why is it better for you to stop and wait for the payouts, to the withdrawal to actually happen, instead of gaining perhaps more on the same account? What is it? How do you know it is better, and why do you do it?
I think why it is better, because you don't know the outcome of the next trade. Okay, so for an example, your curve in that particular account is bullish, and you are on a winning streak, or I don't know, you might be taking some wins, losses, and you get to a certain percentage, and you don't know the outcome of the next trade, and it is always going to be like this. So keeping that thing in mind, why to risk your payout? That is my point. Why to risk your payout when you already have secured a percentage, let's say 2-3% on your account? Why to risk it? Why to be greedy? You know, less is more in trading. You have to understand this thing. So once you get that thing in your head, I think your trading game is gonna change. And keeping that same thing in mind, I don't know the outcome of the next trade. I know over the long period of time, my strategy works and I am gonna win. But for an example, let me give you an example. So let's say my withdraw date is on 6th, okay, and I made let's say 4% in by maybe 2, as it is 2 today, okay. So why will I want to risk my this 4%? It can be 3%, 2% if I lost the next trade. Why will I want to risk it when I'm close to my withdraw date? And at the same time, there is opportunity to maybe make 6%, 7%. Okay. And in my eyes, that will be greedy, because I can make 2, 3, percent in next week. My account is not running anywhere. So, once you practice this thing, once you have this thing in your mind, okay, less is more, or you are not just glued to the charts, you are not glued to the percentage, you are not having habit of just placing trade here and there. I think you will be fine with this approach, and it is a profitable approach. That's how I think you should treat trading. That's how I think you're gonna make money in the long run. Maybe that that nature of you having glued to the screen nature, or placing trades here and there whenever you see the opportunity. Maybe when you wake up, you place a trade. Maybe you see some results for 2 3 months. Maybe you hit some huge percentage, but that is not going to last for long. Why? Because some market conditions, you have to behave differently. What do I mean by that? Let me give you an example. Like, let's say this gold was moving bullish. You just wake up and buy. I'm sure many of you guys might be hitting some good profits, but when the market condition change, you have to behave a little bit differently. And this behavior that I'm telling you, less is more. And just hitting, if you hit some wins, you just take a pause. This behavior will give you better results than this behavior. So keeping that thing in mind, I think you should work on being a trader B. I'm just going to classify this as trader B, and this is trader A. Trader B is just calm, taking one trade a day. Maybe whenever he see his setup in that particular time window that he has decided, he's just acting on his plan. Whenever he has good wins, he is taking pause or maybe reducing the risk. And this trader is gonna grow his equity curve, or his mental curve, his psychological curve. Overall growth of this trader is going to be smooth, and it is going to be good, rather than this trader. I have been this trader also. Ask me, my curve has been like very zigzag like this. So I would rather be trader B than this trader. I don't want to be there anymore. I like this approach. Why? Because my mindset is good, and you are getting consistent payouts with this approach. When you are targeting less, and when once you make 2 3% and you just stop trading, I think this is how most of you guys will get payout if you trade this way. And if you are like this, I don't think so you're gonna be succeeding in long run, because you are just chasing that numbers. Of course you can do this thing once you are at certain level, but I'm just gonna talk to a beginner right now. It is having conversation with a beginner or intermediate trader. Of course, when you have couple of accounts stacked up, you can risk one on one account. It's okay if you have reached that level. But as you are starting out, you have only 1 to 3 accounts in your name. I think this approach is better, in my opinion. So now I have given you example of both of the traders. See where you are and act wisely.
Basically, I totally agree with the conservative approach, because that's what it is to me, right? You're not being too greedy, you're not pushing too hard, you're just looking for the next
Hmm.
next leg up, maybe one or two or three, depending on what your risk reward ratio is, TP to be hit, and then you
Hmm.
pause and you withdraw the money, right? And you start over again. And I think it's a good practice of resetting kind of your mind and your emotions, and I think especially your emotions, because if your edge is mechanical, you know I theoretically more opportunities will result in more profit, because your edge is a thing, it exists. So the more you apply it, in the long run, the better you'll be. But the emotion that the emotional cost that we'll have after you've been at 4%, and you then, for example, you go for that 6 or 7%, but you end up at 2, that emotional cost is
Yeah.
higher than the reward going to 7 or 6. 4 is plenty. Just have enough funded account with 4%. I mean, just think about it. It's enough for because it's not the end of the month yet. It's just wait a couple of days,
Yeah.
hit it, bag it, and then you start over again. You're starting from a place of strength instead of, if you had gone down to 2%, for example, you'll feel the pressure that you need to get it back because the 4 is yours. Someone took it away from you and you need to get it back, and you're starting to act a little bit, or you're going to be a little bit more sensitive to the emotion. And that's, if you don't control it, it will eventually become revenge trading, which means that you're actually stop caring about the technicals. You just want to get in and get back and get even. But that's not how the market works, and that's not how trading is. And that is how you're gonna lose your account, because once you start acting and reacting upon these emotions, you're gonna be trading without the edge, and that's the end of it. You just the beginning of the end. And if you don't stop it soon enough, you will end up losing the account. But that's a world difference than what Samir now is explaining, where once he has that 1 or 2 wins, he just stops there. And emotionally also, I think, isn't this true, Sam, that emotionally you kind of are resetting yourself as well. You're not too excited when you start over because you waited a couple of days to get that withdrawal. Your excitement level drops, and it's, you're starting from the same place you before you had that profit. Same, you're resetting to a neutral level. Is that correct, Samir?
Yeah, exactly. You got it. You just
All right.
explained it in a very well way. Okay, I just was seeing gold here. Oh wow, gold is picking up momentum. Just
Mm.
give you a trade here. See, you just wait for market to show you some reactions in your favor, and you just behave.
How
If
would
you
you
react,
how would you enter this? Would you already be in it?
yeah, I would just take this breakout. I think on the smaller time frame, it would have been a trend line breakout. Yeah, the small trend line maybe. But I think that's the structural breakout was also good. Price closing above this area, keeping your wide stop loss protected in case price tapped this fair value gap, or maybe this order block. You are still protected. You are giving your buys a chance, a very big room, so that even if price decided to take these orders, you still be in the trade and you still be on the right side of the market. So that's how I'm seeing the trading nowadays, giving room to your trades. It is not bad at all. Don't chase that small stop losses. Once I'm starting to give room to my analysis, I'm telling you guys, my trading has really changed, like, a lot, man. I can't even express in words.
I can
Yeah.
express it in dollar terms, though.
Yeah. Yeah.
No, but jokes aside, we have a couple of questions. The audience have been good sports, giving us all kinds of questions. And while we're searching and scouring the chat for those questions, I'll have a request. Do us a favor, like the stream and subscribe to the channel if you haven't done so already. It is now is your chance. Our next milestone is going to be 100K subscribers, and we already know it's going to be massive. It's going to be a lot of accounts being given away, because that's what we did the last time around when we hit 90, which is just last week. All right, so actually it was the week before last, but we celebrated last week as the with giveaways. Let's take a look at. Let's take a look. We have a EU. I'm going to switch to mine if that's okay with you, Samir.
Yeah,
I
that's
think
fine.
the way that you, how long did it who taught you this? Who gave you the idea of taking it slow?
Actually, you know what? I was, my first challenge with the fibers. I remember, I was trading Euro USD with this way. You know,
Mhm.
I was trading 15-minute time frame, and wherever the structure was, for an example, the market was printing high rise, whatever the market structure is. I was taking the trades out of a maybe pullback, and I was placing a wide stop loss, and I just I took like maybe 80% win rate, something like that. So that thing stuck with me, keeping the stop losses wide, giving it room, and I accidentally discovered it. To be honest, why, let's just place a stop loss wide. Let's just give an extra room to my trade. Let's see how it is gonna be. Let's see how things are gonna be if I do things this way. And I'm not gonna lie, I was seeing on the earlier days of my trading, I was seeing Indian stock market guys. They was targeting 1 to 1s, and they was really doing good. But I didn't really focus that much on that approach, because I was too glued to these risk to rewards, or tight stop losses. And doing that thing, once I took my first account with the fibers and trading with this approach, that thing just stuck with me. If these guys are targeting maybe 100 points, 50 points, if their stop loss is same, 50 points, whatever, because they was taking they was trading the stock market. So that thing stuck with me. Seeing these guys grow, I'm like, let's just let me do the 1 to 1s myself in my way. So I started trading this way, and then I just I was placing the stop loss wide, and trust me, I'm seeing very amazing results with this way. No matter what strategy you are using, just wait for the market to go in your direction, wait for 1 or 2 hours, then take the trade. That is the only thing. Yeah,
Basically, you found it with trial and error, right? You
yeah,
just
exactly.
tried it
I was
once,
trying
and
it, and it worked.
yep. And now you are you
I'm
think it's
sticking with it. Yeah,
yeah, you're sticking with it, and you have all the reasons, right?
yeah, exactly.
You have all the reasons to do so. We have a question from Unbiased Trader, a regular in our stream. Victor or Samir, whichever of the two. What do you think of the new high stake 100K? Do you have any opinion on this, Samir? The new 100K account of the Fivers.
I think psychologically wise, psychologically, if you think about it, I like the old model better, because once you hit a 8% mark, then the weight from your mind or weight from your heart get released a little bit. Now you have to just make 5%. Okay, so of course the other trader can be first I have to make 5%, and then it's 8%. I don't know what kind of mindset you guys are holding, but if you ask me, I like the traditional way, which we are having from since the day one, which is hitting 8% first and 5% first, because I like that weight of my heart, keeping that thing in mind. Now I just have to make 5%, keeping that thing in mind. I like the old way.
Hmm. I understand that, and I think most people would, the regular is less stress, less friction. It's the familiar thing. But I probably there are some people. I agree, Samir,
Hmm.
that if I had to do it, I would. Um, sure, I would want to have. It's the same thing with what do you want first, the bad news or the good news? Some people will say,
Yeah.
"Give me the bad news first, then I get it over with, and I can enjoy the good news later." And other people say, well, at least let me give me good news, and who knows, maybe the bad news isn't that bad. It's just about mindset and the way you are. And so for some people, because the what we haven't mentioned, but for those who are wondering, Unbiased Trader is asking, because we do have at the Fivers a reverse version of the high stake account, a two-step, where the first step is 8%. The second step, that's the regular traditional one, industry standard, 8% and 5%, the targets. And there is a new reversed version where your first step is 5 and the second step is 8, meaning in the end it's the same thing, but just the sequence changed. But you can see how just changing the sequence can have a psychological impact on people. Just think about it. What would you have? Would you have the good news or the bad news first? What would you do first? The on your day, would you do when you have a list of things to do when you start your day? Do you go for the hardest one or the easiest one? Some people work better if they tackle the hardest one first, because they know that from then on it's going to be easier. And for other people, they need to have a little success first, right? It's better for them to have a little success, feel some confidence, and then they can tackle the bigger challenge. And that's the personal thing, right? Some people, we're all different. So I don't. I think just because it's familiar, I like the regular one, the 8 and then 5. Uh, but I think to me in the end it doesn't really matter because I'm very rule based. I would be trading this same way, taking the same signals, and whether it doesn't really matter to me. But if I had to think which one is easier or which method is easier, having the hard part first, the harder part first, and then the easier part. Um, I don't know. There's a little thing though, building success. That's not a bad thing. That's a good thing, right? For some people, hitting a target makes them be a bit more patient because they're progressing. Their stress levels, their frustration isn't there because they're progressing. They're seeing results, and that's a good thing, right? So it's a good for your patience. So I think I can see both programs being suitable for a lot of people. I would tend to say familiar is better, but I can see myself with the first phase, and then feeling myself a little better, a little more at ease, perhaps. Sure, I can see that point. Even though by now, emotions, I still feel them, but they rarely change what I do in the market. Following my main strategy on my scalp strategy and my other strategies that I use, yes, I need to keep my emotions in check and be, constantly aware of them, and make sure that I'm not acting on emotions. But on the main strategy, the one with quasis and order blocks, it's so mechanized that you know I whatever emotion I may have, whatever impulse I may have, it gets shut down in the process of me going through my trade plan. And way before even I get to have my steps, emotions are already really subdued because I think it's a neurological pathway that has been traveled so often that whenever I start going through my mental checklist, um, I don't feel those emotions as strongly anymore. So to me, it doesn't really matter. That's not applicable to majority of people, I suppose. So, I yeah, to each one on their own preference, I would say. We have something for everyone. That's the point here. All
Yeah.
right, we have another question for who was it? There were at least two questions. This is not a question. This is by Shubham dot Keeley, or something around that around that name. Um,
IT.
Bootcamp account leverage is too low. What do you say about that, Samir? Is it too low for you?
I think if I was a beginner, if I was having that option, a low leverage, and having a possibility To enter low lots, like whatever the account size is based on the account size, I think I wouldn't be blowing these accounts. I have blown like 200 plus accounts, to be honest, in these platform space. So I wouldn't be in that place if I was having bootcamp option, if I was willing to invest my time and money in that option, if I was not being stubborn, I think my journey would have been better. And keeping that thing in mind, I think bootcamp option is a wonderful option if you are a beginner, or if you haven't seen success in trading, and if you are making a lot of mistakes. What do I mean by mistakes? If you are over trading, over leveraging, bootcamp will solve that problem. So it is the best account to make you guys profitable. It is, all the conditions are in your favor if you're a beginner. And if you're an advanced trader, I know, you might have seen success in trading. You have, seen a lot of payouts. Then I know this leverage might can seem low to you. But if you are a beginner or an intermediate trader, or if you are just entering in the prop firm space, I think this option can save you a lot of pain. And this option can make you a good trader, can make you a consistent trader. So I think it is very good option.
Yeah, I don't know if let me put it back on the question.
Yeah, unbiased trader just said it, and it is also for the long term. The scaling plan in that particular account we have, it is amazing. You can scale up to $4 million. So if you stayed consistent, if you follow the rules, and if you are, actually trading, not being a kind of a gambler, then this option can literally change your life.
Yes, the thing is, I think maybe I'm not gonna pronounce your name again. I tried once, and I stumbled. I failed miserably pronouncing your name. But dear user, um, I don't know if you've been a regular in our show or not, and if you haven't, now's the time to subscribe, like the show. But answering the question, uh, bootcamp leverage is too low. Um, we don't know anything about how you trade, your experience, and things like that. But depending
If you
on where
trade
you
with like
are,
5 bit stop loss, and if you open big lots, then might be.
yes, I can see if you're depending on the risk, how much risk are you taking. Um, if you're going if you're scalping and you're risking huge percentages, and by huge I don't mean 10%, I mean just like 2%, and you have very tight stop loss, then perhaps 1 to 10, because that is the Bitcoin not bit what am I saying, bootcamp leverage. It may be too little, but the question really is, should you be doing those things? Should you be scalping, risking 2%? um I don't know. Maybe you are super talented, you have a huge edge, and you can do this safely. For the vast majority of traders, that's not the case. Trading with high leverage is not something you want to you want to you want to pursue necessarily, especially if you're at the beginning of your trading career. You want to learn the skill, and the skill isn't called give me let's trade with high leverage. That's not a skill. That is a it's akin to um a I'm renting a car, right? Imagine this: you're going on a vacation and you have a choice of renting two cars. One goes 250 kilometers per hour maximum, and the other one goes 150. And the one that's faster has a bigger engine, and that's great, yes. But the majority of people are just safer using the normal car, the one that doesn't it's not a supercar, right? Because it's less dangerous, as simple as that. You get the same place, you pass the accounts with low leverage actually more often than with high leverage, because many people, not everyone knows how to deal with these high leverages, and you can as you would with a supercar easily have accidents. And that's why the premiums for the sports car are much higher for a reason, right? Because they elicit behaviors, same way as high leverage, elicit behavior that are, they carry much more risk. That's not something you want as a trader. You want to be using risk wisely, right? As a driver of a car in a regular, I don't talk about raceways, but in a regular condition, you want to use speed. That's what risk is. You want to use speed wisely, right? When it's safe to do so on highways. You don't want to be doing that on other places. That's the same thing with risk. You want to be using risk wisely and be very conscious and um, uh, not gonna you don't want to be using risk carelessly. But that's not necessary. I mean, not the fact that you have high leverage, you necessarily going to be using it unresponsibly. But the point I'm trying to make, and maybe it doesn't seem like I'm trying to make a point, but the point I'm trying to make here is that we know from the data, our CEO, Saul, has mentioned this many times, that when you look at the traders that are keeping their accounts for longer, that are having uh, more payouts, that are being more profitable, they're not the ones necessarily that have the highest leverage. In fact, when traders request, because that's possible, request to lower their leverage, they become better traders. They become more consistent, more profitable, and better risk managers. So having low leverage is actually a good thing, even though it doesn't seem like it. It's less excited, but that's exactly what most people need in trading. You're not here to, be excited. If I know it still is exciting, but that's not the main thing, and it shouldn't be. It shouldn't have any weight in the importance, in the priorities of choosing an account. Let's take a look at any other. Here we have
Yeah, we have.
Hydekin. How are you doing, my friend? I remember you. I don't think it's too low. I never had issues with this leverage. I have to confess that I have tight stop loss. Sometimes, not sometimes, most of the time, single digit pips stop loss. And leverage, I can go even double my risk, and I'm still within the leverage. So, it tells you, I agree. It's There could be people who will say, well, if I want to put a big position in, that is because it's an evaluation account. A lot of people they risk more than they would with a funded account, and maybe if that multiple is quite high, then maybe leverage isn't enough. But yeah, I think it's for most people it's enough, if not everyone, almost everyone. Someone saying something about Samir. Like your perspective on stop loss. Can you please elaborate on it? Not exactly what part of the
I
stop
think
loss,
he meant,
because
like I was saying, if you're trading with 5 pips stop losses, then
oh,
maybe
okay, yes,
you will not like it. So my point is very simple. Like let's say you have a 3 pip stop loss for an example. So then to risk 0.5%, you have to open a big lot size, and due to a low leverage, you cannot open a big stop loss. So if you are trading that way, maybe you need a larger leverage. Then maybe you can go with a high stake account. But if you are someone like somebody has asked if wide stop loss is applicable, yeah, if you have a wide stop loss, if you have a swing trading approach, if you have intraday trading approach, if your stop losses are of decent size, then I think leverage is not really a big deal for you.
yeah, and it's not coming back. And I think maybe the user was referring to the fact that you had good success with widening your stop loss. That you mentioned when you started, you didn't go to a 1-to-1 before,
Yeah, yeah.
wider stop loss 1 to 1. But once you start going there, you saw great success, 80% win rate, you said at one point.
Yeah.
You mentioned, and you're getting payouts more often, not sure bigger, but you're getting good payouts. So I think they were referring to perhaps that as well. Unbiased trader, yes, and it's not only bootcamp that has this scaling program, but the hyper growth, and it's called hyper growth for a reason. At each scaling, the fivers will double the account. That's for those who are, nowadays the industry is filled with prop firm companies, but you are prop firms. The there was a time when no one had this program, and you know how they called when you are the first one who has anything in on the industry, then you're the pioneer. You're the one who introduced it to the world, and that's what the fivers is. We were the first one having this kind of the hypergrowth where you're doubled on each on
As a
each
trader, I have to share one thing, my experience. I this month December has just started, and across all these accounts I made 4% on fivers, and I have a account with other firm also. But that firm gave me kind of that email, sent it me some email. I'm not going to be going too much in detail, but at the fivers I'm just trading with the peas. I know the payouts are going to come. But if you are, you should be wise in choosing the prop firms. That what my point is. So I made a significant amount of money in the other prop firm also. I'm not going to be naming, or I'm not here to defame or whatever you want to call it. I'm just sharing my experience as a trader. So at the fivers, I know my payout is secure. Now I can just delete the account from my MT5. I don't care. I know the payouts are gonna come in the particular time window that they are offering you. So I don't know, man. You just stick with the reliable one.
You're
That is just
very, very kind. Not giving a lot of information, but the question everyone listening in is asking themselves: did the other firm deny you payment or not? You don't have to answer, Samir. Don't say anything. We'll leave it just that.
Tex Prime. We have a question here. Many questions. Okay, let's just go with every question, step by step. Low leverage seems as a protection. Marina, definitely, you are right. It just, it is very good as a beginner trader or an intermediate trader. If you haven't seen any success in trading, just choose a boot camp. Just stick with it for maybe a year. I think you will be profitable. You don't have uh, like you can't really make open a big lot size. You can't really blow the account in one trade unless you are not using a stop loss, or unless you are just letting the whole position just go out of the way.
This is a good question. Banuka Navaratne is asking, is copying trades from this life break any rules on our funded accounts? Ooh, that's a good one. How many of you are copying our trades here, even though we say do not copy us? We can't control, we can't see, but how many of you have copied a trade or so, or a two, or maybe many more that you see, or on a live stream, maybe even on your funded account? Raise your hands. No, the rule says the following, and I'm not support agent, so this is just information, but you should consult the support on our website. But the rules state, I'm not gonna quote the rules, but it states something in the direction of that you're not supposed to collaborate with other traders. You're not supposed to copy trade from any other person or any other account that is not yours. And those two rules already tell you the answer, right? If I take a trade here and I show it, and you take the same trade, you enter at the same moment, that's a collaboration between you and I, and that's not allowed,
I would love
right?
to give my point on this one, because I was I was doing a podcast with our Indian trader. He asked me one question, which is kind of a similar to your question, which is if I copy the trade, on the from the live stream or from any other one. So we see kind of a trading behavior. Of course, there are multiple guys who might can enter the same position. There can be, let's say, a trader A is placing 100 trades and trader B is placing 100 trades. Maybe one or two trades can be the same, same entry or whatever strategy you both are using. Let's assume you are both are using the same strategy, and you are maybe one or two trades are same. It is okay with us, but if your whole trading behavior is same, we classify this as trading behavior. If your trading behavior is different in phase one and different in phase two and different in live, you are just copying trades from others, and we are our system will flag you. So in short, you cannot copy trade from others. Of course, many people use same strategy, I agree with that. And still with that, I think there might be difference in the entry or whatever, but your trading behavior should not be 100% similar to a trader. You are maybe your mentor or whatever. It just completely means you are just copying the trade from him or her, that particular trader. I hope I answered your question, in a well way.
Yeah, the it's rest assured everyone that the Fiverr has a responsibility, because on the funded accounts, right, they're connected with the pooled accounts. uh, they're taking positions on the real market with your trades, right? That's why it's funded. These trades are going to the pooled account and being executed in the real markets. Rest assured that they have a risk team to make sure that they're not overly exposed on any single strategy or any single uh, uh, position out there, right? So if you have multiple people taking the same trade, they have system that will flag it. And that's their responsibility. They have a responsibility taking care of that pooled account, and they will if they see too much similarity with same characteristics, they will spot all of this happens automatically. So that's not something you want to be doing, and in the long run it's not good for you. I mean, as a trader, you want to have your own system with your own rules, your own entries, your own everything, because in the end, if you're copying, let's say mine or Samir's trade, and it goes into drawdown, who's responsible for that? Me? I'm not responsible. You are. But how can you be responsible for something perhaps you didn't come up with? It's gonna be hard, right? It's gonna be hard to be um, own that trade, even though it went bad. How are you going to own that trade if you didn't come up with it, right? Same thing with when your equity curves goes into drawdown. If it is your system, you validated, you have the data, you know the system, you're gonna have a much better time going through that drawdown period than comparing that you're trading a black box. You're copying someone else. You don't know exactly why and how deep their drawdown is and what their win rate is, because it's their system, not yours. And when it goes to drawdown, you're gonna be pulling the plug very quickly on that way of trading. But that's exactly what you're catching the bad part and not getting the benefit of it. So yeah, but it's a very good question. We have plenty of and we are actually, as we speak silently, we have a beautiful reaction on that quasi that I indicated. I hope nobody took any trace from it. Right, so we're before market reacted on this 50-minute quasi entry order block, and let's see how the EU is doing. EU is doing basically the opposite. It's breaking to the upside. Let's take a look on H4. After it hit the H4 order block, which is at the level of 22.4 or so, it changed direction, which is the effect. See, that's the effect of the order block, the 4 hour order block right there. As it touched it, price pushes back, and presumably to continue later. But who knows? Sometimes that could be the beginning of a price going the other way for a bit more before changing direction again. But the higher time frames, if you look at the 4 hour, where we came from, it was Pedro who very eloquently had 3 rules, right? Understanding where we're coming from, where we're going to, and where we are currently at is crucial to understand where is the market, what is the market likely to be doing next. So what we are seeing here is that we did have a bearish and fresh order block being retested from the H4, but also that we are building bullishness again. Let's take a look at the daily. The daily, we had a bullish order block being created here. We went up and hit the daily from the left, right? And we are coming back perhaps to retest. We already had one immediate retest, but if we were to come back to this daily order block below us, that would be a great a great opportunity to go long again. However, on top of that daily, we see here, let me indicate it with an arrow. On top of the daily we see here, we started creating bullish structures again. One here, let me eliminate that. One here, on top of that, another one. We pushed higher, went to that area of overlap on the daily time frame, and came back, retested the order block once, twice, and the same token we had the push. What did the push create? Look at that. That's an outside bar. You guys remember? I talk about it all the time, right? The range of the first candle is exceeded by the second candle, right? That's the high and the low of the first candle, and both of them were exceeded by the following candle, and the candle closed. That following candle closed outside of the first one, indicating that here in this area, a lot of buyers came in. And yes, the market did reach the next level in the opposite direction at the same time frame, which is a bearish H4 order block before coming back. So it makes a lot of sense. But the fact we have an outside bar here tells us that the market could be pushing back to retest that, and then perhaps go back to retest this high again, and we'll see what price will likely want to do next. We don't know for sure, right? But this is what the buyer side have a lot of indication that what they want to achieve here, or what their intentions are in the market, which is pushing higher. But you don't know how deep this would be, right? So we're talking about this area. This is exactly the area that I would be trading as well. This area on the H1, yes, and actually it is. Let me double check this because I'm confusing myself with these lines that I put in because of the order block. Right, so it is the whole area, which is not great, but it is this area. Right, it's not great, and I say that because you want to get refinement from the lower time frame, and in this one it didn't refine it one bit. It's basically the same order block. Yes, the same order block that created the outside bar on the H4 is also, and I do have a 5-minute quasi right here. If you're wondering where I'm going to be looking for the possible reversal, that's the established downtrend. This is what created the order block, and the market could use a bullish structure without going deeper, right? It could just do this, which makes a lot of sense. But maybe if it's going to go deeper and if it is going to reverse, then I would be looking for these areas to be retested before price, goes the other way. Or perhaps it's the other one. Who knows, right? If it is going to reverse, then I'm going to be looking for these structures to be retested, and then get, if it is still the right time, then I'll get in on that trade. Let's see. There is something on pound. Pound is had a reaction on that 50-minute order block on the entry, the quasi. While we check the questions in the chat. Annie forever. And I think I know Annie. Yes, Annie, how are you doing? People think they are gonna make less profits on boot camp, but they don't. What they don't see is they are gonna lose less too, and the best loser wins. Annie has some wise words, my friend. That is indeed. It's not a sprint. Trading is not a sprint. It's more akin to a marathon, right? It's the one that can keep in the race for longer that's going to win the race. It's not the one that goes, you have the shot at the marathon. The one that shoots off first and goes in a sprint is likely not going to get the finish line. So think about that when you are trading next time. I know these prop firm conditions, they, because they are time, even though we don't have time limits at the fivers nowadays in the industry, time limits isn't a thing anymore. But there was a time it was. And that's exactly what you don't need as a trader. You don't want time pressure. You do not want time pressure. It's not going to help you. It doesn't help anyone. So except the prop firms that have them. So let me take a look here. Let's take a look at Samir. Do you consider trading sessions when you're trading with your strategy?
Yeah, definitely. Trading sessions. At first 2 years, I think I didn't even knew about this thing, to be honest. Like a lot of people was saying trading session. I didn't really, focused too much on this concept that we should trade a particular trading session. I was like, what it is, if there is a setup, we should take it. I was like this in the first 2 years. Then I slowly came to know about trading sessions, how market behaves. So definitely trading session is the important thing. And your pair, whatever pair you are trading, let's say you are trading Euro USD, you should not trade that pair in Asian session, because that is good for London and New York. And at the same time, there is also a volume time, at the London, like first 1 or 2 hours, you are having the good volume. And then there is a slow volume. And then again in New York session, you will see a good volume. Keeping that thing in mind, definitely trading session is a thing. And I follow New York Stock Exchange session if I'm trading indices. So definitely you should pick one session and just give it 6 to 8 months. I think you will come to know about a few things that you didn't knew before. I don't know what things you will come to know, but everyone is having different pattern recognition. Their eye sees different things. I'm sure if you pick this thing, if you follow this approach, you will see, you will notice some, some different things, and it will be beneficial for you.
Good stuff. We have HK11897. Sounds like a phone number. Maybe it is. I like three things in the fivers is no consistency rule, static based drawdown, and swift payment system from bank account or for bank accounts. Great, good stuff. There are many things our traders love about the fivers, our this stream, the company providing this stream. One of the, you said it, Samir. What good does it do if you have good price, even great trading condition, and you have great offers, great discount? I've seen discount go through my mailbox 70%.
I'm not gonna lie, as a
That is,
trader, I'm gonna share one experience. There was a
go
firm
ahead.
running 50% discount, and a lot of influencers, Indian influencers, were promoting them. I don't know what ethics they follow, anyways. I'm not gonna be, defaming anyone. But I was not really, associated with anyone. I was a low key guy, I was trading my prop firms accounts, whatever. So I bought the account, 50% discount, but 100K account, made $12,000 in that, payout rejected. So keeping that thing in mind,
It's
no,
not
that is a
funny. I'm
pretty,
sorry, it's not funny, but I can't hold my laugh.
no, it is funny now, it is now, it is what it is. So keeping that thing in mind, guys, you can either, pay a premium price and get a premium service, or pay a less price and get no service. So it is really up to you.
It's absolutely not funny, although I am laughing right now. It's thing is, when you're on the other side, you are that trader who worked hard, who paid, maybe used, big chunk of their
Yeah, that
life
is not funny.
savings. That's not funny at all. I mean, I'm not laughing at those traders, but I mean the irony of that is what I find a little bit funny. It is exactly those companies. Those companies are, well, let's not spend too much time on it. But you have these platforms who are giving these huge discounts. To me, that's a huge red flag. A huge red flag. That what good does it do that you pay less money, that you have perhaps whatever condition, special condition or offers, like you buy one get another one free, or you whatever they offer. It has no value at all if they're not going to honor the withdrawals. It's
Yeah,
crazy,
exactly.
it's ironic, and that is a bit funny to me. Actually, it's a little bit outrageous as well. So the best, and you mentioned, you don't, you uh, the best, actually the number one thing that as a trader you want to, it's the same thing as with a, maybe that's not a great example, but when you're deciding, right, where you want to put all your life savings in a bank. Let's say you have your life saving and you have to decide which bank you're going to be giving, then that may not be a great example, because central banks, and they will make sure that most banks, or if not all banks, are well funded, and otherwise they wouldn't have a license. But imagine for a little while here that you would have unlicensed banks, right, that offer you 3 times more interest on your savings, but they're unlicensed. It does not make sense. The number one reason you go to a bank is for security. You don't want to go to someone who is not going to give you that security. The same thing with these prop firms. You trade, it is to have certainty in getting the payouts that you have with the fivers. It makes no sense for going to these discount prop firms that you have a low chance of getting your payout, or if you get them after a while, you will see these letters. We see them on social media all the time, that they, after a certain number of payouts, they stop paying because it becomes too much to them. All right, let's continue here. We have unbiased traders. Yes, I don't trust anyone with my money. That's indeed a good thing. You need to be critical. And that's why you need to use, an unbiased trader knows this. That's why he sticks with the fivers, because you want to be sure that those who are, if you invest time, effort, you want to be sure of getting your money, right, your payout. Unbiased has a question here, and this goes a little bit technical and perhaps even beyond our expertise. Unbiased says, I have different strategies as per season. That is summer, autumn, winter, etc. Will I get flagged? Unbiased trader, I don't know. I'll be completely honest. I don't have knowledge of the exact, algorithm, and how and which and when whatever gets flagged. I know that they're out there. They need to. That's their responsibility. You want them to be doing that, because that's what keeps them in business, to filter out, overexposure or any other thing that could be a risk. Whenever our risk team, this I know, right? I may not know all the intricacies, but this I know. Whenever our risk team has a question, they want to they see something that is different than what they expect or what they would like to see, they will contact you and they will give you an opportunity. They will set up an interview to understand if there is any question why that is, and as long as you can explain it just like you did, a logical explanation that you have different strategies that perform better in different seasons, it's perfectly fine because it makes sense. That's it, right? We want the five as a risk team would want to understand so they can they know that there is a plan, there is a reason of these variabilities, and it's not just random, and you know what you're doing. As soon as you can explain that, they are very, very reasonable, and they will understand that this is part of the plan and it's for a good thing. So don't be afraid that the way that you're doing is making things different. We have, without noticing it, reached and exceeded our time here with you guys. That is always a amazement how quick that is reached. So, any last words, Samir, before we go?
As we was on the topic of discounts and all, my closing words will be, if you are a beginner and if you want to choose a prop firm, always go with the reliable one. Like the Fivers, we are here since 2016, built for you guys only. And of course, if you are profitable, then we also benefit from you. And we have zero payout denials, guys, so that's amazing. So always choose the reliable one. You stay stress free. Your payouts are gonna be coming in your bank, and whatever you make, it is yours. Okay. So keeping that thing in mind, and risk management, guys, every day, every stream, I say one trade a day can change your life, man, literally. So that is it from my side. And take care, guys. See you tomorrow, same time I will be. If you enjoyed the time, just give us a like, and don't forget to subscribe our channel. And yeah, bye bye, take care, guys.
Perfect. Thank you, Samir, and everyone. You make this happening, make this possible, I should say, this stream. It is your support that's why we're here, and that's why we're able to be streaming and gather these traders like myself, like Samir, and many others to come and show, display their strategies as much as they can and their ideas so they can help you become better. Don't forget, we have a Discord session in about 40 minutes. You're all welcome. If you don't know what I'm talking about, get an account with the Fivers inside the hub. That's where you find the Discord community. It's free. It's completely free, but it is inside your hub account. And I hope to see you in there soon, if not already today. Don't forget to keep on supporting our channel. If there is one thing you can do to show your appreciation for our efforts in bringing you knowledge, experience, and hopefully give you that opportunity to become better, it is by hitting the like button and subscribe to the channel. Very easy, costs you half a second, but we will be very, very grateful for your support. Thank you very much. See you guys tomorrow. Bye bye.